Hello students, I am Prakash, Chartered Accountant and acting as academic advisor in Masterminds from the past 23 years. So at CMA final level, corporate and other laws has become one of the most challenging papers. Earlier, so it was sufficient just to prepare important questions, but now examiner is testing the student from nook and corners. So that means students are being expected to prepare everything which is there in the syllabus. That's why in this crucial moment, that is in the last few days of your upcoming CMA final examinations, it's really good if you are able to watch a marathon video with all the important provisions being covered that are important from examination point of view. So considering that requirement, we have already recorded one marathon on CMA Final Corporate and other laws, and we covered all the important provisions in this particular subject in just a matter of 11 hours. So we uploaded a similar video in November 2024 and more than 54,000 views we are able to obtain. So now we made a similar video applicable to December 2025 and further attempts. If you are watching the same video, further attempts also, for example, June 2026, then I request you to update yourself with the latest amendments, if any. And just like any other marathon video, this cannot be a substitution to your preparation. Even if someone says that it is highly enough to just to watch this marathon and go to the exam, don't believe in such kind of words. So such kind of things will never happen in professional courses. So obviously you are supposed to prepare thoroughly, and this can only help as a complementary to your preparation. That means to thoroughly revise all the important provisions in the entire subject. This can never be a substitution to your hard work. Now this is recorded by our senior faculty, Sainath sir, having 8 years of teaching experience, my dear students. Now coming to some more details about this marathon. So we recorded this video in 100% English. That means students of other states can also comfortably watch this video. So you can find the information related to chapter wise timestamps in the description of this video. So some students, even after we are providing that information in the description, they're still putting message in the comment section. I request you first check the description section. If it is not available, yes, then you can put a comment in the comment section. So generally, all other institutions will be extracting the marathon from the existing videos instead of recording them afresh. But here we recorded this marathon afresh, that too not in recording theaters. So in face-to-face classes, so more than 200 students have attended in person in the face-to-face session, and there we recorded this marathon. Now, if you like this marathon session, then I request you to press the like button so that YouTube will recommend this video to still more number of students. So if you got benefited by watching this video, then please do share this video with your friends so that they'll also get benefited. After watching this video, whatever your feedback is there, so please mention the same in the comment section. If it is required to improve further, yes, we are open to make necessary improvements in the upcoming marathons. And whatever your positive comments are there, that will definitely boost the morale of the entire team who are really working hard to make this kind of useful videos. Now, whatever the material the faculty has shown while teaching this marathon, so you can download that material free of cost. For that purpose, in an Android mobile or tab, so first install our app, that is Masterminds Online Classes, which is available in the Google Play Store. So you need to give your email ID and mobile number and sign up. And after that, in the top left corner, you will find the menu, which is represented with 3 horizontal lines. So click on it. So in that menu, you will find an option called free material. Click on it. After that, so you will find documents tab. Please open that. In that document tab, so please open the relevant folder. For example, CMA Final December 25 attempt. Please open that relevant folder. In that folder, you will find the relevant file, that is CMA Final Law. So using Acrobat Reader or some other PDF reader apps, you can directly open that file. Once the file is open, you can share, you can download, and you can even take printout of the same. So for best recorded videos of CA and CMA courses, please do visit our website, so mastermindsindia.com. On the top right corner, you will find by video courses section. So you'll find a button there. Please click on the same. And before purchasing any video course, please thoroughly read the description of that video, because few courses are available only in English plus Telugu, that is mixed language, and most of the courses are available in 100% English. Before making the payment, so please check the description once, and once you purchase a video course, after that our team member will call you and guide you in all aspects. If you like this video and if you want, so whenever we upload this kind of useful video, if you want a notification to be received in your mobile, please do subscribe to our YouTube channel. And now you can start enjoying this marathon, my dear students. I hope that you seriously prepare for your upcoming examinations. All the best, my dear students.
In CMA Final, what are the chapters that are available for us? First one, Companies Act 2013. Next one, IBC. Next one, Corporate Governance. Next one, SEBI Regulations. So these four are very, very important, because Companies Act coverage is 40%, IBC coverage 10%, Corporate Governance 10%, and SEBI another 10%. So total 70% will be contributed from only these four chapters. And what about remaining chapters? In remaining chapters, some are important chapters. Say for example, Competition Act. It is important. MSME. This is also important. Cyber laws. And finally, PMLA. So you will get around 20% of marks from these four chapters. That means the combined weightage is 90%. Now in this marathon, we are going to cover Companies Act 2013 plus IBC plus SEBI. And what about corporate governance? So you need to prepare on your own. So remaining three chapters I will cover. And I will cover remaining chapters also, like Competition Act, MSME, and Cyber laws, PMLA. And there are few other chapters like banking laws, insurance laws, FEMA. So you can take all these three chapters as choice. So no need to prepare these three chapters. So just prepare these chapters, it will be sufficient. Then how many questions we are required to prepare? So in this marathon, I am going to cover all important questions. So just prepare those questions, it will be sufficient. So no need to prepare 100% questions. So just follow what is given in marathon material. It is highly enough. And apart from this, you are required to prepare even MCQs also. So MCQs that are covered in study material, MCQs that are covered in booklet. So MCQs that are covered in extra material, which is given by institute. In all these three sources, we need to prepare all the MCQs. So if time permits, I will cover even MCQs also. So that out of 15 MCQs, you will get around 10 MCQs from these sources. Now, let's start with Companies Act 2013, that too with Board of Directors chapter. So our first target is to complete Board of Directors and KMP and board meetings and procedures. So first one, question number 1. So regarding number of directors, how many directors are required in a company? We need to classify the companies into three categories: OPC, next one private company, next one public company. In case of OPC, how many directors are required? 1 to 15. Private company 2 to 15. Public company 3 to 15. It is not 7. It is in case of number of members. So number of directors, OPC 1 to 15, private company 2 to 15, public company 3 to 15. Is it possible to have less number of directors than minimum limits? No. Is it possible to have more number of directors than maximum limit? Yes. But what is required? Yes, sir. Generally for appointment of director, OR is sufficient. But if you want to appoint more than 15 number of directors, then for each director what is required? SR is required. But this SR is not required for government company, secretariat company. That means government company, secretariat company can still appoint directors by passing OR. Next one, women director. So which companies are required to have women director? For this purpose, we need to classify the companies into three categories. First one, listed public company. Second one, unlisted public company. Third one, private company. In case of listed public company, all companies shall have at least one woman director. It is mandatory for every listed company. What about unlisted public company? Depends upon criteria. If criteria is satisfied, having at least one woman director is mandatory, otherwise not mandatory. What about private company? Not mandatory. That is not applicable. So having woman director is applicable only in case of public companies. For listed companies, all companies. For unlisted public companies, companies which satisfy criteria. Then what is the criteria? For this purpose, we need to take paid up share capital, turnover. Then what is the limit here? Paid up share capital minimum 100 crores, turnover minimum 300 crores. Which condition is required to be satisfied? Is it both the conditions or single condition? Single condition. Even if one condition is satisfied, that company need to have one director. Then what about newly incorporated companies? So if you just incorporate your company, you are required to have at least one woman director within 6 months of incorporation. That means for existing companies, it is immediate requirement. For new companies, 6 months time limit will be available. Then what about casual vacancy? So for example, there are 10 directors, 9 male director, 1 woman director. Now woman director got expired. Now there is a casual vacancy. Now this vacancy need to be filled. Then what is the time limit for it? 3 months from the date of vacancy or next board meeting, whichever is later. So within that time, the board of directors need to fill the casual vacancy. And one more important point, in which category of director the woman director need to act? She can act like independent director. She can act like nominee director. She can act like executive director, managing director, alternate director, additional director. That means in simple words, she can act in any director position. So having woman director is mandatory. The director may be any director. Next one. Then what about resident director? So when a director is called as resident director, so during the financial year, it is not previous financial year, this is every financial year. So during every financial year, if a person stays for how many days? More than or equal to 182 days in India, then that person is called as resident. Now, in case of every company means whether it is public or private, whether it is listed or unlisted. So whatever it may be, every company is required to have at least one resident director out of all directors. That means out of all directors, at least one person need to stay in India for at least 182 days for every year. Then what about newly incorporated company? Because in case of newly incorporated company, the first financial year is not 12 months. It may be more than 12 months or it may be less than 12 months also. Then how to take 182 days now? Proportionately. Say for example, so for first financial year, there are only 10 months. So for 12 months, you are taking how many days? 182 days. Now for 10 months, you are required to take proportionately. What happens if it is having 14 months? First financial year is having 14 months. Then we need to take 182 days proportionately. Because first financial year commences on, not on April 1st. It will commence on date of incorporation of the company. And what about the end date? If the company is incorporated during first 9 months, then 31st March of the same financial year. Otherwise, 31st March of the next financial year. So that's why there is a possibility of having more than 12 months as well as less than 12 months. So when it is exactly 12 months, take 182. When it is more than 12 months or less than 12 months, take proportionately. Next one. Executive directors and non-executive directors. What is the difference? They are just like active partner, sleeping partner. That means executive directors will participate in day-to-day affairs of the company. What about non-executive directors? They will not participate in day-to-day affairs. Then what they will do? They will participate only in decision making. Okay. Executive directors, they are in employment. What about non-executive? They are not in employment. Next one. Executive directors work on full-time employment basis. But this is not like this. Next one. So executive directors will have in-depth knowledge about the affairs of the company. Reason? Yes, they will participate in day-to-day affairs. But what about non-executive directors? They will have vast experience, independent perspective and knowledge. That means those directors will be selected based on their knowledge and skills. Next one. And what about the role of executive director? They will assist in policy formulation as well as they will take part in day-to-day affairs of the company. Then what about non-executive directors? They are just available to give unbiased opinion while taking decisions. That's it. Then what about examples? Executive directors, MD, executive director, whole-time director, executive director. Then what about non-executive director? Independent director. He will participate in decision making but not in day-to-day affairs. Next one, differentiate between CMD and MD. First of all, C means chairman or chairperson. MD means managing director. So first of all, who is chairman? For every board of directors team, there is a head called as chairman. So chairman is the head of board of directors. That means whenever board meeting is conducted, who will conduct board meeting? Chairman. So who will take care about minutes book of board meeting? Chairman only. So chairman is nothing but head of the board of directors. Then what about MD? MD is the managing director. That means he is a director and he is having substantial control over company. So this person is having ultimate power over company. So that's why this person is called as managing director. Then what is the level of managing director? So first chairman, second board of directors, third MD. That means MD will follow the instructions given by board of directors. Board of directors will follow the instructions given by chairman. So hierarchy level is first one chairman, second one board of directors, third one MD. Now what happens if a same person act like both chairman as well as MD? Then he will be called as CMD. Chairman come managing director. Next one, independent directors. How many independent directors are required? So here also we need to classify the companies into three categories: listed public companies, unlisted public companies, private companies. In case of listed public companies, all companies are required to have independent directors. But how many independent directors? Out of total directors, we need to take 1/3 directors. Then what about fractions? We need to make rounding off. What is the rounding off rule? It is next number. That means if it is 1.2, we need to take 2. If it is 1.5, 2. If it is 1.8, then also 2. So whatever the fraction it may be, we need to round it off to next number. Then what about unlisted public company? Depends upon criteria. If criteria is satisfied, at least 2 independent directors are required. If criteria is not satisfied, having independent directors is not required. Then what about private company? Not applicable. That means having independent director concept is applicable only for listed public companies, unlisted public companies which are satisfying the criteria. So in case of listed public company, all companies need to have at least 1/3 of total directors as independent and every fraction need to be rounded off to next number. What about unlisted public company? If it satisfies the criteria, at least 2 independent directors are required. Then what is the criteria? We need to take paid up share capital, turnover, loans plus debentures plus deposits. In case of paid up share capital, it is more than or equal to 10 crores. In case of turnover, it is more than or equal to 100 crores. In case of loans plus debentures plus deposits, it is more than 50 crores, not more than or equal to. It is more than 50 crores. But in case of remaining two limits, it is more than or equal to. And remember these limits. These limits are same for audit committee requirement also. So audit committee, is it required or not required? If any of these conditions is satisfied, required, otherwise not required. So for audit committee as well as for independent directors, the limits are same. Next one. What about casual vacancy of independent director? Who will fill it? Board of directors only. Then what is the time limit? Just like women director, that is 3 months from the date of vacancy or next board meeting, whichever is later. Next one. Difference between non-executive director, independent director. Actually, independent director is an example for non-executive director. But still there is some difference between non-executive director and independent director. Then what is the difference? So role. So both non-executive directors and independent directors will not participate in day-to-day affairs. Independence. In case of non-executive director, he may be independent, may not be independent. That means all non-executive directors need not be independent. But what about independent directors? Independence is mandatory. So can we say like this? All non-executive directors are not independent directors? Yes. Because some non-executive director are not independent, then how they will be called as independent director? But all independent directors are non-executive directors only. Next one, appointment of directors. So first of all, appointment case is classified into two categories: appointment of first director, appointment of subsequent director. How first director will be appointed? So it depends upon AOA. If a person is named as first director in AOA, that person will become first director after incorporation till first stage. Now what happens when AOA is silent? So when AOA is silent, all subscribers, actually in subscribers, you can have both individuals as well as body corporates. So all subscribers, out of those subscribers, we need to take individual subscribers, they will become deemed first directors. That means if you mention the name of first director in articles of association, those people will continue as first directors till first AGM. But what happens when nothing is given in AOA about first directors? Then all subscribers who are individuals are deemed to be first directors. Now in first AGM, we are required to appoint directors. So those directors are called as subsequent directors. Then which resolution is required in order to appoint subsequent directors? OR. So what is required? OR is required. But when number of directors are already 15, now the company want to appoint 16th director. Now for 16th director, special resolution is required. 17th director, special resolution is required. 18th director, special resolution is required. So from this limit onwards, every director appointment needs special resolution. But this condition is not applicable for government companies and Section 8 companies. And one more important point, independent director. What about the term of independent director? So he will have two terms. Each term will have 5 years. That means first he will be appointed for 5 years. Thereafter he will be reappointed for another 5 years. And thereafter cooling period is applicable. That means maximum he can be there in company for how many years? 10 years. Now in order to appoint independent director for first 5 years, OR is required, just like remaining directors. But in order to reappoint the same person as independent director for another 5 years, SR is required. So that means in all situations, OR is sufficient. But when SR is required, in order to appoint more than 15 directors, SR is required. In order to reappoint the independent director for another 5 years, then also SR is required. In remaining cases, OR is sufficient. And one more point, whenever you are going to appoint director, you need to collect some information from that concerned director. First one, we need to take DIN, Director Identification Number. Second one, we need to take consent letter. And third one, we need to take particulars of interest in other business entities. So what is meant by particulars of interest in other business entities? Now, I want to appoint a person as director, but that person is already director in another company. He need to disclose the same. That person is a shareholder in another company. We need to disclose the same. That person is having a partnership interest in a partnership firm. So disclosure is required. So all these particulars need to be disclosed by the concerned director to the company. So these three particulars are required in order to appoint any person as director. Whether it is first director case or subsequent director case, collecting this information is mandatory. Next one, rotation concept. So actually, what is the term of first director? Term of first director till first stage only. What about the term of subsequent director? Permanent. Subsequent directors are permanent. So rotation concept is generally not applicable. But if that company is a public company, then rotation concept is applicable. So listed or unlisted, it doesn't matter. All public companies need to follow rotation concept. That means in case of private company, it is not required. So all the directors will stay forever in case of private company. But in case of public company, rotation concept is applicable. Then what is the rotation concept? First, we need to take total directors. Out of total directors, we need to exclude nominee directors. Who are nominee directors? If any bank provide any loan to the company, in order to represent that bank in company, they will nominate a person to act like director. The board of directors will appoint that person as director, and this director will stay in the company till that loan is repaid. And what is the role of this director? He is a nominee for the bank. That's why he will be called as nominee director. So nominee director, for nominee director, rotation concept is not applicable. So that's why while taking total directors, we need to exclude nominee directors. We need to take the net number of directors. So out of these directors, how many directors need to be rotational directors? So more than or equal to 2/3 of total directors minus nominee directors. So out of those net number of directors, at least 2/3 of the people need to be rotational directors. That means they will retire at AGM. That is the meaning of rotational directors. Then what about non-rotational directors? It is not 1/3 remaining, because it is not exactly equal to 2/3. If it is exactly equal to 2/3, we can take it as 1/3. But it is more than or equal to 2/3. That means it may be 3/3 also. That is 100% also. When it is 100%, then non-rotational directors will become 0. So that's why we can't take 1/3. We can say like this, rest of the directors. So rest of the directors need to be non-rotational. So what is the meaning of non-rotational director? He is the director who will stay in the company permanently. What about rotational director? He will retire at AGM. So now take total directors, remove nominee directors. Out of those net directors, at least 2/3 directors need to be rotational and remaining must be non-rotational. Now, in case of rotational directors, we have 2/3. What happens if there is any fraction? What is the rounding off rule? Next number. So here also the rounding off rule is next number. Now, out of this 2/3, that means out of rotational directors, how many directors need to retire at AGM? 1/3 directors need to retire at AGM. And what about balance director? They will continue, they will retire at next AGM. Now, what about the rounding off rule in case of 1/3? So here the rounding off rule is nearest number. That means if it is 1.3, take 1. If it is 1.5, 2. If it is 1.7, 2. Next one. Now, 1/3 directors need to retire at AGM. Now, company is having 3 options. First one, they can appoint new directors in place of retiring directors. Second one, they can reappoint retiring directors. Third one, they can decide not to fill the vacancy. So 3 options are available to shareholders. What happens if they appoint new directors? So the retiring directors will go out of the company and new directors will come into their place. What happens if they reappoint retiring directors? The same people will continue in the company. What happens if they decide not to fill the vacancy? Now it will remain as it is. Retiring directors will go out of the company. No new person will come into the company. So for example, if net number of directors is 9, how many directors need to be rotational? 6. 2/3, 6. How many people will be non-rotational? 3. Out of 6, how many people need to retire at AGM? So 6 into 1/3 means 2. Now, if those 2 people are reappointed once again, number of directors will become 9 only. If 2 directors are removed and new persons are appointed, then also number of directors are 9 only. What happens if they decided not to fill the vacancy? Then the number will become 7. So is it mandatory for the company to fill the casual vacancy now? No, because minimum number of directors required is 1 in case of OPC, 2 in case of private company, 3 in case of public company. It is still satisfying. So that's why it is not required to fill the casual vacancy. It is not mandatory. It is up to the company. Now the question is, if shareholders fail to decide the matter in the meeting, now what will happen? Now there is a pending matter. Because of this pending matter, the meeting will be adjourned. Adjourned to next week, same day, same time, same place. In adjourned meeting also, the shareholders will have 3 options. Either to appoint new directors, or to reappoint retiring directors, or not to fill the vacancy. If it is decided, just follow it. What happens if shareholders fail to decide even in adjourned meeting also? Then the matter is closed. So the retiring directors are deemed to be reappointed. But what happens if anyone is suffering with disqualification? So deemed reappointment is not applicable. What happens if any director want to exit out of the company? That means they don't want to give consent letter. Yes, deemed reappointment concept is not applicable. So this is all about rotation concept. And this rotation concept is applicable only for public companies. Next one. Difference between rotational directors and non-rotational directors. So what about rotational directors? So their tenure is subject to periodic retirement. Periodic retirement means at every AGM, out of total rotational directors, at least 1/3 rotational directors need to retire. And they are eligible for reappointment also. But what about non-rotational directors? It is not subject to any periodic retirement because they are called as permanent directors. They will stay in company permanently. Then what about retirement? At every AGM, out of all rotational directors, at least 1/3 need to retire. And those people are eligible for reappointment also. But who will decide whether to reappoint those people or not? Shareholders. Next one. What about non-rotational directors? No need to retire at any AGM. They are permanent directors. They will stay in company permanently. And what the purpose of having rotational directors? Having new persons into the board of directors team, so that a new knowledge, new experience will be added to the board of directors team. What about non-rotational directors? Stability will be added to the board of directors team. So some people must be there in permanent nature. That means they will provide stability. And some people need to be rotated. They will provide new perspective. So combination of new perspective plus stability will give the success of the company. Next one. So actually, who need to appoint director? If it is first director case, in the absence of AOA, all subscribers who are individuals will automatically become first directors. And what about subsequent directors? They will be appointed by shareholders by passing ordinary resolution in majority cases, but in few cases, they will pass special resolution to appoint directors. Now, directors will be appointed by board of directors in 4 situations. In 4 situations, directors will be appointed by board of directors. Then what are those 4 situations? First one, to appoint additional director. Second one, to appoint alternate director. Third one, to appoint nominee director. And last one, to fill casual vacancy. So first one, who is additional director? He is a temporary director appointed by board of directors. If board of directors feels the requirement of having extra 1 director or 2 directors, so those people will have a power to appoint those directors. And what about the term of this additional director? He will stay in company till next AGM only. So that's why he is called as temporary director. So board of directors are having a power to appoint temporary directors. For appointing temporary director, shareholders' permission is not required. Then what about alternate director? Say for example, there are 4 directors. Out of 4 directors, 3 directors are available in India. 1 director is not available in India. He went to foreign country and his period of stay in foreign country more than or equal to 3 months. Now what will happen? So because of lack of that person, the board of directors are unable to take any decision. Now what to do? So instead of this person, till his return, some other person can replace his position, and that other person is called as alternate director. But who will appoint alternate director? Not this person who went outside India for at least 3 months. Then who will appoint alternate director? Board of directors will appoint alternate director. Then what about the term of alternate director? So return of original director or tenure of original director, whichever is earlier. Whichever is earlier. So till that time alternate director is available. Next one. What about nominee director? If any bank or financial institution gave any loan to the company, they will ask company to appoint their person as director. If CG or SZ made any investment, like 60% of investment, 70% of investment, then they will ask the company to have a director from government side. Now, in both these cases, one is in case of loan situation, other one is in case of investment situation. So this concerned party will propose a candidate to be appointed as director. Now this person will be appointed as director by board of directors, and this person will be called as nominee director. How long he will stay in the company? It depends upon loan agreement. It depends upon investment agreement. Next one. What about filling of casual vacancy? Whenever a director expires or disqualified or resigned or removed before the expiry of his term, then it is called as casual vacancy. Then who need to fill the casual vacancy? Board of directors only. But it need to be ratified by shareholders in next general meeting. Then what about the tenure of that director who was replaced by new director? So in this case, the tenure will be balanced tenure. So for example, a director was appointed for 5 years. After 2 years, he was expired. Now, board of directors appointed some other person in his place. Then what about the tenure of that person? 3 years. That is balanced tenure of original director. But in this case, what is required? Shareholders ratification is required. But in first case, not required. In second case, not required. In third case, not required. In fourth case, appointment will be made by board of directors only. But it need to be ratified by shareholders in subsequent meeting. So now say, who can appoint directors? First directors, subscribers who are individuals will become first directors. Subsequent directors, shareholders by passing OR or SR. Then what about additional director, alternate director, nominee director and filling up of casual vacancy? Board of directors. Tenure of additional director till next AGM. Next, tenure of alternate director, return of original director or tenure of original director, whichever is earlier. Nominee director depends upon the agreement. Filling up of casual vacancy case, balance tenure of original director. Now, who cannot be appointed as additional director? Who cannot be appointed as additional director? The person who was rejected by shareholders to act like director. Say for example, my name is proposed as director in AGM, but shareholders rejected me. So can board of directors appoint me as additional director? No. The person who was rejected by shareholders to act like director, the same person cannot be appointed as additional director. Then who cannot be appointed as alternate director? So, if that person is existing director in the company, then you can't appoint alternate director. Very simple logic. So now they require 4 persons. If this one of the director is acting like alternate director also, then number of directors will be 3 only. Then what is the value addition here? There is no value addition. So that's why the existing director cannot act like alternate director. So if there is any alternate director for existing director, even that person is also not eligible to become alternate director. That means if a person want to become alternate director for 2 directors, it is not possible. So next one. So additional director completed, alternate director completed, nominee director completed, casual vacancy is also completed. Next one, small shareholders director. So first of all, who is a small shareholder? He is a shareholder having shares with a face value not exceeding 20,000. That is less than or equal to 20,000. So that shareholder will be called as small shareholder. We need to take face value, not market value. Market value may be 1 lakh or 2 lakhs also. But we need to take only face value. So if the shareholder is having shares with a face value not exceeding 20,000, that shareholder will be called as small shareholder. Now, in order to represent all small shareholders, there must be a director in the company. And that director will become small shareholders director. So, this requirement is applicable only for listed public companies, but not for unlisted public companies and not for private companies. Why? Because both are closely held companies. That means in both cases, the shares are held by close people only, like director, relatives, friends, like that. But in case of listed public company, it is not like that. So many persons will involve in it. Public is involved in it. So that is the reason why appointing small shareholder director concept is applicable to listed public companies, but not to remaining 2 categories of companies, because both are closely held companies. Next one. Now, listed public company is having 2 options to appoint small shareholder director. One is on suo motu basis. So no need to make any request to the company. The company itself will appoint small shareholder director. Second one is, so upon request, Then how many people need to make request here? 1/10 of total small shareholders or 1000 small shareholders, whichever is lower. If these many number of people makes any request to the company to appoint small shareholder director, then company will appoint small shareholder director. So it can be done on suo motu basis or upon request. In case of request, these many number of people need to make request. Now the point is, what about the term of small shareholder director? He will be there in the company for 3 years. After 3 years, reappointment is not possible. That means the maximum tenure is 3 years. Next one. Now there is a person, he want to become small shareholder director in A Limited as well as small shareholder director in B Limited also. Is it possible or not possible? Possible. And he want to become small shareholder director in C Limited at a time. At a time, he want to become small shareholder director in A Limited, B Limited, C Limited. Is it possible or not possible? Not possible. But so if he want to become small shareholder director, so he can simultaneously act like small shareholder director in maximum 2 companies. So here 2 is already completed. So acting in C Limited as small shareholder director is not permitted. And one more requirement, A Limited, B Limited must not be competitors. What happens if both are involved in competing business? If both are competitors, then this person cannot act like small shareholder director in both the companies. So now say, which companies are required to appoint small shareholder director? Listed public company. Options available, suo motu basis without any request, upon request. How many people need to make request? 1/10 of total small shareholders or 1000 small shareholders, whichever is lower. And term of small shareholder director, 3 years. And at a time, in how many companies he can act like small shareholder director? Maximum 2, and both the companies must not be competitors. Then how to make request? This request will be made just like a special notice case. Special notice means, so whenever company want to conduct general meeting, so it will give 21 days prior notice to all its shareholders. Now if shareholder want to propose their own agenda, like proposing a person as small shareholder director, if they want to propose their own agenda, they need to propose to the company at least 14 days before the meeting. Now what company is required to do with that proposal? They need to forward this proposal to remaining shareholders at least 7 days before the meeting. That means at least 21 days before the meeting, company will communicate its own agenda. So at least 14 days before the meeting, shareholders will communicate their agenda to the company. So at least 7 days before the meeting, company need to forward this shareholders agenda to remaining shareholders. Now in the general meeting, they will discuss about the agenda that was proposed by company as well as shareholders. Next one, disqualifications. So we have a section called as section 164. So section 164 is having 2 subsections. Section 164 subsection 1. Next one, section 164 subsection 2. So what is the difference between these 2 subsections? So if you are covered in first case, you will be disqualified. Only you will be disqualified, not others. But if you are covered in second situation, you along with all other directors, so all the directors will be disqualified at once. That means in first case, only the concerned director will be disqualified. In second case, all the directors in the company will be disqualified. Okay, let's see the first one. So when a person is declared as unsound mind, he is disqualified. But who need to declare that person as unsound mind? Court. So when a person applied for insolvency and that application is pending at the court, even though the application is pending, that person is disqualified. Now what happens if that application is approved? He will become insolvent. His disqualification will continue. What happens if that application is rejected by the court? Now he is not disqualified. Next one. Next one, it is about imprisonment. So in case of imprisonment, we need to check the period of imprisonment. So if it is less than 6 months or more than or equal to 6 months but less than 7 years, and third one is more than or equal to 7 years. So first one, if it is less than 6 months imprisonment, what about disqualification? Imprisonment period, that's it. No extra disqualification. So if the imprisonment period is minimum 6 months and it is less than 7 years, then the disqualification will be for imprisonment period plus 5 years. So even after release from the jail, you are required to wait for 5 years to become a director. Next one, if the imprisonment period is 7 years or more than 7 years, then so you are permanently disqualified. So whether that offense may be either civil offense or criminal offense, whatever it may be, we need to check only period of imprisonment. So if it is less than 6 months, only imprisonment period. If it is more than or equal to 6 months but less than 7 years, imprisonment period plus 5 years. If it is more than or equal to 7 years, permanent. So even in case of insolvency also, so if a person made insolvency petition, disqualified. The moment he made insolvency petition, he will be disqualified. Now, if this insolvency petition is accepted by the court, disqualification will continue. So, if it is rejected by the court, now disqualification will be removed. What happens if insolvency petition is accepted by the court? So, he become insolvent. So, disqualification is continuing. After that, he will again become solvent. After becoming solvent, there will be no disqualification. That means when disqualification will be there? When you file IP, so till the completion of that case, you are disqualified. So if the case is rejected, you are qualified. If the case is accepted, you are disqualified. And your disqualification will continue till you become solvent again. Next one. Now what happens if any court or tribunal passes an order against director declaring that person as disqualified person? Then he will be disqualified. Then for how many years? It depends upon court order. If court disqualifies that person for 1 year, 1 year disqualification. If court disqualifies that person for 5 years, 5 years disqualification. Next one. Point F. So now there is a director who is shareholder also. So he is a director come shareholder and he is holding partly paid shares. So for example, 10 rupees is the face value and paid value is 8 rupees. Now company asked to pay balance 2 rupees also. But this director failed to pay the money. So company will wait for 6 months. If the amount is outstanding for more than 6 months, now what will happen? So because of this non-payment, this director will be disqualified. Again, when he will be qualified to become director? When that amount is paid. That means if the amount is outstanding for more than 6 months, he will be disqualified till repayment of the amount. Next one. So company will make some transactions with related parties. So whenever company want to make transaction with related party, it is required to take the approval of audit committee, like omnibus approval. And if it is a big transaction, it is required to take the permission of shareholders also. Along with the audit committee, shareholders approval is also required. What happens if there is any fraud in that related party transaction? In that fraud, what happens if one of the directors is involved? Then that director will be disqualified for 5 years. That means if any director is convicted under related party transaction, that director will be disqualified for 5 years. Next one. What happens if a person is not having DIN? So till DIN was allotted to that person, he is disqualified. And what about limit on directorships? So if a person want to become director, he can become director in maximum 20 companies. And there is a sublimit of maximum 10 public companies. That means 20 private companies. Is it possible or not possible? Possible. 20 public companies. Is it possible or not possible? Not possible. Because he can act like director in maximum 10 public companies. Then what about 10 private companies plus 10 public companies? It is possible. So this is the limit on directorship on a person. What happens if this person want to become director in 21st company? In 21st company, he will be disqualified. What happens if he want to become director in 11th public company? He will be disqualified. Only in new company, not in existing companies. In existing companies, he can continue. Next one. So by this we completed the points which are related to concerned director. So if any point got satisfied, then that concerned director will be disqualified. Sir, what happens if that person is about to be appointed as director? Don't appoint that person. What happens if that person is already a director? He need to vacate the office. It will become casual vacancy. And who will fill the casual vacancy? Board of directors. Next one. In case of point D, in case of point D, in case of point E, and in case of point G. In these three cases, there is a chance to go for appeal. So there is a chance to go for appeal. Say for example, on 1/1/2025. So because of this, any of these three reasons, the director is declared as disqualified. But he will not be disqualified immediately. Then when he will be disqualified? So there is a chance to go for first appeal. And what is the time limit to go for first appeal? How many days time limit is given here? 30 days. So within 30 days, he need to go to first appeal. So if he fail to go to first appeal within 30 days, then from 31st day onwards, he will be disqualified. That means 30 days time period is given to that person to go for appeal. So if he preferred for not to go to appeal, from 31st day onwards, that person is disqualified. Now he went to appeal within 30 days. Now we need to wait till the conclusion of that case. What happens in that case also he lose? Then second appeal chance will be provided. And what is the time period for second appeal? It is 7 days. So he will not be disqualified immediately. So he will have a chance of 7 days to go for second appeal. If he preferred not to go for second appeal, then from 8th day onwards, he will be disqualified. What happens if he lose it in second appeal also? So immediately he will be disqualified. That means there is no chance to go for third appeal. So when the case is declared on 1/1/2025, so he will be disqualified only after the completion of 30 days. But if he go to any first appeal, then he need to wait till the conclusion of the first appeal. If he lose at first appeal, 7 days time will be given. So if he went to appeal in second case also, then we need to wait for the conclusion of the second appeal. So in second appeal also, if he lose at the case, then immediately he will be disqualified. So these time limits are applicable only in three cases. That is point D, imprisonment case; point E, court or tribunal disqualification case; point G, related party transaction case. Next one, second type of disqualifications. So if there is any of these issues, all the directors in the company will be disqualified at once. Not only single director, all the directors of the company will be disqualified. What are those cases? Company failed to file financials for 5 continuous years. Company failed to file annual returns for not 5, 3 continuous years. Then all the directors in the company will be disqualified. Say for example, this is 2025-26 financial year. So last 3 years means 2024-25, 2023-24, 2022-23. Now company filed financials for all the 3 years, but they failed to file annual returns. What about disqualification? All will be disqualified. Next one, company failed to file financials, but they filed annual return. So all the directors got disqualified. Company failed to file both the returns. Disqualified. That means if both are not filed, if only financials are not filed, if only annual returns are not filed for 3 consecutive financial years, then in the current year, all the directors will be disqualified. But some directors are not disqualified. Who are those directors? New directors whose tenure is less than or equal to 6 months. So those directors are not disqualified here. Next one. Now there are some amounts like deposits, debentures, preference share capital. So for deposits, the company is required to pay interest, repayment. And what about debentures? Interest, repayment. Preference shares, dividend, repayment. Now what happens if this amount is required to be paid by company, but company fails to pay this money? That is, due date is expired, but still company fails to pay the money. Now we need to check the outstanding time period. If the amount is outstanding for more than or equal to 1 year, then all the directors in the company will be disqualified. That means in case of financials and annual returns, we need to check 3 continuous years. In case of payment default, we need to check 1 year. So in both these cases, who will be disqualified? All the directors in that company will be disqualified. What about newly appointed directors? They are not disqualified till completion of 6 months. Next one. What happens if all the directors in the company are disqualified at once? Now number of directors will become 0. When number of directors are become 0, then how the company will be managed? How it will be operated? So that's why. So promoter will appoint minimum directors. If promoter is not available, central government will appoint minimum directors. And these directors are temporary directors. So in next general meeting, shareholders will appoint regular directors. So this is in second situation because all directors are disqualified at once. Next one. Government company. In case of government company, point 1 is applicable, but point 2 is not applicable. Because they always make delay in making payments. And moreover, they will make delay in filing annual returns and financial statements. So that's why they give exemption to government companies. So point 2 is not applicable in case of government company. Next one, private company. So both the points are applicable. If private company want to add extra points, they can add by using articles of association. Next one, resignation of director. So if director want to resign, what he is required to do? First, he need to prepare resignation letter, and he need to deliver this resignation letter to company ROC. Now company will give this resignation letter to ROC. That means ROC will get communication from concerned director as well as company. Now company will report this matter in board report also. Company will place this matter in company's website also. That's it. So when a director want to retire, first he need to prepare resignation letter. He need to deliver the resignation letter to company and ROC. Now company is required to do 3 things. First one, in that financial year, they will prepare a board report. In that board report, they need to include this point about resignation of director. Next one, they need to display this fact at its website. Third one, they need to communicate this matter to ROC. So this is about resignation. Next one, removal. How to remove the director? How director is appointed? By war. So director can be removed by war. So if director is appointed by war, the same director can be removed by passing war. But there are some exceptions to this rule. First one. So can you remove director without providing opportunity of being heard? No. Even the war is passed, you can't remove director without providing opportunity of being heard, because providing this opportunity is mandatory. What happens if director is appointed by tribunal? Then tribunal can only remove the director. So that person cannot be removed by shareholders. Now what about removing independent director who was appointed for second term? Not possible, because if you want to remove independent director during first term, war is sufficient because that person is appointed by war. But if you want to remove independent director in second term, SR is required because that person is reappointed by SR. That's where for removal also what is required? SR is required. Next one, what happens if a director is appointed based on principle of proportional representation? So what is meant by proportional representation? Say for example, in a company there are 3 shareholders A, B, C. A is having 80% shares, B is having 10% shares, and C is having 10% shares. Now, who can pass war? A. Who can pass SR? A. That means A is having complete control over the company. That's why A will be called as controlling shareholder. Then what about B and C? They are called as minority shareholders. Now, who can appoint director in this case? Only A. Because A is having 80% shares. Either by passing war or by passing SR, he can directly add or remove directors. Then what about the role of B and C in case of appointment and removal of director? There is no scope at all. When there is no scope, why B will make 10% investment? Why C will make 10% investment? Because we need to give some powers to B and C also. There must be a director in the board of directors team in order to represent B and C also. So that's why in this case, instead of following regular approach, they will follow different approach called as proportional representation. So what is meant by proportional representation? So for A, there will be a director in the board of directors team. And for B and C also, there will be a director in the board of directors team. That means the first director will represent A and the second director will represent B and C. Now the point is, so can A, by using his 80% shares, 80% voting power, can he remove the director who will represent B and C? No, it is not possible. It is not possible. That means by passing war, removing the director who was appointed in proportional representation, that was a representative for small minority shareholders, it is not possible, because this person is appointed by minority shareholders. This person can be removed only by minority shareholders. That means what is required normally? War. But without providing opportunity of being heard, not possible. If appointed by tribunal, only tribunal can remove. War is not possible. If it is independent director's second term case, SR is required. War is not sufficient. If director is appointed based on proportional representation, then minority shareholders need to remove, but not war. Next one. When director position will become vacant. So for example, there is a director in the company. So during the year, he suffered with disqualification. Now what will happen? He need to vacate the office. So this is nothing but called as casual vacancy. Now any director absent himself from attending board meetings for 12 continuous months, whether he seeks leave or not. So if he failed to attend board meeting for 12 consecutive months, so he need to vacate the office. Casual vacancy will be created. Next one. What happens if he is disqualified by order of court or tribunal? He is disqualified, he need to vacate the office. And what about point C and point D? So for example, there is a company. This company want to make a contract with partnership firm. For this purpose, board of directors are required to conduct board meeting and they are required to pass board resolution. So there are 3 directors in the board of directors team A, B, C. A is not interested in this partnership firm. B is not interested in this partnership firm. But C is having some interest in this partnership firm. Basically, he is a partner of that partnership firm. Now the company is about to make a contract with this partnership firm. Board of directors need to decide whether to enter into contract with that partnership firm or not. Now in this board meeting, who is required to present? A, yes. B, yes. C, no. Why C is not required to present at that board meeting? Because he is one of the interested director. So he may take biased opinions. So he may take his own personal interest rather than company interest. So that is the reason why C is not allowed to participate in this board meeting. So what is the duty on C? C must communicate about his interest in that partnership firm to remaining partners. And he shall not participate in the board meeting. He shall not vote at the board meeting. So this is the duty of C. Now, what happens if C fails to disclose that fact to remaining directors? C participated in board meeting. C voted at board meeting. Then he need to vacate the office. He need to vacate the office immediately. It will become a casual vacancy. That means any interested director, if they fail to disclose that fact to remaining directors, if they participated in the board meeting, if they voted at the board meeting, then that people need to vacate the office immediately. But this is applicable to interested director only. That means if in this partnership firm, if C doesn't have any share, then he can participate in the meeting and he can vote at the meeting. There is no problem at all. The problem is with this partnership where he is a partner. In that situation only these points are applicable. If he failed to disclose, if he participate in that meeting, if he voted at that meeting, he need to vacate the office immediately. So these are the vacation cases. First one, disqualifications. Second one, failed to attend board meetings for 12 continuous months. Third one, failed to disclose about his interest to other directors and participated in the board meeting and voted at the board meeting even though he is having interest. And last case, disqualified by any court or tribunal. Next one. So appointment of MD, WTD, manager. All these people are called as managerial personnel. They are not KMP, they are just MP, managerial personnel. So who will be covered here? MD, managing director, whole-time director, manager. So who is MD? He is a director who is having substantial power over the company. Then what about manager? He's not a director having substantial power over the company. And how many MDs can be there in company? Only one. How many managers? Only one. If MD is available, you can't appoint manager. If manager is available, you can't appoint MD. In simple words, only one person can have substantial power. If that one person is a director, he will be MD. If that one person is not a director, he will be manager. And both these persons will be acted under the instructions of board of directors. I already said, first one chairman, he will control board of directors, and board of directors will control MD or manager. Then what about whole time director? He's a director who is in employment, that to whole time employment with the company. So that director will be called as whole time director. Now, how to appoint MD, whole time director or manager? That is the concept. Now, under Companies Act 2013, some conditions are provided. Next one, under Schedule 5, some conditions are provided. Now, if that person satisfies all the conditions provided in Companies Act 2013, then he is eligible to become MD or manager or whole time director. What happens if he fails to satisfy the conditions given under Companies Act 2013? That person is completely not eligible to become MD, manager, whole time director. Next one, what about Schedule 5 conditions? If that person satisfies all the conditions, that person is eligible to become MD, manager, whole time director. What happens if any condition got failed? Even in that situation also, they can be appointed as MD, manager, whole time director. But whose approval is required? CG's approval is required. That means fulfilling the conditions given under Companies Act is mandatory. And fulfilling the conditions mentioned in Schedule 5 is not mandatory. In case of non-compliance of conditions under Companies Act, that person cannot be appointed. But in case of non-compliance of conditions under Schedule 5, that person can be appointed, but what is required? CG's approval is required. Now, what are those conditions? First one, under Companies Act. So, a company shall not appoint MD or manager at same time, because substantial powers need to be given only to one person. Now, what about the tenure? So, MD or whole time director or manager will be appointed for 5 years. After 5 years, again reappointment is possible for another 5 years. After 5 years, another 5 years, and so on. That means permanent appointment is not possible. So you can appoint only for maximum 5 years. If you want to reappoint after 5 years, you can make reappointment. Next one. Then when to make reappointment? So during 5th year, you can make reappointment. Next one. What about the age requirement? He shall attain 21 years of age. That means 21 years of age or more than 21 years of age. Anything is okay. Then what about maximum age? So he shall not attain 70 years. That means his age must be less than 70 years. So what happens if his age is less than 21 years? That person is not eligible to become MD, whole time director or manager. What happens if he attains 70 years? That is, his age is 70 years or more than 70 years. Then also same rule is applicable. But in order to appoint that person as MD, manager or whole time director, so SR is required. If SR is not possible, then there is an alternative. What is that alternative? So OR plus CG's approval is required. That means in case of less than 21 years, there is no exception at all. He must have 21 years. It is a mandatory condition. What happens if he attains 70 years? Then SR is required. If SR is not possible, OR with CG's approval is sufficient. Next one. What happens if he is insolvent? He cannot be appointed as MD, manager, whole time directors. What happens when he suspend any payment to his creditors? Disqualified. What happens when he made any settlement? Actually, A is required to pay 10 lakhs to his creditors, but he makes default in paying this 10 lakh amount. Now what will happen? A cannot become MD or manager or whole time director in any company. Now, as a settlement, for 10 lakhs, he provided only 6 lakhs. So this is nothing but a compromise. It is a settlement case. Even in this situation also, he is not eligible to become MD, whole time director, manager. That means when he is eligible, when he paid entire 10 lakhs, then only he is eligible. So if he fails to make payment or if he makes any settlement, final settlement, in both these cases, that person is not eligible to become MD, manager, whole-time director. Next one, when he went to jail for more than 6 months, he can become normal director, but he can't become managing director, whole-time director, or manager. Now, what are the conditions that are given under Companies Act? First one, at a time, a person cannot be appointed as MD or manager. Next one, a person can be appointed as MD, manager, whole-time director for a maximum tenure of 5 years. If they want to reappoint, they can reappoint during last year. Next one, age. It shall not be less than 21 days. It shall not be equal to or more than 78. Okay, for 21 years, there is no exception. For 70 years, there is an exception. What is that exception? With SR, you can appoint. If SR is not possible, with WAR and CG's approval, it is possible. Next one, insolvent people, not eligible. Next one, any person who made default with creditors, not eligible. Any person who made settlement with creditors, not eligible. Any person who went to jail for more than 6 months, not eligible. Now let's see Schedule 5 conditions. In case of Schedule 5 conditions, what is the speciality? Even if these conditions are not satisfied, you can still appoint that person by taking CG's approval. So what are those cases? We have certain specified acts. Actually, it is 19 acts, but in study material it is given as 16 acts. Okay, in these acts, if any person is imprisoned for any number of days, even for 1 day also, that person is not eligible. But if you want to appoint that person, then CG's approval is required. Then what about fine? In case of fine, so up to 1000 rupees, no problem. If it is more than 1000 rupees, then CG's approval is required. That means there are some special acts. In those special acts, if you are facing any imprisonment even for 1 day also, CG's approval is required. If you are fined more than 1000 rupees, CG's approval is required. Next one, there is another act called as Conservation of Foreign Exchange and Prevention of Smuggling Activities Act. So in this act, if you detained even for 1 day also, you will be disqualified. So CG's approval is required. Next one, third point, it is not there, it is omitted. Next one, third point, fourth point, he must be a resident of India. Actually, who is resident of India? Who stayed for 182 days. But in this case, the definition is completely different. So for the purpose of this situation, the term resident of India means any person who stayed in India during last 12 months. That person will be called as resident of India. If he is resident of India, CG's approval is not required. If he is not resident of India, CG's approval is required. So what are the points that are covered in Schedule 5? First one, under those 19 acts, if you suffers with even 1 day imprisonment, CG's approval is required. If you are fined for more than 1000 rupees, CG's approval is required. Under COFE POSA, that is Conservation of Foreign Exchange and Prevention of Smuggling Activities Act, if you detain even for 1 day also, CG's approval is required. Next one, if you are not a resident in India, that means if you fail to stay in India for last 12 months, CG's approval is required. Then what is the appointment procedure? Very simple. So these people will be appointed by Board of Directors. So Board of Directors will make appointment. They will fix remuneration. They will decide terms and conditions. But this appointment, this remuneration, these terms and conditions need to be ratified by shareholders. Now the question is, what happens if Board of Directors made appointment and shareholders rejected that appointment? And meanwhile, so those MD, manager or whole-time director, they did some contracts. What about the validity of those contracts? Are they valid or invalid? So these people are appointed by Board of Directors. Appointment is proper appointment only. But in next shareholders meeting, those people are rejected by shareholders. But meanwhile, they made some contracts on behalf of the company. What about the validity of those contracts? Are they valid or invalid? They are valid only. But after rejection from shareholders, if they made any contract on behalf of company, that contract will become invalid. Next one. So having whole time KMP. So whole time means on full time basis. KMP means key managerial personnel. But KMP is a team of 3 persons. First one, MD or manager or CEO. In their absence, In their absence, WTD. Next one. Second one, CFO. Third one, CS. So 3 persons must be there in the company as whole-time KMP. So first one, out of these 4 people, any one. Second one, CFO. Third one, CS. Now, which companies are required to have mandatory whole-time KMP? So we need to classify the companies into 3 categories: listed public companies, unlisted public companies, private companies. For listed public companies, for all companies, having whole-time KMP is mandatory. Next one, what about unlisted public company? If it's paid up share capital, so if it's paid up share capital is more than or equal to 10 crores, then having whole-time KMP is mandatory, otherwise not mandatory. What about private companies? So if it's paid up share capital is more than or equal to 10 crores, then instead of having whole-time KMP, they need to have whole-time CS. That means for unlisted public company and private company, the limit is same, that is 10 crores. But in case of unlisted public company, if the limit got satisfied, then whole-time KMP is required. 3 persons are required. But in case of private company, only 1 person is required, that is whole-time CS. Next one. Now there is a person, he want to act like both chairman as well as MD simultaneously. Now there is another person, he want to become chairman plus CEO at same time. So is this combination allowed or not allowed? Same person want to become both chairman as well as MD, nothing but CMD. Next one, a person want to become both chairman as well as CEO. So at a time, having these 2 designations by a single person, is it allowed or not allowed? Means it is not allowed. But there are some exceptions. In those exceptions, it is allowed. What are those exceptions? First one, AOA. If AOA allows this combination, it is allowed. Second one, if company is having single business, not multiple business, it is allowed. If company is having multiple business, but it is notified by the CG, it is notified by the CG, and each business is having separate CEO, then it is allowed. That means a person cannot act chairman and MD, cannot act as chairman as MD simultaneously. A person cannot act like chairman plus CEO simultaneously. But if AOA permits, yes. If there is only single business, yes, allowed. If there is multiple business, but it is notified by CG and every business is having a separate CEO, then also it is allowed. Next one. Now there is a person who is acting like whole-time KMP in one company. Say for example, A Limited. Now he want to become whole-time KMP in another company. Is it allowed or not allowed? Not allowed. He can become a director in another company. There is no problem in becoming director. But already if a person is acting like whole-time KMP in one company, the same person cannot act like whole-time KMP in another company. But if another company is a subsidiary of A Limited, then it is allowed. That means if a person want to become whole-time KMP, yes, he is allowed to become only in one company, but there is an exception. In that exception, he can become whole-time KMP in subsidiary companies also. If subsidiary companies are only one, then total positions will be 2. So A Limited as well as one subsidiary. If number of subsidiaries are 2, then in 3 companies he can become whole-time KMP. That means in all subsidiary companies, this person can act like whole-time KMP. Next one. Then what about MD or manager? MD or manager. So they can act like MD or manager in maximum 2 companies. So in maximum 2 companies, they can act like MD or manager. But in case of whole-time KMP, only one company. In case of MD or manager, so 2 companies are allowed. Next one. What about the casual vacancy? Who will fill the casual vacancy? Actually, whole-time KMP will be appointed by board of directors. So casual vacancy need to be filled by board of directors only. Next one. Maximum remuneration. So first of all, we need to classify the director remuneration. So what kind of services director will provide to the company? So first one, he will provide director related services. He will provide other services. He will provide professional services. Say for example, if the director is a CA, CMA, CS, he may provide professional services also. Next one, he will attend meetings like board meetings, general meetings, as well as committee meetings. Now, Director will provide director services, other services, professional services, and he will even attend meetings. Now the point is, for providing director services and for providing other services, he will get remuneration. For professional services, he will get remuneration. For attending meetings, he will get sitting fees. It is not called as remuneration, it is sitting fees. Now, what are the limits on these amounts? For sitting fee, what is the limit? Maximum 1 lakh per meeting. But here there is a note point. For women directors, for independent directors, they shall be treated at par with remaining directors. If remaining directors are getting 1 lakh sitting fee, you can't pay less than 1 lakh to women directors and independent directors. Even both these directors are entitled to get 1 lakh. Next one. Then for professional services, no limit at all. So he can take unlimited remuneration. Then for director services and other services, limits are applicable. Now what are those limits? So for this purpose, we need to take MD, WTD, manager plus other directors. Other directors. The combined limit is 11%. 11% of net profit. That is the maximum remuneration. Next one. Now we need to classify the situations into two categories. One is MD, WTD, manager. Other one is other directors. Now for MD, WTD, manager, for single person, the maximum remuneration shall not exceed 5%. For all persons together, it shall not exceed 10%. Then what about other directors? If MD, WTD, manager, if these people are available, the company is required to pay remuneration to these people, then these directors will get only maximum 1%. Sir, what happens in that company if there is no MD, no whole-time director, no manager? That means the company is not paying any remuneration to these people. Now, these people will get 3% of net profit. Now say what is the total limit? 11%. So MD, WTD, manager plus other directors, total 11%. So what about only MD, WTD, manager? For single person, it shall not exceed 5% of net profit. For all persons together, it shall not exceed 10% of net profit. What about other directors case? If these people are not available, they can get 3%. If these people are available and even these people are getting remuneration, then they can get only 1%. Now the point is it possible to take more remuneration as limits? Yes. So you can take more remuneration than 11%. Or 5% or 10% or 1% or 3%. So exceeding these limits are possible. But in this case, what is required? SR is required. And if you take any loan from any bank or financial institution, and if you made any payment default, then that bank or financial institution permission is also required. Sir, what happens? So if there is no loan with bank or financial institution, permission is not required. What happens if there is loan with bank or financial institution, but there is no payment default? Permission is not required. That means permission is required only when there is a loan and in case of payment there is a default. So then only we are required to take the permission of bank or financial institution. But taking SR is mandatory in all situations. So with the permission of these two people, so we can pay remuneration to the director exceeding these limits. Next one. So compensation for loss of office. So for example, I appointed a director for 5 years. I appointed MD for 5 years. Now, I removed that MD after 3 years. Now for 2 years, he will suffer with loss of compensation, loss of pay. Now, company is required to pay compensation to the director. So this compensation is known as compensation for loss of office. Okay, this concept is applicable only for MD, WTD, manager. This concept is not applicable for other directors. That means if company removes other directors even before of expiry of their term, company is not required to pay any compensation. So company is required to pay compensation for only MD, WTD, manager. Because what about the term of these three people? It is 5 years. The term is 5 years. After 5 years, again reappointment is possible for another 5 years. Now, if they appointed for 5 years and company want to remove them before 5 years, say for example after 1 year, Now for 4 years, these people will suffer with loss of pay. So that's why company is required to pay compensation. Now the point is, what happens if there is any default on these parties only? So this person committed default, that's why company removed those people from that position. Now no need to pay any compensation. So if there is any default on this part, so there is no need to company to pay the compensation. So sometimes even though there is no default, company is not required to pay any compensation. So what is that situation? So this person was removed by the company. So there is no default of this person, but after their removal, within 12 months, the company got liquidated. And company assets are not sufficient to pay compensation. No, compensation is not required, but remuneration must be paid to these people. So there is no restriction on paying remuneration. But what about compensation? It's not required. So generally, if there is any default on part of these parties, then only compensation is not required to be paid. But in this case, why company is not paying compensation even though there is no default? Because the company went into liquidation within 12 months. And there is no sufficient cash available with the company to pay this compensation. So that's why company is not required to give any money to these people. Next one. Then how much amount the company is required to pay as compensation? So first of all, so for first year, the compensation is 1 lakh. For second year, 2 lakhs. For third year, 3 lakhs. Fourth year, 4 lakhs. Fifth year, 5 lakhs. So this is the remuneration agreed to the managing director. Now company removed managing director after 3 years. Then what is the actual loss of pay? 9 lakhs. So is company required to pay entire 9 lakhs? No. There will be a limit. Then how to calculate that limit? So we need to take remuneration per annum into number of balance years. So remuneration per annum into number of balance year. We need to take that formula in order to calculate the compensation. But we can't take 4 lakhs or 5 lakhs here. Then how to take remuneration per annum here? So we need to take last 3 years average. So what is the last 3 years average? So 1 plus 2 plus 3 divided by 3. So answer is 2. So 2 lakhs. And we need to take balance years. How to take balance years? Balance years or 3 years, whichever is lower. So in this case, balance years is 2. So 2 or 3, whichever is lower means 2. So total maximum remuneration, maximum compensation payable is 4 lakhs. But if you calculate like this, you will get 9 lakhs. So company is not liable to pay 9 lakhs. Company is liable to pay only up to 4 lakhs. So how to calculate this money? Take remuneration per annum and multiply with number of balance years. How to take remuneration? Take last 3 years average. And how to take balance years? So actual balance years or 3 years, whichever is lower. So if you multiply both the values, you will get some value. This is nothing but maximum compensation payable. Next one. Powers of board of directors. Actually, board of director and the term director both are different. Director means a single person. He is an individual. What about board of director? It is a team of all directors. Then who will have powers in the company? Is it board of directors or single director? Board of directors. Individual director don't have any powers. Unless if it is given by board of directors, they don't have any power. Say for example, managing director. He will have substantial power. But how he got the power? Because of board of directors only. That means ultimately who is having power over the company? Board of directors. Now, how board of directors will exercise their powers? So board of directors will conduct board meeting and they will pass board resolution to exercise their powers. So these are the examples for their powers. So first one, asking for call money. So final call, first call, second call, like this, there will be some calls. Who will ask for that call money? Board of directors. Buyback, board of directors. So issue of securities like shares, debentures, bonds, board of directors. To take loans, board of directors. To make investment, board of directors. To provide loans or guarantees to others, board of directors. To approve financial statement and board report, board of directors. To diversify the business, board of directors. To go for amalgamation, merger, reconstruction, board of directors. To acquire controlling stake, that is more than 50%, or substantial stake, that is more than or equal to 20%. So one is to make other company as subsidiary company, other one is to make other company as associate company. So who will make these decisions? Board of Directors. Next one, political contributions. How much money to donate to political parties? Who will decide? Board of Directors. Appointment and removal of KMP. Board of Directors. Appointing internal auditors, sectoral auditor. Board of Directors. If it is statutory auditor, shareholder. But if it is internal auditor or sectoral auditor, Board of Directors. So how Board of Directors will access all these powers? They will conduct board meeting. They will pass board resolution. But there are some special points like borrowing money, investing money. So next one, loans, guarantees, securities. In these three cases, if it is Section 8 company, they can decide the matter without conducting board meeting also. So without conducting board meeting, if they pass board resolution, it will be called as resolution by circulation. So what is the difference between resolution by circulation and board meeting case? In case of board meeting, all directors will be provided with notice for board meeting at least 7 days before the board meeting. The board of directors need to attend the meeting. They need to discuss about the agenda and they are required to pass resolution. So this is the procedure. But what about resolution by circulation? So agenda will be forwarded to all the directors. So directors are not required to attend any meeting. They are required to give their votes within 7 days, either through post or through electronic mode. Now, after collecting all the votes, we will count the votes. If number of favorable votes are more than number of against votes, then board resolution is said to be passed. So here board resolution is passed even without conducting meeting. So this is called as resolution by circulation. So in these three special matters, for Section 8 companies, without conducting board meeting also they can decide the matter by using a concept called as resolution by circulation. Next one. Again these 3 points only. In these 3 cases, board of directors can delegate the power. That means actually who need to exercise these 3 powers? Board of directors. But board of directors can make power delegation. So the power delegation can be made to committees like audit committee, NRC, CSR committee. So like that there will be some committees. So they can delegate these 3 powers to those committees. Now who will decide those 3 matters? Instead of board of directors, those committees will decide the matter. Or MD. Or manager. In case of branch office, officer of the branch office. So these powers can be delegated by board of directors to these people. Now instead of board of directors, in this matter, who will decide the matter? The person who got the power, they will decide the matter. Next one, validity of the acts of directors. Say for example, a director was appointed and that appointment is a valid appointment. Now what about the acts committed by this director? Are they valid or invalid? Valid only. Now there is a director. He was not at all appointed. So not at all appointed. Then what about the acts committed by this person? Are they valid or invalid? Invalid. That means if a person is properly appointed as director, his acts, his contracts on behalf of company are valid. If a person is not appointed as director, but he took the position of director and he made some contracts on behalf of the director, then what about the validity of such acts? Invalid. Now the question is, there is a person who was appointed as director, but actually he is a disqualified person. Mistakenly, company appointed that person as director. Company doesn't know that director was disqualified. Even that person also was unaware about his disqualification. So purely it is mistake case. So mistakenly a person was appointed as director. So before realization of that mistake, this person made some contracts on behalf of the company. Then what about the validity of these contracts? Valid only. Even though his appointment is not valid, his contracts, his acts are valid only because this is done in good faith. What happens if company appoints that person even after knowing about his disqualification? What happens if that person is appointed as director even though he knows that he was disqualified? Then it is not a good faith appointment. Then the acts or contracts made by that person will be invalid. Next one. Restrictions on powers of board of directors. Actually, board of directors can decide any matter in the company, but in few matters they are required to take the shareholders' permission. Now we are going to discuss about 4 different cases where SR is required. That means board of directors can't take the decision alone. They are required to take the permission of shareholders. And what kind of resolution is required? SR is required. Then what are those 4 cases? First one, the company is about to sell or lease, or any kind of dispose of. So the company is about to sell or lease or disposal of its undertaking or substantially whole of its undertaking. So first of all, what is meant by undertaking? What is meant by undertaking? So for example, a company is having multiple units, unit 1, unit 2, unit 3. So like that the company is having multiple units. Now in unit 2, the total investment in unit 2 is more than 20% of net worth of the company. If company net worth is 100 crores, in that unit company invested more than 20 crores, then this unit is called as undertaking. Next one. So if this unit is generating more than or equal to 20% of total revenue, that means if company is getting 1 crore revenue, then 20 lakhs revenue is from this unit only. Then also this unit is classified as undertaking. That means in order to call unit 2 as undertaking, any of these two conditions are required to be satisfied. So what are those two conditions? Investment in that unit shall be more than 20% of total net worth of the company, or the revenue that is being generated by that unit must be more than or equal to 20% of total revenue. In both the situations, that unit will be called as undertaking. So if company decide to sell this undertaking, or if company decide to lease this undertaking, or company decide to dispose of this undertaking, so in all these situations, what is required? SR is required. Now the point is, here two terms are covered: whole of undertaking, substantially whole of undertaking. So if company want to sell, lease, dispose of either whole of undertaking or substantially whole of undertaking, then SR is required. So whole of undertaking means more than 50%. So if you give more than 50% of control to another person, complete control is given to another person. Then what about substantially whole of undertaking? More than or equal to 20%. So this is called a substantially whole of undertaking. That means if company want to either sell or lease or dispose of either whole of undertaking, that is more than 50% of undertaking, or substantially whole of undertaking, that is more than or equal to 20% of total undertaking, then what is required? SR is required. Next one. But so if selling or leasing or dispose offing, so undertaking is ordinary course of business, then it is a routine activity, SR is not required. So if it is a routine activity, doing like this is a routine activity, then SR is not required. But if it is not a routine activity, SR is required. Next one. Now a company sold undertaking to a person, so without taking SR, it is not in ordinary course of business. That means SR is mandatory. But company failed to get SR, but it sold undertaking to this person. But this person bought the property in good faith. Now what will happen? This transaction is valid only. Even though there is no SR, this transaction is valid. Reason? So other party bought the property in good faith. When other person bought the property in good faith, then it will be covered under exception. So Nemo.Quod non-habit, sale of goods act. So if the person is not a owner, then the buyer will not get ownership. But if the buyer is innocent person, if he is acting in good faith, he will get ownership. The same concept is applicable here also. So what is the first case? Selling, leasing, dispose offing, either whole of undertaking or substantially whole of undertaking requires SR. But if it is in ordinary course of business, SR is not required. If the buyer is good faith, if buyer acted in good faith, then SR is not required. Next one, second case. So we have a concept called as compulsory merger or amalgamation. What is meant by compulsory merger or amalgamation? If we decide to merge, if we decide to amalgamate, it is voluntary in nature. If central government asked the company to make merger or to make amalgamation, then that merger or amalgamation is called as compulsory merger or amalgamation. Now there is no option left to the shareholders. They need to merge or amalgamate by following central government order. Now in this situation, the shareholders may suffer with some loss. Then what central government will do? Central government will ask transferee company to pay some compensation to the shareholders who are suffering with loss. Say for example, before merger or amalgamation, a shareholder's value is 1000 rupees. Each share value is 1000 rupees. After merger or amalgamation, the share value came down to 700 rupees. Now what is the loss suffered by the shareholder per each share? 300 rupees. Now transferee company is required to pay this 300 rupees according to CG's order. Now what company will do with this 300 money? Instead of giving that money to the shareholders, they will make further investment. So what are the options available? Two options are available: trust securities, non-trust securities. So what is meant by trust securities? Riskless or minimum risk. What about non-trust securities? High risk. Now, if board of directors of the company decide to invest this 300 rupees in trust securities, then SR is not required because it is reliable, less risky. But if they want to invest that money in non-trust securities, high risky securities, then permission of shareholders is required in the form of SR. So, in case of compulsory merger or amalgamation, transferor company shareholders may suffer with loss, and that loss need to be compensated by transferee company. Now, transferor company board of directors, what they will do with this compensation money? So, they can make further investment. If they invested in trust securities, SR is not required. If they invested in non-trust securities, SR is required. Next one. What happens if it is a private company? In case of private company, all the people are closely held people only. So that's why this provision is not applicable. SR is not applicable because in case of private company, shareholders are nothing but directors. Same people will act like both shareholders as well as directors. So that's why this concept is not applicable. Next, third case. So what is third case? Loans. Actually, so if the existing borrowings of the company is 100 crores, paid up capital plus free reserves plus security premium account, nothing but shareholder fund. The shareholder fund is 120 crores. Now company want to take extra borrowing. That extra borrowing may be a loan. The extra borrowing may be debentures or deposits or bonds, whatever it may be, all are liabilities for the company only. Now if company want to take extra liability, how much liability they can take? They can take 20 crores extra liability in the given situation. So what happens if they took 20 crores liability? Now the total liability will become 120 crores, which is exactly equal to paid up capital plus free reserves plus security premium, nothing but shareholder fund. So for taking extra 20 lakhs liability, shareholders permission is not required. But if they want to take 21 crores liability, then what will happen? Now total liability, so existing liability plus proposal liability, total liability is exceeding shareholder fund. So when total liability is about to exceed shareholder fund, then what is required? Shareholders permission is required. SR is required. Then what to take in existing debts? In existing debts, take all existing debts except temporary loans. That is short-term loans. So short-term loans need to be excluded from existing debts. So you need to take remaining debt and we need to add proposed debt. If that amount exceeds shareholder fund, then what is required? SR is required. And there is an exception to this rule. That exception is nothing but banks. So banks. Why banks are exempted here? Because doing all these things are nothing but ordinary course of business for the banks. Next one and last one. So company gave a loan to director. So for example, 10 lakhs loan. And a time limit of 1 year is given. The board of directors decided to give extra 6 months time to this director to repay the loan. For giving extra time limit, shareholders permission is required. That is SR is required. Or board of directors want to make final settlement. Instead of 10 lakhs, they agreed to take only 6 lakhs from the concerned director as a one-time final settlement. Even for this also, shareholders permission is required. That means SR is required. That means whenever a company provides loan to director, in order to compromise in that amount or in order to provide time extension for repaying that loan amount, in both these cases, shareholders permission is required. That too, SR is required. So in all these 4 cases, SR is required. And in case of DIN, the one and only important question is cancellation, surrender and deactivation of DIN. So first of all, so every person need to have maximum 1 DIN only. What happens if that person is having more than 1 DIN? The extra DINs need to be cancelled. What happens if any person provides false information to get DIN? So later, after it is proved that the DIN is obtained by providing false information, the DIN will be cancelled. What happens if DIN holder was expired? DIN will be cancelled. What happens if DIN holder become unsound mind? Cancel. Insolvent? Cancel. What happens if DIN holder voluntarily surrenders the DIN? It will be cancelled. In all these cases, the allotted DIN will be cancelled. Next one, question number 30, which is about audit committee approval. So actually, company can make transaction with related party. So who are related parties to the company? It's holding company, it's subsidiary company, it's associate company, it's a directors, it's employees, it's officers. All these people are called as related parties. If company want to make any transaction with related party, then what is required? Audit committee or board of directors approval is required. If the transaction is a large transaction, then even shareholder permission is also required. Now we are going to discuss about only audit committee or board of directors approval. So, in case of related party transactions, we need to classify the transactions into two categories. One is recurring transactions, other one is unique transactions. In case of unique transaction, approval is required for each related party transaction. But in case of recurring transactions, you can take omnibus approval. So what is meant by omnibus approval? Single approval for multiple related party transactions, because they are recurring in nature. So as they are recurring in nature, so taking permission every time is burdensome. So that is the reason why a single permission can be taken for all such transactions, which is nothing but called as omnibus approval. Now, who will provide omnibus approval? Audit committee, if it is available. Board of directors, if audit committee is not available. What is the validity of omnibus approval? 1 year. So within 1 year, if company is about to make similar kind of transaction, permission is not required. If company want to make a unique transaction, permission is required. And for this purpose, audit committee can even set criteria. So for example, they can say like this: okay, I will give omnibus approval, but you are required to make transaction only with this related party, not with other related parties. They can put restriction like this, or they can make maximum transaction limit also. So the maximum transaction limit is 1 lakh. That means if you want to make any recurring transaction for an amount which is less than or equal to 1 lakh, my permission is not required for 1 year. But if you want to make any repeated transaction for more than 1 lakh, my permission is required. Like this also they can put restriction, or they can put restriction on number of transactions also. So you can take omnibus approval for 1000 transaction. After this approval will be expired. From next transaction onwards, again you are required to take either omnibus approval or separate approval. So like this also they can put restrictions. So this is all about omnibus approval. Next one, disclosure of interest by interested director. This concept is already discussed. So there are 3 directors in a company ABC, and the company is about to make a contract with a partnership firm. Now C is one of the partner in this partnership firm. What he is required to do? He need to disclose this fact to A and B, and he shall not participate in the meeting, and he shall not vote at the meeting. What happens if he fails to disclose this fact? What happens if he still participated in the meeting and voted at the meeting? C need to vacate the office immediately. Now the point is, what happens if it is a body corporate? What happens if it is a body corporate? What happens if it is a partnership firm? What happens if it is AOP or BOI? That is association of persons and body of individuals. What happens if it is a proprietary firm? In case of proprietary firm, we need to check whether C is proprietor or not, that is owner or not. In case of AOP or BOI, we need to check whether he is a member or not. In case of partnership firm, we need to check whether he is partner or not. In case of body corporate, so we need to check so many points. So what are those points? We need to check whether he is a promoter or not. We need to check whether he is a manager or not. We need to check whether he is a CEO or not. Next one, we need to check whether he is a shareholder or not. But in case of shareholder, there is a limit. Up to less than or equal to 2%, there is no problem at all. He cannot be called as interested director. But if he is having more than 2% of total shares, then he will be called as interested director. That means, so in this body corporate, if he is a promoter, interested director. If he is a manager, interested director. If he is a CEO, interested director. If he is a shareholder, he will become interested director when his shareholding is more than 2%. If it is up to 2%, he is not called as interested director. Next one, when to make disclosure regarding interest in other business entities. First one, after appointment. Second one, every financial year. Third one, after change. So after appointment, in first board meeting, he is required to disclose his interest in other business entities to other directors. Every year, in every financial year, during first board meeting, he is required to disclose his interest in other business entities to other directors. And whenever there is a change, after the change, in first board meeting, he is required to communicate about his details to other directors. So at the time of appointment, at the time of change, and for every financial year, in first board meeting following this event, he is required to disclose about his interest to other directors. So it is a mandatory requirement. Sir, what happens if the company made this contract, so, and he failed to disclose about his interest? First of all, he need to vacate the office. That is first point. Second point, this contract will become voidable at the option of company. If company want to continue this contract, they can continue. If company want to cancel this contract, they can even cancel the contract also. So this director need to vacate the office, and this contract will become voidable at the option of company. So by this we completed about board of directors and KMP. Okay, let's see next chapter, which is about board meetings and procedures. So first one, it is about frequency of board meeting. So here we are required to classify the companies into three categories. First one, normal company. Second one, OPC with more than one director, small company, dormant company. And last one, OPC with one director case. Because in case of OPC, what about the limits of number of directors? Minimum 1, maximum 15. If it is 1, it will be covered in second case. If it is more than 1, it will be covered in third case. Now, so normal companies are required to conduct first board meeting within 30 days of incorporation. Then what about second category companies? Same rule. They are required to conduct first board meeting within 30 days. What about OPC with only one director case? With only one director, how is it possible to conduct a meeting? So that's why this concept is not applicable. So for first category companies, within 30 days first board meeting. For second category companies, within 30 days first board meeting. But for last category company, board meeting concept is not applicable. Next one. Thereafter, what about the frequency of board meetings? So here, 4 board meetings need to be conducted. Minimum 4 board meetings need to be conducted in a calendar year. So one calendar year, minimum 4 board meetings. What about second category? It is minimum 1 board meeting, that too for each half of the calendar year. That means if you take whole calendar year, it will become 2. But we need to write each half of the calendar year in exam. So at least 1 board meeting is required for each half of the calendar year. And what about last case? Not applicable. Next one, gap. So what should be the gap between 2 board meetings? In first case, it is maximum 120 days. In second case, it is minimum 90 days. In third case, not applicable. Now say in case of normal company, what about first board meeting? Within 30 days of incorporation. What about subsequent meetings? For each calendar year, minimum 4 board meetings. What about the gap between 2 board meetings? It shall not exceed 120 days. What about OPC with more than one director, small company and dormant company? Within 30 days of incorporation, first board meeting, and each half of the calendar year, at least 1 board meeting is required, and gap between 2 board meetings shall be minimum 90 days. And in case of OPC with one director, nothing is applicable. Next one. What about the meeting of independent directors? At least 1 meeting, that too for calendar year. What about committee meetings like audit committee meeting, CSR committee meeting? What about committee meetings? It will be decided either by board of directors or by any law which is in force or by any authority. If they say at least 1 meeting is required for year, 1 meeting. If they say 2 meetings, 2 meetings. It all depends upon their direction. So this is all about frequency of meetings. Next one. board meeting. So first of all, to conduct board meeting, a proper notice must be given to the directors. Who need to give the notice? CS, if CS is available, but every company is not required to appoint CS. There are some companies where CS requirement is not applicable. So for those companies, any director or other person who was authorized by board of directors. So that person may be a director or that person may be any other person also, but he need to be authorized by board of directors. So these people need to give the notice. If CS is available, CS. If CS is not available, authorized person. Okay, this notice need to be given to whom? All directors. All directors means all directors only. So including interested directors also. Actually, interested directors are not allowed to participate in the board meeting. They are not allowed to vote at the board meeting, but still they are eligible to get the notice of the board meeting. So notice need to be given to all directors, including interested directors also. So who need to give? CSR authorized person, to whom? All directors. Then what the time limit? At least 7 days before the meeting. Then what about shorter notice? So 6 days before the meeting, 5 days before the meeting, even 1 day before the meeting. Is it allowed? Yes, allowed, but subject to a condition. What is that condition? At least one independent director shall present at that board meeting. So if it is happened, then shorter notice is also allowed. Sir, what happens if independent director is not present at the board meeting? Then there is another option. What is that option? So after passing board resolution, that board resolution need to be circulated to all directors. It need to be circulated to all directors after completion of the meeting, and it must be ratified by at least one independent director. So if this condition is satisfied, then the board meeting is valid. That means minimum number of days for giving notice is 7 days before the meeting. If it is a shorter notice, presence of at least one independent director is required in that board meeting. If independent director is not present, then after passing the resolution, it need to be circulated to all directors and it need to be ratified by one independent director. Next one, we completed about who need to give the notice, to whom the notice need to be given. So how many days prior the notice need to be given, and next one, how to give the notice. So how to give the notice? First one, you can give the notice directly, that is through hand. Second one, you can send the notice through post. And third one, you can send the notice through electronic mode also. So you can directly hand over the notice to the concerned director, or you can deliver it through post or electronic mode, nothing but email. Next one, then what about the content of notice? So it must contain day of board meeting. Next one, time of board meeting. Next one, place of board meeting. Next one, agenda of board meeting. Next one, about option available to directors to attend the board meeting through video conference or other audio video mode. So first one, day. On which day you can conduct board meeting? On any day except national holiday. Time, there is no restriction during business hours or during non-business hours also, both are allowed. Place, there is no restriction, you can conduct board meeting at any place in India. You are not required to conduct board meeting only at registered office. You can conduct board meeting at any place in India. And what about agenda? Yes, you must provide agenda. Sir, what happens if company is about to discuss 5 agendas? Each agenda need to be serially numbered. So agenda number 1, item number 1, item number 2, item number 3, like that. Each agenda need to be serially numbered. Next one, and you need to circulate about option which is available to director. Actually, if a director want to participate in board meeting, how many options are available? 2 options are available. Option number 1, he can present in person. In person means directly, physically, or he can participate through video conference or other audio video mode, that is digitally, like Zoom meetings. So it is the option which is available to director. So if you want to participate in video conference or other audio video mode, he need to give a prior intimation to the company. Then company will make necessary arrangements. But if you want to participate in person, no need to give any prior intimation. Sir, what happens if director fails to give prior intimation about his participation through video conference? Then he shall participate in meeting only in person. because company need to make necessary arrangements. So that is the reason why prior intimation is required. If there is no prior intimation from your side, then you need to attend the meeting in person only. Next one. And we need to give the serial number for board meeting also. So first board meeting, second board meeting, third board meeting, 10th board meeting, 20th board meeting. So like that, every board meeting will be serially numbered. You need to provide the number of that board meeting also. So this is the content of board meeting. So we completed about who need to give the notice, to whom the notice need to be given, how to give the notice, when to give the notice, and we even completed about content of the notice. Next one. Now notice is given. So directors are required to participate in the meeting. So in meeting, first we need to check quorum requirements. So don't discuss about agenda first. First we need to discuss about quorum requirement. If the minimum attendance is present, you can proceed with the meeting. If it is not there, you need to adjourn the meeting. So then what is the quorum requirement? For this purpose, we need to classify the companies into 3 categories. First one, normal companies. Second one, Section 8 companies. Third one, any company where number of interested directors are more than or equal to 2/3 of total directors. That means almost all the directors are interested only. Okay. In case of normal company, what is the quorum requirement? 1/3 of total directors or 2, whichever is higher. What about rounding off rule? Next number. Next one. In case of Section 8 company, instead of 1/3, you need to take 1/4. So 1/4 in the terms of percentage, it will be 25%. So 25%, instead of 2, you need to take 8. So instead of whichever is higher, we need to take whichever is lower. So for Section 8 company, so in place of 1/3, 1/4, that is 25%. In place of 2, it is 8. Next one, in place of instead of whichever is higher, so whichever is lower need to be taken. But in this case, there may be a chance to get 1 as answer. How is it possible? Say for example, there are 4 directors. Now what about the quorum requirement for that Section 8 company? 4 into 25% or 8, whichever is lower. 4 into 25% means 1 or 8, whichever is lower. So the final answer is 1. How is it possible to conduct a meeting with only 1 person? So that's why there is extra condition. Minimum 2 persons are required. But there is no problem with in case of normal company. Reason? So we need to take higher number. Say for example, 1 or 2, whichever is higher means 2. 3 or 2, whichever is higher means 3. That means at any situation, minimum 2 persons will be present. But in case of Section 8 company, there is a chance to have 1 member as quorum. In that situation, don't take 1, take 2. Next one. What happens when out of total directors, 2/3 directors are interested directors? They're not allowed to participate in the meeting. They're not allowed to vote at the meeting. Even those people will not be counted for the purpose of quorum also. But they are entitled to get the notice from the company about board meeting. So getting notice is okay. But participating in meeting, not allowed. Voting at that meeting, not allowed. And counting for the purpose of quorum, it is also not allowed. When it is not allowed, then if almost all the directors are interested directors, then quorum requirement will not be fulfilled. That means company is not able to make any contract now. It can't take any decision. That's why we need to take separate quorum requirement for this situation. What that separate quorum requirement? Here we are required to take quorum as 2, and those 2 people must be non-interested directors. Now say what is the quorum requirement in case of normal company? 1/3 of total directors or 2, whichever is higher. For Section 8 company, 25% of total directors or 8, whichever is lower. If independent directors are more than or equal to 2/3 of total directors, then the quorum requirement is 2 non-interested directors. Now the question is, what happens when quorum is not present at the board meeting? Now we need to check the agenda category. If the agenda is to appoint additional director in order to meet quorum requirement, so actually quorum is not satisfied. In order to satisfy the quorum requirement, the company want to appoint additional director. Now, for this purpose, no need to adjourn the meeting. You can continue with the meeting even though there is lack of quorum. Next one. If it is to calling general meeting, because how to call general meeting? Board of directors first they need to conduct board meeting. They need to pass board resolution to give 21 days prior notice. Now, in that board meeting, quorum is not there. What to do? No need to adjourn the meeting, continue the meeting. So, in these two cases, that is to appoint additional director to meet quorum requirement and to call general meeting. So, you are not required to adjourn the meeting. You can continue the meeting without any adjournment. But what about other agendas? So, if there is no quorum, you need to adjourn the meeting to next week, same day, time, place. What happens if the day is a national holiday? Go to next day. Next one. Now, what happens if quorum is not present even in adjourned meeting also? If it is a shareholders meeting, it will be continued. But in case of board meeting, it will not be continued, it will be cancelled. That means for the first time, they will adjourn the meeting. For the second time, if the same is repeated, they will cancel the meeting. So this is about quorum requirement. Next one. So we completed about 3 questions about frequency of board meetings, notice requirements, and quorum requirement. Next one, minutes book. So first of all, what is meant by minutes book? Whenever a company conducted a meeting, so what is happened at the meeting need to be recorded in a separate book called as minutes book. So every company is required to maintain a separate minutes book for all general meetings, a separate minutes book for all board meetings, a separate minutes book for other meetings. So the company is required to maintain a separate minutes book for each class of the meeting. All general meetings, all board meetings, all creditors meeting, all debenture holders meeting, like that, a separate minutes book need to be maintained. Now the point is, what happens if it is a postal ballot voting? What happens if it is resolution by circulation? So what is the difference between postal ballot voting and resolution by circulation? Actually, board of directors want to take any decision, what they will do? They will conduct board meeting, they will pass board resolution. If shareholder want to do anything, what they will do? They will conduct general meeting, they will pass either special resolution or ordinary resolution. Now the point is, without conducting board meeting, you can pass board resolution. Without conducting general meeting, you can pass these resolutions. How is it possible? Company will communicate agenda to the concerned people. Those people will be given with certain time limit. Within that time limit, they are required to communicate their vote to the company. Now company will count the votes and it will declare the resolution. So how company will communicate the agenda? Either through post or through electronic mode. How other person is required to give their vote? Either through post or through electronic mode. What about physical gathering? Not required. What about discussing about agenda? Not required. What about entire meeting concept? Not applicable. So it will be, agenda will be communicated through post or electronic mode. Votes will be communicated through post or electronic mode without meeting. So even in this manner also we can pass resolutions. So if it is happened in case of board of director case, it will be called as resolution by circulation. If it is happened in case of shareholders, then it will be called as postal ballot voting. Then what about minutes book for postal ballot voting and resolution by circulation? They are not general meetings. They are not board meeting. There is no meeting at all. But recording minutes is mandatory. Then where to record? So in case of postal ballot voting, we need to record the details in minutes book which is kept for general meetings. In case of resolution by circulation, we need to prepare minutes. So in the minutes book which is kept for board meeting. Next one. Now, who will prepare minutes book? For general meeting, there will be a chairman. Next one. For board meeting also, there will be a chairman. Now, this chairman, he need to prepare minutes book. Not only preparing minutes book, he need to even sign on minutes book. So what is the time limit to prepare and sign on minutes book? It is 30 days. So after completion of meeting, within 30 days, the chairman of the concerned meeting is required to prepare and sign minutes book. Now the question is, what about the content of minutes book? So first one. So in that meeting, so some proceedings are happened. Now for those proceedings, we are required to provide fair and correct summary. So no need to provide detailed information. Just provide fair and correct summary of meeting proceedings in the minutes book. That is point number 1. Point number 2. If you appoint any person in that meeting, so give the information about such appointment. So all appointments made at meeting. Say for example, if it is shareholders meeting, what kind of appointments they will make? Appointment of auditor, appointment of director. In case if it is a board meeting, appointment of additional director, appointment of alternate director, appointment of nominee director, and filling up of casual vacancy. And even appointment of KMP will be done in board meeting only. So if in that meeting, if there is any appointment, provide the particulars of all such appointments in minutes book. Next one. So this point is applicable to board meetings only, not to general meeting. So this is applicable to board meeting, but not to general meeting. What that point? So we are required to provide the names of persons who are present at the meeting. So for example, out of 10 persons, 8 persons attended the meeting. We need to provide the names of those 8 people. But this is applicable to board meeting. This is not applicable to general meeting. Next one. Not only those names. So we are required to provide the names of those people who dissented with the proposal. What is meant by dissented with the proposal? Who has not agreed with the proposal? Who casted against vote against to that proposal? That person name need to be included in minutes book. So whose names need to be provided in minutes book? The directors who are present at board meeting and the director who opposed the proposal. So the names of both the people need to be provided in minutes book. This is applicable to board meetings but not to shareholders meeting. Next one. Now chairman want to exclude certain matters even though they are happened at the meeting, but chairman want to exclude them. Is it possible or not possible? Possible. But in order to exclude any matter, he need to exclude that based on 3 points. First point, immaterial. It is not so important. He can exclude. Second one, defamatory. So some of the members used some unparliamentary language. So his chairman is required to record those details also. Not required. Next one, if anything is against to the interest of company, if anything is damaging the interest of company, if any disclosure is damaging the interest of the company, that disclosure is not required. That matter can be excluded. So chairman is having absolute discretion. What is meant by absolute discretion? He alone will decide the matter. No one can decide this matter. Only this person can decide the matter. What is that matter? Whether to include or exclude any matter based on any of these 3 reasons. So it is the absolute power which is given to chairman. Now, so first he will prepare minutes, and those minutes are called as draft minutes. Draft minutes means which is not yet finalized. Now these draft minutes need to be prepared within 15 days of conclusion of meeting. Now these draft minutes need to be circulated to all directors. Now all directors need to ratify it. After ratification, so it will become final minutes. On the final minutes, chairman is required to sign. So this signature need to be completed within 30 days of meeting. So this is the time limit. Now what about this minute book? Can member inspect this minute book? Yes. So where to go? He need to go to registry office because all registers will be kept at registry office. So he need to go to registry office. When to go? During business hours. And he can ask for inspection, that too at free of cost. So fees is not applicable and company is required to provide information immediately without any delay. So who can inspect? Member. So what he is required to do? He need to go to registry office during business hours and without payment of any fee, he can request for inspection and company is required to allow immediate inspection. But what happens if he want to take the copy of the minutes book? So now member need to request the company. That means he need to go to registry office and he need to make a request and he is required to pay some fees. So here fees is applicable. And finally, company will provide the copy within 7 days. Next one. And this inspection hours. So business hours, during business hours, he can go and ask for inspection, but company can restrict this inspection hours to minimum 2 hours per day. So if company said to come during these 2 hours, you are required to go in those 2 hours only. Next one. Committees. Actually, what is the role of committee? So board of directors are having some powers, but they can't do everything. So that's why some powers will be delegated to committees. So what is meant by committee here? Committee is a group of directors which was formed by board of directors. Say for example, in a company there are 10 directors. In board of directors team there are 10 directors. Now 4 directors are allotted to audit committee. 3 directors are allotted to CSR committee. And remaining 3 directors are allotted to risk management committee. Now what they will do? Now they delegated the powers. Now these 4 directors will take care about audit matters. These 3 directors will take care about CSR matters. And finally these 3 persons will take care about risk management matters. Now committees, all committees will work under the supervision of board of directors only. But board of directors will have complete powers, whereas committee will have specific powers. Audit committee related to audit, CSR committee related to CSR, risk management committee related to risk management. Now the question is, who need to be the members of these committees? And who need to be the chairman? So for board of directors, there will be a chairman. Even for committees also, there must be a chairman. So who can be the chairman of the committees? And who can be the members of the committees? Now we are required to discuss about those points. So here, audit committee, NRC. So what is the role of NRC? What is the role of audit committee? They will recommend the appointment of auditor, and that recommendation will be given to board of directors, and board of directors will forward that recommendation to shareholders. Now shareholders will decide the matter, and after appointment, who will take care about the entire audit process? Audit committee only. Next one, NRC, nomination and remuneration committee. So who will recommend director? NRC. That recommendation will be made to board of directors, and board of directors will forward that recommendation to shareholders, and shareholders will make appointment. And who will take care about the performance of directors? NRC. That means if it is related to audit, audit committee. If it is related to directors, NRC. Next one, stakeholders relationship committee. So stakeholders means shareholders, debenture holders, bond holders, or any other person like creditors also. All these people are called as stakeholders in the company. If these stakeholders are having any issue with the company, how to solve them? First they need to approach board of directors. But board of directors don't have enough time to address each and every stakeholder. So that's why they will form a committee called as stakeholders relationship committee. So if any person is facing any issue with the company, they need to communicate that matter to this committee. This committee will handle that matter. Next one, risk management committee. It will deal about how to manage the risk. And finally, CSR committee. So how much amount to spend for CSR, where to spend for CSR, all these things will be taken care by CSR committee. Now, we need to check about composition. Composition means who can be the members of these committees and who can be the chairperson or chairman for these committees. We need to discuss about both these points. First one, in case of audit committee, at least 3 directors are required to present. So how many directors are required? 3 directors are required. Next one, NRC, at least 3 directors are required. SRC, board of directors will decide. That means it may be either 2, 3, 4, 5, depends upon board of directors. Next one, risk management committee. Majority directors of board of directors. Say for example, if board of directors are 10, majority means 6. If board of directors are 12, majority means 7. These many people need to become members of risk management committee. Then what about CSR committee? 3 directors. Now say in case of audit committee, 3 directors. In case of NRC, 3 directors. In case of SRC, board of directors will decide. In case of RMC, majority of board of directors. In case of CSR committee, 3 directors. Now, out of these directors, in case of audit committee, majority directors need to be independent. Then what about NRC? All the directors need to be non-executive members only. That means executive directors are not allowed to become the members of NRC. Only non-executive people are allowed to become members of NRC. And at least 50% people need to be independent. So, see the change here. Here it is majority. Majority means more than 50%. So here is at least. At least means more than or equal to 50%. That is the difference. Next one. SRC, board of directors will take care about it. Risk management committee, no sublimit. CSR, there is a sublimit. Out of these directors, at least 1 director need to be independent. Next one. Then who can become the chairperson? For audit committee, only independent director. So for NRC, only independent director. For SRC, Independent director is not required, but he must be a non-executive director. Risk management committee, any director, there is no problem at all. And for CSR committee, there is no such requirement. That means any person can become chairperson. So now say for audit committee, at least 3 directors are required and majority directors need to be independent. For NRC, at least 3 directors are required. All directors need to be non-executive. Minimum 50% need to be independent. SRC, board will decide. So RMC, majority of board of directors. CSR, at least 3 directors, out of which at least 1 must be independent director. And what about chairperson? Audit committee, NRC, independent director. SRC, non-executive director. Risk management committee, any member of the board of director, nothing but any director. CSR, no such provision. Next one, in case of CSR, there are some note points. So actually for CSR committee, so how many people are required? 3 directors, out of which 1 shall be independent director. Now what happens if that company does not have independent director requirement? So for example, if it is a private company. So for private company, independent director requirement is not there, but it is getting 5 crores profit. It is getting 5 crores profit. But what about independent director requirement? Not required. That means it is required to follow CSR because of 5 crore requirement. But what about having independent director? Not required. What to do here? Remove that point. So how many directors are required? 2 directors are required. No. Out of 3, 1 must be independent. That means 2 are normal director, 1 is independent director. If you remove independent director requirement, it will become 2 normal directors. So in that situation, 2 normal directors are sufficient. Then what about private company? So in case of private company, what about the limit of number of directors? 2 to 15. What happens if that private company is having only 2 directors? Then 2 directors are sufficient. No need to have 3 directors. Next one, foreign company. Are foreign companies required to contribute for CSR in India? Yes, because they are having place of business in India. They are getting net profit in India. On that net profit, they need to spend at least 2% in India as CSR. Now, who can become the member of CSR committee? All the directors will stay outside India. All the directors will stay outside India. Then who will become member of CSR committee in India? So, in this case, what they are required to do means, they are required to appoint 2 persons as members. Then who are those 2 persons? One is Indian representative. Who is Indian representative? Whenever a foreign company want to open a place of business in India, they can open, but they need to appoint an Indian representative here. That means if ROC want to communicate anything with the company, he will communicate with that Indian representative. That Indian representative need to be the member of CSR committee and any other person who is nominated by the company. That means total 2 persons are required. One is Indian representative of that foreign company and second one is any person nominated by the company. Next one, limits. Actually, if a person want to become director, in how many companies he can become director? 20 companies, and there is a sublimit of 10 public companies. Now the point is, in how many committees a person can act like member? So previously we discussed about in how many board meeting, in how many board of directors teams he can become director. So that is 20 and 10. But in case of committees, in how many committees he can become member? Maximum 10. In how many committees he can act like chairperson? Maximum 5. Next one, audit committee. So first of all, having audit committee is not mandatory for every company. It is mandatory for only few companies. What are those few companies? Take just like independent director. So in case of listed public company, all companies need to have audit committee. In case of unlisted public company, if it is satisfying criteria, they need to have audit committee. If it is private company, not applicable. In case of unlisted public company, what is the criteria? Same criteria, just like independent director. Paid up capital, turnover, loans plus debentures plus deposit. So what about paid up capital? More than or equal to 10 crores. Turnover, more than or equal to 100 crores. Loans plus debentures plus deposits, outstanding amount, more than 50 crores. So it is just more than 50 crores. Next one. Then what about composition of audit committee? Just now we discussed about the composition. How many people are required? At least 3 directors are required. Out of 3 directors, majority directors need to be independent. Next one. All committee members, including chairperson. Who can be the chairperson of audit committee? Independent director. All the members, including chairperson, must be capable of reading and understanding financial statements. And after audit report, the company is required to issue board report. In that board report, they are required to discuss about composition of audit committee. Who are the members of audit committee? Who is the chairman of the audit committee? That composition need to be disclosed in board report. Who will issue board report? Board of directors. When they will issue? After audit report. And what is the responsibility of audit committee? Actually, committee is having recommendatory role. So it is not appointing authority. It is recommending authority. It will recommend the appointment of auditor to board of directors, and board of directors will forward that recommendation to shareholders, and shareholders will appoint the auditor. What happens if audit committee makes any recommendation to board of directors and board of directors rejected that recommendation? It need to be disclosed in board report. That's it. Then what about the key responsibilities of audit committee? First one, recommending. What to recommend? Appointment, remuneration, terms and conditions of auditors. But appointment will be made by shareholders. Next one. And who need to review auditor's independence, auditor performance, audit effectiveness? Audit committee only. So they will review whether auditor is having independence or not, whether auditor is performing well or not, whether audit is carrying effectively or not. Who will check? Audit committee. Next one. Who will examine financials and audit report? Initially, audit committee. Who will approve related party transactions? Audit committee, either by giving a separate approval or a combined approval, which is nothing but called as omnibus approval. Next one. Who will verify intercorporate loans and investments? Audit committee. What is meant by intercorporate loans and investment? A Limited want to give loan to B Limited. This is called as intercorporate loan. Or A Limited want to buy the shares of B Limited. Intercorporate investment. So who will scrutinize? Who will verify all these loans and investments? Audit committee. Next one. Who will check the valuation of assets? Audit committee. Who will evaluate internal financial controls and risk management? Audit committee. And who will monitor the fund usage? So for example, a company went to IPO to raise 10,000 crores. And company want to use this 10,000 crores in order to start some manufacturing plants. Now, who need to check whether this 10,000 crores is being utilized for that purpose or not? Audit committee. And for this purpose, that means in order to do all these things, audit committee can even hire an external professional like CA, CMA, CS. So they can take external advice in order to investigate above matters. And who will pay remuneration to those people? Company. Why audit committee will pay money? So company will give money to audit committee will pay money to that professional. And that professional will help audit committee to fulfill all these key responsibilities. Next one, whistle mechanism. So what is meant by whistle mechanism? For example, so there is a director or employee in the company. So this option is available to director or employee. So if they find any fraud or any irregularity, any scam in the company, so they are required to report this matter to audit committee chairman. They are required to report this matter to audit committee chairman. Who can be the chairman of audit committee? Independent director. Sir, what happens if audit committee requirement is not there? Then it will be given to a director who was nominated by board of directors. He is not nominee director. He was the director who was authorized by board of directors in order to take care about whistle mechanism. So nominated by board of director. That means if audit committee is available, the report is given to audit committee chairman. If audit committee is not available, the report is given to a director who was nominated for this purpose by board of directors. Now, who need to report? Directors or employees. What need to be reported? Irregularities, frauds. To whom? Audit committee chairperson if audit committee is available, or any director who was nominated if audit committee is not available. Now these people will take care about the matter. So this is not whistleblowing. In case of whistleblowing, so you need to communicate this matter to government. Now they will take the action. But in this case, it is done internally. So that's why this is not called as whistleblowing. We need to call this aspect as whistle mechanism. Then for which companies this concept is applicable? So we need to classify the companies into two categories only. Listed companies, unlisted companies plus private companies. One category. So listed companies one category, unlisted company plus private company another category. So in case of listed company, all listed company need to follow this visual mechanism concept. Then what about unlisted public companies as well as private company? So if they are accepting deposit from public, actually a company can take deposit from two categories of person. One is its own members, other one is public. If any company is accepting deposit from public, even though it is 1 rupee, then visual mechanism concept is applicable. There is no monetary limit here. So even 1 rupee is accepted as deposit from public, then visual mechanism concept is applicable. Next one, we need to check borrowings. Borrowings from banks and financial institution. If it is more than 50 crores, then visual mechanism concept is applicable. Now say for which companies it is applicable? Listed public companies, all companies, unlisted public companies plus private companies. If it meets criteria, what is the criteria here? If it accepts deposit from public for any amount. And what about second condition? It is having loans from banks and financial institution exceeding 50 crores. Okay, by this we completed about board meetings and procedure. Okay, first one, it is about OPC. First of all, what is the difference between OPC, private company and public company? OPC means a company which is having only one person as a member. What about private company? It must have minimum paid up capital as may be prescribed. In its articles of association, it must contain 3 clauses. Clause number 1, it must restrict transfer of shares, not any other kind of security, only transfer of shares. Next, clause number 2 prohibits public issue of securities. All securities got covered here, but it is only public issue of securities. What about private issue of securities? Allowed. And third one, limits maximum number of members to 200. And how to calculate 200? Exclude employees. And all joint shareholders need to be counted as one member. That is about private company. What about public company? Any company other than private company is called as public company. Sometimes private company will also become public company. When that private company is a subsidiary of public company, then that private company will be treated as deemed public company. Next one, OPC. So the name shall end with OPC Private Limited. Private Limited. Private Limited. Public Limited. Limited. So OPC Private Limited. Private Limited. Limited. Now what about number of members? Only 1. 2 to 200. 7 to no limit. 3 is for directors. Next one, what about directors? 1 to 15, 2 to 15, 3 to 15. Next one. Now we need to specifically discuss about OPC. So OPC, how many persons will be there? 1 person. But if anything is happened to that 1 person, we need to have another person who will act like a nominee. That means how many people are required? 2 people are required. 1 person need to act like member, another person need to act like nominee. Now the point is, so who can become member of OPC? Who can become nominee of OPC? So in order to become member or nominee of OPC, first of all that person must be a natural person, nothing but individual. That means body corporates are not allowed to become member of OPC. Body corporates are not allowed to become nominee of OPC. Only individuals are allowed, that is natural persons are allowed. And that person must be a major. That means he must completed age of majority. Next one, he must be Indian citizen. That means foreign citizens are not allowed. Then what about resident? He may be a resident of India or he may be a non-resident Indian also. Both are allowed. But in case of type of person, only natural person. In case of age factor, only majors. In case of citizenship, only Indian citizenship. In case of residential status, that person may be a resident, that person may not be a resident. So only the person who satisfies all these conditions can become either member or nominee. Next one. Now in case of private company, any person, there is no restriction. In case of public company, any person, there is no restriction. Next one. Now if a person is acting like member in one OPC, he can't become member in another OPC. That means maximum at a time he can hold membership in only one OPC. The same is applicable even for nominee position also. If that person is nominee in one OPC, he can't become nominee in another OPC. But that person can act like member in one OPC, nominee in another OPC. Now, the place where he is nominee, in that place, what happens if anything is happened to member? Then this nominee will become member. Now, how many memberships are there for that person in OPCs? 2. Now, 180 days time limit will be given. He need to withdraw one membership. Next one. But in case of private company, you can become member of unlimited companies. In case of public company, you can become member of unlimited companies. There is no restriction at all. But in case of OPC, maximum one OPC as a member, maximum one OPC as nominee. Next one. What kind of business activities OPC can't carry? It can't carry charitable activities. That means it cannot be incorporated as Section 8 company. That means Section 8 company may be a private company or public company. It shall not be an OPC. Next one. It cannot carry non-banking financial activities, non-banking investment activity. Financial activities means taking deposits, giving loans. Investment activities means buying securities of other entities. So both are not allowed for OPC. Next, what about conversion of OPC? OPC into private company, possible. OPC into public company, possible. OPC into Section 8 company, not possible. Next one. So change of nominee case. So in what cases nominee will be changed? 3 different situations. One is withdrawal by nominee itself. That means nominee want to withdraw from the nominee position. Second one, removal of nominee by member. Now member want to remove that nominee, he want to appoint some other person as nominee. And third one, if anything is happened to member, now nominee will become new member and that new member need to appoint new nominee. So member expired case. Now what procedure company is required to follow here? First one, if nominee want to withdraw from nominee position, he is required to give notice to member as well as OPC. Now what member will do? Member will appoint new person as nominee and he will communicate that matter to OPC. Now OPC got 2 information. First information about discontinuation of old nominee. Next one about joining of new nominee. Now OPC will communicate this matter to ROC. Next one. In case of removal case, who will initiate? Member. So member will give removal notice to nominee. Member will give removal notice to OPC. At the same time, along with removal notice, he will give another notice for appointing new nominee. Now, both these informations will be passed by OPC to ROC. Next one. In last case, now nominee become new member. Nominee become new member. Now that new member will communicate with OPC about the expiry of previous member, about his appointment as new member, and about the appointment of new nominee. Now OPC will communicate that matter to ROC. In all the 3 cases, the time limit available to OPC is 30 days. 30 days. And 30 days. And the time limit available to appoint new nominees, so for member, 15 days. Here no time limit is applicable because the moment he removes the old nominee, the same moment he will propose new nominee. That's why time limit is not applicable. And in last case, 15 days. Now say if member nominee want to withdraw his nominee position, what to do? Nominee need to communicate that matter to member as well as OPC. Within 15 days, member need to appoint new nominee and communicate to OPC. Now within 30 days, OPC will give that matter to ROC. Then what about second case? Member will communicate about removal to nominee as well as OPC. At the time of removal only, he will communicate about the appointment of new nominee also. Now OPC within 30 days need to communicate that matter to ROC. Now what happens when nominee become member? So he need to appoint new nominee and within 15 days he need to communicate this matter to OPC and OPC will forward this matter to ROC within 30 days. And in all these cases, you are not required to update nominee clause of MOA. So actually, what are the different clauses of MOA? So N, R, O, C, L and A. So this is the order we need to remember. N stands for name clause, R stands for register office clause, O stands for object clause, C stands for capital clause, L stands for liability clause, A stands for association clause, extra N if it is OPC, that is nominee clause. So name clause. What about the content of name clause? Name of the company. Next one, registered office clause. The name of the state where registered office is situated. Object clause. Main objects, incidental objects. In case if company is engaged in other objects, even other objects need to be provided here. Then what about capital clause? Authorizer capital. It must be given in terms of number of shares, each share face value, total value. Next one, liability clause. Type of liability of members, whether it is limited liability or unlimited liability. If it is limited liability, whether it is up to unpaid value of shares or up to guarantee amount. Next one, association clause. We need to provide the details of subscribers who will become members after incorporation of the company. Nominee clause. It is applicable only to OPC. We need to provide the details of nominee. Now the point is, in future, if there is any change in members, no need to update association clause. In future, if there is any change in nominee, no need to update nominee clause. So alteration is not required for association clause and for nominee clause. That means the names which are provided at the time of incorporation, those names will remain forever. So what about changes? Even though there are changes, no need to update both these clauses. So that's why in case of alteration, in case of change of nominee, either it is withdrawal case or removal case or member expiry case, in whatever the situation it may be, so no need to update nominee clause of MOA. So by this we completed about OPC, private company, public company, even about the content of MOA. Next one, benefits available to OPC. First one, it is not required to conduct AGM. Reason? Only one person is available. So AGM, EGM, both are not applicable. Completely general meeting concept is not applicable. Next one, then how financials will be approved? That one person will sign, it will be sufficient. Actually, in case of OPC, that one member will act like one director also. That means board meeting, conducting board meeting, not required. Conducting general meeting, not required. Then what about the matters that need to be approved by board meeting? That one person will sign. What about the matters that need to be approved by shareholders? That will be approved by that single member. That's it. Then what about preparing cash flow statement? Not required. So in financial statements, we are required to prepare balance sheet, profit and loss account, cash flow statement, statement of changes in equity, and notes to account. But if it is OPC, cash flow statement is not required. But what about tax rate? It is same. There is no difference. So just like remaining companies, the tax rate is applicable to OPCs also. Next one, conversion of public company into private company and private company into public company. So in articles of association, we discussed about three clauses. One is restriction on transfer of shares. Second one is prohibition on public issue of securities. Third one is limitation on maximum number of members. Now, if these three clauses are present in articles of association, that company is called as private company. If these three clauses are not there in articles of association, it will be called as public company. Now the point is, so in a company's AOA, these 3 points are present initially, but company removed them. What will happen? When they are present, it is called as private company. When they are removed, it will become public company. That means by removing those 3 clauses, private company will become public company. Similarly, by adding those 3 clauses, public company will become private company. Then what procedure they are required to follow? So first one, private to public. Second one, public to private. In both cases, board meeting is required. Purpose? What is the purpose of board meeting? To call general meeting. To call general meeting, they will pass board resolution. Now they are required to conduct general meeting, they are required to pass SR. In both cases, SR is required. Next one, thereafter they are required to get CG's approval. So CG's approval is required. But for private to public company, CG's approval is not required. CG's approval is required in order to convert public company into private company. Because public company means lots of people, public got involved. So all of a sudden you are converting that company into private company, which is nothing but a closely held company. So that's why CG's approval is required in that situation. But to convert private company into public company, not required. And finally, communicate the matter to ROC so that he will cancel the old registration and he will issue new certificate of registration. Yes, while filing the documents with ROC, you are required to file altered memorandum and articles copies also. Because when you convert your company, you need to update both MOA and AOA. So that's why while filing with ROC, provide altered MOA plus altered AOA along with CG's approval order. So here it is not required, but here it is required. Next one, Section 8 company. So what is meant by Section 8 company? The company which is formed for chargeable activities is called as Section 8 company. So what to do with its income? It must be utilized for the purpose for which it was created. What about using that money for any other charitable purpose? Not allowed. What about payment of dividend? Prohibited. Prohibited. And in order to run Section 8 company, so registration itself is not sufficient. You are required to take a separate license called as not for profit license, that is NPL. Who will provide that not for profit license? Central government. Next one. Then what about the usage of the words limited, private, limited? Actually, if you want to create Section 8 company, it cannot be created as OPC, but it can be created as private company or public company. If it is private company, what about having the word private limited? Optional. If it is public company, what about the having the word limited? Optional. Next one. Then who can become the member of company? Normally, except in case of OPC, so any person can become member of company, whether he is natural person or artificial person. But what about partnership form, which is neither natural person nor artificial person? It cannot become member. It cannot become member in any company, but it can become member in Section 8 company. Next one. To alter MOA and AOA, what is required? SR is required. With SR, you can alter any clause of MOA and any clause of AOA. But in case of Section 8 company, along with SR, CG's approval is mandatory. Next one. Revocation of Section 8 license. So what happens when Section 8 provisions are not followed by the company? What happens when license conditions are not fulfilled by the company? What happens if company is operated in fraudulent manner? In all these cases, after providing a reasonable opportunity of being heard, central government will revoke the license. Now, what is the immediate consequence of revocation of license? So previously, if that company is not using the words limited, private, limited, now it need to use those words. But this is not final consequence. This is just immediate consequence. Then what about the final consequence? The company may be either liquidated or it may be amalgamated with another Section 8 company having same objective. Then what about liquidation proceedings? The company is liquidated. There is some surplus. Actually, if any company is liquidated, if there is any surplus, that surplus will be taken by members. But in case of Section 8 company, it is not like that. So it need to be given to another Section 8 company having same objectives, or it need to be transferred to a government fund called as rehabilitation and insolvency fund. But this got amended. This point got amended. It is not rehabilitation and insolvency fund. It is insolvency and bankruptcy fund. Next one. Is it possible to convert existing commercial company into Section 8 company? Yes. But OPC cannot be converted into Section 8 company. But a regular private company or public company can be converted. But for that purpose, they are required to change MOA. They are required to change AOA also. And professionals are required to give declaration. What kind of declaration? Everything is complied. And MOA and AOA are redrafted in order to meet with the Section 8 requirements. So like that, they need to give that declaration. And they are required to give projected income and expenditure account. So actually, it is P&L account, but for chargeable entities, it will become income and expenditure account. So they need to give projected information. So for how many years? 3 years. Next one. Content of MOA completed. Next one. Doctrine of ultra-virus indoor management constructive notice. So first of all, what is meant by doctrine of ultra-virus? First of all, what a company can do. It can do anything within the powers given by MOA and AOA. What happens if company did anything beyond MOA? Ultra-virus to MOA. What happens if company did anything beyond AOA? Ultra-virus to AOA. What happens if company did anything which is beyond both MOA and AOA? Ultra-virus to both. Now the point is, if company did any ultra-virus activity, what is the validity of that transaction? void, void, and void. And what about the liability of the company? Not liable, not liable, and not liable. That means all ultra-vires transactions are void. And for such transactions, company is not liable. Now the point is it possible to ratify that ultra-vires act by shareholders? Yes, but that is possible only in case of AOA. So in case of AOA, if it is ratified, then this void transaction will become valid transaction and this no liability will become liability situation. But what about ratifying ultra-vires to MOA? What about ratifying ultra-vires to both MOA and AOA? It is not possible because MOA got involved there. So ratification of ultra-vires to MOA is completely not possible. That means the transaction is forever void and company is forever not liable. Next one. What about doctrine of construct notice and ignore management? Now there is an outsider. He want to make a contract with the company. So when he want to make a contract with company, he must know about public information. He is not required to know about private information. Example for public information, MOA and AOA. Example for private information, passing ordinary resolution. Now the point is, so when an outsider want to make any contract with the company, he must read MOA and AOA. So without reading MOA and AOA, if he made any contract with the company and that contract is proved to be an ultra-vires activity, then he can't make company liable by claiming that person as innocent. Next one. Then, so outsiders, while dealing with the company, they are not required to know about private information like whether war is passed in general meeting or not. If without knowing about this information, if outsider makes any contract, but later it was proved that, so this is ultra-vires transaction. Now what will happen? In this case, he can make the company liable by saying that person is innocent. Because in first situation, it is public information. It is a duty of that person to know about it. He can't claim himself as innocent. But in second situation, it is a private information which is not available to public. That's why he can claim himself as innocent and he can make the company liable even though it is an ultra-vires transaction. And who is saying to read MOA and AOA before making contract? Doctrine of constructive notice. And who is saying to ignore internal matters before entering into contract? Doctrine of indoor management. So in case of doctrine of constructive notice, for ultra-vires transaction, company is not liable. In case of doctrine of indoor management, for ultra-vires transactions, company is liable. That means doctrine of constructive notice aims to protect company. It is against to outsiders. What about indoor management? It aims to protect outsider and it will be against to company. So by this we completed chapter number 1. Chapter number 2, investments and loans. First one, investment layers. So what is meant by investment layer? So for example, A Limited is there. A Limited invested more than 50% of shares of B Limited. Now what is the status of B Limited? So B Limited is the subsidiary company. Now what happens if B Limited is an investment company? That means its principal business is acquiring securities and selling securities. Now B Limited will be called as investment company also. So why it is called a subsidiary company? More than 50% of its share capital is held by A Limited. Why it is called as investment company? Because its principal business is to buying and selling securities. Now the same company, that is B Limited, is both subsidiary company as well as investment company. Now what is the name given to this company? It is investment layer. It is called as investment layer. So this is investment layer number 1. Now if B Limited invested in C Limited and C Limited will become subsidiary company and C Limited is also investment company just like B Limited. Now this C Limited will become investment layer number 2. And if C Limited want to invest in another investment company, it is not possible. Because a company can have maximum 2 investment layers. So anything more than 2 is not allowed. But there are 2 exceptions to this rule. What are those 2 exceptions? So for example, there is a country. In that country, there is no restriction on number of layers. So there is a company called as B Limited. This B Limited is having investment layer number 1, investment layer number 2, investment layer number 3. Now, in India, there is a company that is A Limited. Now A Limited acquired this B Limited. When A Limited acquired this B Limited, now how many investment layer will be there for A Limited? 3. If B Limited is also investment company, it will become 4. Then is it allowed or not allowed? Yes, it is allowed. This is exception number 1. Exception number 2. Now there is Indian company. So it can have investment layer number 1, investment layer number 2. Now a law or NCLT or any other authority compelling this Indian company to have one more investment layer, that is 3. Now because in order to comply with any law or rules or regulations or order of any authority, so it is having third investment layer also. Is it allowed or not allowed? Allowed. That means what is the general rule? A company cannot have more than 2 investment layers. But if it is having extra investment layers in order to comply with any act requirement or any authority requirement, then yes. Or it is having more than 2 investment layers by acquiring another company which is situated outside India, where there is no restriction on number of investment layers, then also it is allowed. So this one related to investment layers. Second one, it is about LSGA transactions. LSGA transaction. What is L? Loan given by the company. S, securities given by the company. G, guarantee given by the company. A, acquisition made by the company. So in case of L transaction, what will happen? In case of L transaction, what will happen? So company will provide loan to a person. In case of S or G transaction, what will happen? This person will take loan from some other person. From some other person he will take loan. Here also from some other person he will take loan. But in this case the company is providing its property as security. So this person is taking loan not from company. He is taking loan from other person. But what this company is doing? It is providing its own property as security. In this case, this company is acting like a surety, that is guarantor. That means this company is providing guarantee. So this is L transaction, loan given by the company. This is S transaction, security given by the company. This is G transaction, guarantee given by the company. In case of L transaction, the company itself will provide loan to this person. In case of S or G transaction, loan will be provided by some other person. This company will provide either property or surety, that is guarantee. Then what about A transaction? So company will buy shares of another company, debentures of another company, bonds of another company. This is called as acquisition. This is called as A transaction. Now the point is provisions applicable to LSGA transactions. So first we need to check the limit here. So if the proposed LSGA transaction is within the limit, whose approval is required? If it is beyond the limit, whose approval is required? So if it is within the limit, whose approval is required? So board of directors approval will be sufficient. Next one, if it is beyond the limit, board of directors approval is required. Shareholders approval is also required. Next one, if this company is having any loan from bank or financial institution, that bank or financial institution permission is also required. Then what about this situation? So bank or financial institution permission is required, but only when there is payment default. That means in this situation, if there is no payment default, approval is not required. That means if there is payment default, then only this person approval is required. But here, whether there is payment default or not, in both the cases, getting the approval of bank or financial institution is mandatory. Now, board of directors, what kind of resolution they are required to pass? Unanimous resolution. So they are required to pass unanimous resolution. In case of beyond limit case, so what kind of resolution board of directors need to pass? Unanimous resolution. What kind of resolution shareholders are required to pass? Special resolution. So that means if the proposed LSGA transaction, if it is within the limit, by taking unanimous consent of board of directors, plus by taking the approval of bank or financial institution, if the company is having payment default, they can make LSGA transaction. Then what about beyond limit case? They need to take the unanimous consent of board of directors. They need to take the special resolution. They need to take the permission of bank or financial institution irrespective of payment default. Now the biggest question is, what is the limit? How to take the limit? The limit is, so we need to take 60% and we need to take 100%. 60% of what? Paid up capital plus free resource plus security premium account. Next, 100% of what? Free reserves plus security premium account. And among these two amounts, which amount we are required to take? Whichever is higher. So we need to take whichever is higher, that will be the limit. Now, if the existing LSZA transaction value, that means existing loans, existing securities, existing guarantees, existing investments. So we need to take existing values and we need to take proposed LSZA transaction value. If the total existing LSZA value along with proposed LSZA value is exceeding this limit, then these approvals are required. If it is not exceeding the limit, these approvals are required. So what is the limit? 60% of these three amounts, 100% of these two amounts, whichever is higher. Next one. Now, what about disclosure? All LSZA transactions need to be disclosed in financial statements separately. So we can't match this loan transaction with other loans. We can't make this security or guarantee transaction with other security or guarantee transaction. We can't make this acquisition with other acquisitions. We need to disclose all these LSZA transactions separately. Next one. This is not applicable to registered intermediaries. Registered intermediaries means stockbroker, stock exchange, depository banks. All these things are called as registered intermediaries. They are registered with SEBI. So for them, different rules are applicable. These Companies Act provisions are not applicable. Then what about rate of interest in case of L transaction, that is loan transaction? So we need to take the government securities and we need to take the yield rate. So if the loan tenure is 5 years, we need to take 5 years government securities and we need to compare with yield on such securities. If 5 years government securities yield is 10%, our rate of interest must be at least 10%. So like this we need to take. Sir, what happens if the loan tenure is 1 year? We need to compare with 1 year government security. If 1 year government security yield is 12%, our rate of interest must be at least 12%. Next one. If company took any deposit, either from its members or from public, and if there is any payment default with respect to those deposits, the company is not allowed to make LSZA transactions. Because if company is making LSZA transaction, it means it is having huge fund. That's why it is giving loans or securities or guarantees or acquiring securities of other company. When they are having huge funds, first they need to repay deposit amount. So without repaying deposit amount, they can't go for LSZA transactions. And for LSZA transactions, separate register need to be maintained and it will be kept at register office. Any member can inspect the register without paying any fee. But if they want to get any copy, they are required to pay the fees. And within how many days company need to provide the copy? 7 days. Next one. Let's discuss about one more point, that is point number 9. So this is about LSG. This is about A. LSG provisions are not applicable for these 4 situations. A provisions are not applicable for these 3 situations. So when loan security guarantee provisions are not applicable, when it is a banking company, insurance company, housing finance company, or it is an industrial financing company. That means it will provide loans to industry people. Why LSZ provisions are not applicable for these 4 companies? Because providing loans, securities, guarantees are nothing but their ordinary course of business. Next one, acquisition. So acquisition related provisions are not applicable to investment company, NBFCs, non-banking financial companies whose principal business is investment activity, that is acquisition of securities, and rights issue. So what is meant by rights issue? Whenever company want to offer new shares, it will be offered first to existing shareholders at a lower price. It is called as rights issue. Now in all these 3 cases, acquisition related provisions are not applicable. And who will make rules? Central government. Next one, question number 2. So for example, there is a company named as ABC Limited. It want to make investment. On whose name this investment must be recorded? When the investment is made by ABC Limited, it must be recorded on the name of ABC Limited only. So can company have its own investment on the name of some other person? Generally, no. If company made any investment, that investment must be recorded only on the name of the company, not on the name of any other person. But in few exceptional cases, it is allowed. What are those exceptional cases? So for example, there is a company A Limited, another company B Limited. Now A Limited want to make B Limited as wholly owned subsidiary company, and B Limited is having 10,000 shares. It is having 10,000 shares. Now A Limited want to make B Limited as wholly owned company, wholly owned subsidiary company. How is it possible? How is it possible? It need to acquire 10,000 shares. If it acquires entire 10,000 shares, B Limited will become wholly owned subsidiary company. But B Limited is a public company. Minimum 7 members are required. If it purchases entire 10,000 shares, it will become single member. And this company will become OPC. And moreover, in case of OPC, artificial person is not allowed to become member. So A Limited is an artificial person. Now everything will be disturbed. Now how to make B Limited without disturbing the provisions of company law? So in this case, 9,994 shares need to be purchased by A Limited directly. That means these 9,994 shares will be recorded on the name of A Limited. What about remaining 6 shares? A Limited will nominate 6 people. Nominee 1, nominee 2, nominee 3, nominee 4, nominee 5, nominee 6. Each person will take 1 share. Now say total number of shares will become 10,000. So what is the direct holding? 9,994 shares. What about indirect holding? 6 shares. Total holding 100% shares. That means now B Limited will become wholly owned subsidiary company, and number of members are 7. Everything is complied now. But in this case, what about the investment of 6 shares? It is not recorded on the name of the company. It is recorded on the name of 6 nominees who are nominated by the company. Is this allowed or not allowed? Answer is yes, it is allowed. Next one. Now company is having securities, and those securities are transferred to a bank. Why company transferred security to bank? That means here the investment which are made by the company, now they are transferred to the name of bank. Why company transferred investments to the bank means, first one, to realize income. That means the bank will act like asset management company. So it will manage the investments made by the company, and it will get the income like interest, dividend. So now the investment is made by company, but it is recorded on the name of bank. Is it allowed or not allowed? Allowed, because it is made to get income. Next one. Same. Again company made the investment, but it is registered on the name of bank. Why it is registered on the name of bank means to make sale. That means this bank is nothing but an investment company. It will buy securities and it will sell securities on behalf of its clients. Now, in order to make sale, company registered the securities on the name of the bank. So in this case, so the investment is made by company, but it was recorded on the name of bank. So is it allowed or not allowed means allowed, because it is made in order to make sale. Next, third one. Now company so made investment, but that investment is recorded on the name of the bank because company want to take a loan from the bank. That means company offered this investment as security. As a security, it registered the shares on the name of bank. Now in this case, is it allowed or not allowed? Allowed. Actually investment is made by company, but it is recorded on the name of bank, and the purpose is to get the loan. So even this is also allowed. That means for getting income, for facilitating in sale, or for getting loan. If company made any investment, that investment can be recorded on some other person name, but not on the name of company. And all these transactions are allowed. Next one. And one more point. So actually shares are of 2 types. Physical shares, demat shares. What is the difference between physical shares and demat shares? In case of physical shares, you will get ownership based on share certificate. But what about demat shares? So it will be in your demat account. As long as they are in your demat account, you are the owner of those shares. Now in case of demat shares, what you are required to do? So you are required to open a demat account with whom? Either NSDL or CDSL. So open a demat account with NSDL or CDSL, and these are called as depository banks. Now you will get a demat account. In this demat account, you can buy the securities. All your securities will be credited to demat account. When you sell the securities, all are debited from this demat account. Now, if you purchased Reliance Industries Limited shares, Now, according to Reliance Industries Limited database, the shares will be registered on the name of NSDL and CDSL, but not on the name of the investor. So, according to books of Reliance Industries Limited, who is the member of the company? NSDL, CDSL, not the real investor. But who will get dividend? Real investor. Who will get voting right? Real investor. Who will get bonus shares or right shares? Real investors. But according to records of Reliance Industries Limited, who is the owner of the shares? NSDL, CDSL. Now, investment is made by investor, but they are kept on the name of NSDL, CDSL. Now, the question is it allowed or not allowed? Yes, this is also allowed. So, let's see question number 3. So, which is about deposits. So, first of all, which company can accept deposit? Every company can accept deposit, whether it is private company or public company. So, whatever it may be, it can accept deposit. But the difference lies in from where they can accept deposits. So, for example, if company is public company and if the company is private company, so from where they can accept deposits? So, in case of public company also, we need to make two classifications: eligible public company, ineligible public company. That means total 3 categories: eligible public company, ineligible public company, private company. Now, from where they can take deposits? Eligible public company from public or from members. Then what about ineligible public company? Only from its members. What about private company? Only from its members. That means only one company is allowed to take deposits from public. What is that company? Eligible public company. Now the question is, when a company is called as eligible public company. So in order to become eligible public company, first of all, it must be a public company. And second one, it need to satisfy criteria. And third one, it is required to pass either OR or SR depending upon the situation. So what are the conditions that need to be satisfied? First one, it must be a public company. Second one, it must satisfy the criteria. And third one, it must pass either OR or SR depending upon the situation. So we know about OR, SR. We know about public company. What about criteria now? So here the criteria is, we need to take net worth, we need to take turnover. So how much net worth the company need to have? Minimum 100 crores. How much turnover? Minimum 500 crores. So if this criteria is satisfied and this company is a public company, and if it passes necessary resolution, then it can accept deposit not only from members but also from public. Next one. Now how much amount they can accept as deposit? So actually we classified the companies into 3 categories. First one, private company. Second one, ineligible public company. And third one, eligible public company. So how much amount they can accept as deposits? First one, private company. Existing deposits plus proposed deposit. It shall not exceed 100% of paid up capital plus free reserves plus securities premium account. Then what about ineligible public company? Same. Existing deposits plus proposed deposits shall not exceed. Instead of 100%, we need to take 35% of paid up capital plus free reserves plus security premium account. Then what about eligible public company? Actually, in case of private company, it can only take deposits from members. In case of ineligible public company also, it can take deposits only from its members. But what about eligible public company? It can take deposits from members, from public. In case of members, it shall not exceed 10%. In case of public, it shall not exceed 25%. Same rule. Existing plus proposed shall not exceed 10% of paid up capital, free reserves, security premium. Here also, existing plus proposed shall not exceed 25% of paid up capital, free reserves, security premium account. Now, what happens if this eligible public company is a government company also? Then, instead of 2 separate limits, a combined limit of 35% is applicable. That means they can take money either from members or from public or from both, and the total amount shall not exceed 35%. Next one. Then what about the term of the deposits? So minimum term 6 months and maximum term 36 months. So if company want to take deposit, the minimum term shall be 6 months and the maximum term shall be 36 months. Now, is there any exception to this rule? For maximum term, there is no exception. For minimum term, there is an exception. So for small deposits, it can take deposits for a tenure less than 6 months, but in the situation, the minimum tenure shall be 3 months. So with minimum tenure of 3 months, they can accept small deposits even though it is less than 6 months term. Then what about small deposit? What is meant by small deposit? Very simple, which is less than or equal to 10% of paid up capital plus free reserves plus security premium account. So if the deposit amount is less than or equal to 10%, it is called a small deposit. So small deposits can be accepted by the company for a tenure less than 6 months, but in that situation, the minimum tenure shall be 3 months. Next one. Now, deposits are classified into two categories: secure deposits, unsecured deposits. So secure deposit means the total deposit amount including interest. So the entire amount need to be secured by a property. So for example, if deposit amount is 10 lakhs, if interest amount is 2 lakhs, then if the property value which is offered as security, if it is sufficient to pay 12 lakhs, that is, it is having a value of more than or equal to 12 lakhs, then it is called as fully secured, and all fully secured deposits are called as secure deposits. Now what happens if there is no property at all? Unsecured. What happens if there is property but its value is 6 lakhs only? This is partially secured, but this will be classified as unsecured only. That means fully secured will be classified as secure deposits, partially secured plus completely unsecured will be classified as unsecured deposit. Wherever the word deposit is used, the company need to code the deposit as unsecured deposit only. But if it is a secure deposit, they can simply state it as deposit. If it is unsecured, they need to clearly state that it is unsecured deposit. So that is the obligation on part of company. Next one. Now, whenever a company offers its property as security, it is required to create charge. So here also charge is required. Then on whose favor the company is required to create charge? In order to represent all depositors, a person will be appointed called as trustee. So trustee of depositors. Now, when a company offers any property as security for deposits, on that property, the company is required to create charge in favor of depositors trustee. So what will happen if charge is created in favor of depositors trustee? Whenever company makes any default in payment of deposit amount, either principal amount or interest amount, this person will sell that property. This person will realize the money, and this person will use that money in order to pay deposit money. So then what is the time limit to create the charge? Within 30 days. Within 30 days of acceptance of deposits, the company is required to create charge in favor of trustee for depositors. And who is trustee for depositors? He is a representative for all the depositors. Next one. So next one, procedure. How to take deposits? So procedure to take deposits from members. First, the company is required to prepare a circular along with a statement, which is nothing but a certificate. Second one, it need to file such circular along with statement with ROC. Later, it need to issue the circular along with statement to members. Next one, now members will give money. After giving money, the company is required to issue deposit receipt. If it is shares, company will issue share certificate. If it is debenture amount, company will issue debenture certificate. So this is deposit amount. So company will issue deposit receipts. Later, company will maintain a separate register for it called as register of deposits. So first one, what about the content of circular? In circular, the company is required to state its latest financial position. Next one, it is required to provide credit rating. Actually, company is required to get a credit rating from credit rating agency, and that rating need to be provided in circular. Next one, if company is already having deposit amount, it need to provide total outstanding deposit as on this date and total number of depositors. So all these four particulars need to be provided in circular. First one, latest financial position. Second one, so credit rating. Third one, so existing deposit money, outstanding deposit money. Fourth one, existing number of depositors. Second one, statement. So it is just like a certificate. Who will provide? Company's auditor. So what will be provided here? So they need to say if there is any payment default with respect to existing deposits, the company is not allowed to take fresh deposits. So that's why the company auditor need to give a statement that the company has not committed any payment default with respect to deposit amount. So like that he need to give a certificate. Sir, what happens if there is payment default? If there is any payment default, the company need to pay that money now. After paying money, they need to wait for 5 years. After waiting for 5 years, they are eligible to take deposits from members. So if there is no payment default, they can proceed immediately. If there is any payment default, first they need to clear the payment default. They need to wait for 5 years. After that only they need to proceed. Now in both these cases, company's auditor is required to give a certificate. What is that certificate? In first case, he need to say that there is no payment default with respect to existing deposits. In second case, he need to say, yes, there is a payment default and it was cleared and 5 years time is expired. So like that, he need to give a certificate. And it must be filed with ROC. After filing with ROC, within 30 days, it need to be issued to members. Next one. So members will give money to the company and company will provide deposit receipts to the members. And thereafter, company will record the details of members in register of deposits. Next one. So next one, repayment of deposit. So when to repay the deposit? After the expiry of term. So for this purpose, the company is required to create a provision. So how much provision? Say for example, the company is in 2025-26 financial year. In 2026-27, the company is required to pay 100 crore as deposit amount. Now in 2025-26, that in first month means by April 30th. So by April 30th, the company is required to deposit 15% of the amount which is outstanding in next year. So this is payable amount in next year. So out of this payable amount, they need to take 15%. This 15% need to be deposited in a separate account called as deposit repayment reserve. However, in our study material, 2 percentages are given here. So at one place, it is provided that it is 20%. At other place, it is provided at 15%. But the correct one is 15%. Now, if the deposit amount is payable in next year, in current year, that too by the end of first month, the company is required to create a reserve, deposit repayment reserve with how much percentage? 15%. And this amount shall be used only for the purpose of repayment of deposit, not for any other purpose. So till then, this minimum 15% need to be maintained. At any point of time, it shall not decrease below 15%. Next one. So deposit insurance. So what is meant by deposit insurance? Actually, deposit insurance is also a secure deposit. But in order to call any deposit as secure deposit, the company is required to provide property whose value is sufficient to pay both principal as well as interest. Then without providing security also, it can be classified as secure deposit when company took any deposit insurance. So what is meant by deposit insurance? Company will pay premium to insurance company. Now, if company makes any payment default with respect to existing depositors, now instead of company, who will pay money to the depositors? Insurance company, because it is taking premium. So that's why it will pay money to the deposit holders. Now in this case, the amount of deposit holders is secured. So that's why this deposit is also called as secure deposit. But taking insurance policy is not mandatory. It is optional. It is up to the company. So they can take insurance policy in order to make it as secured, or they can provide its own property to make it as secure, or they can even issue unsecured deposits also. Next one. Then what about the procedure for taking deposits from public? So till now we discussed about members. Then what about from public? Same procedure, but there is a slight change. What is the change? Actually, at the time of preparing circular, you are taking credit rating. Credit rating as on that date, that's it. So one time credit rating is sufficient. But if you take any deposit from members, for every financial year, the company is required to take credit rating, and that credit rating need to be submitted to ROC every year. That means in case of members, taking credit rating is one time requirement, that way at the time of beginning. But in case of public deposits, so taking credit rating is every year requirement, annual requirement. So remaining points are same. So next. Next one. Return of deposits. So what is meant by return of deposits? So it is the return which need to be filed by company with ROC in form DPT3 for every financial year within 3 months from the end of financial year. That means we completed 2024-25 financial year. So for this financial year, the company is required to file return of deposit. Then what is the due date for it? So June 30th, 2025 is the last date to file DPT3 with ROC. Now the question is, what about the content of DPT3? So actually, according to definition of deposits, every money receipt to the company will be classified as deposit. That means if company receives any money, it may be because of any reason, so it will be called as deposit only. All the deposit provisions are applicable. But central government gave exemption to some amounts. Those amounts are not classified as deposits. Say for example, company is about to offer securities like shares, debentures, bonds. That's why company got money. In this case, it is not a deposit. Next one, company took a loan from a bank. It is not a deposit. Company took a subsidy from government. It is not a deposit. Company received some advances for supply of goods or services. It is not a deposit. So like this, so many amounts are not called as deposit according to the circular issued by central government. Now the point is, so company got 10 crores money in the entire financial year. In this 10 crore, how much amount is classified as deposit? How much amount is not classified as deposit because of central government circular? We need to make such classification, and such classification need to be filed in DPT3. So every year, every company is required to provide this classification to ROC in DPT3 within 3 months from the end of financial year. And one more important point, if you took any deposit from public, so taking credit rating is mandatory for every year, and that credit rating need to be filed with ROC. That credit rating will be filed along with DPT3 only. Next one. What about joint depositors? Is it allowed or not allowed? Allowed, but maximum 3 joint depositors are allowed. Then how to pay money? It can be paid either jointly. Next, either or survivor. That means to any person or to any person who is nothing but a surviving person. So for example, ABC, 3 persons opened a joint deposit. Now AB got expired, only C is surviving person. Now the amount will be paid to C only. Next one, first named or survivor. In company records, if A name is entered as first member, then amount will be paid to A. If A is expired, the amount will be paid to survivor. Anyone or survivor, it is just like B point, either or survivor. Because in case of either or survivor, 2 depositors will be there. In case of anyone or survivor, 3 depositors will be there. So now say how to pay money here. First of all, how many joint depositors are allowed? 3. So how to pay money? Jointly, that is A, B, C together. So either or survivor is not applicable here. Anyone or survivor is applicable. So that is A or B or C or anyone who is a surviving person. Next one. Next one, first named or survivor. So the amount will be paid to the person whose name is first entered in the records, or if he is not available, any survivor. Next one, what happens if there is only two persons? Then instead of anyone or survivor, we need to take either or survivor. Next one, what about interest rate and brokerage? So banks also take deposits from public. Even companies are also taking deposits from public in some cases and members in all cases. Now, what about interest rate payable? What about brokerage payable to the agent for procuring deposits? So, RBI has mentioned maximum interest rate, maximum brokerage for banks as well as NBFCs. Now, companies which are accepting deposits either from members or from public or from both, they are required to follow the RBI guidelines which are given for NBFC. That means if NBFC is allowed to take interest up to 10%, then here also 10% is allowed. If brokerage is 20%, here also 20% is allowed. That means the companies which are accepting deposits, just they are required to follow the provisions which are applicable to NBFCs. Next one, alteration of terms. Is it possible to alter the terms? Yes, possible. Terms and conditions can be altered, but such alteration shall not create any disadvantage to the depositors. If any alteration creates a disadvantage to the depositors, that alteration is void. Next one, register of deposits. Where to keep this register? At register office. So when to enter the details in this register? Within 7 days. And what about period of preservation? 8 years. So who need to give authorization in order to make entries in this register? Director, secretary, or any person who is authorized by board of directors. Now what about the content of this register? With respect to depositor, his name, address, permanent account number. In case if he is expired, the amount need to be paid to some other person who is nothing but called as nominee. So this depository is required to provide the details of nominee. In case if depository is minor, parent or guardian details. Now, at the time of taking money from depositor, the company will issue deposit receipt. So we are required to provide the particulars of deposit receipt. Date of deposit, amount of deposit, rate of interest, and due date for payment of interest, and duration of deposit, minimum duration 6 months, maximum 36 months. Next one, date of prepayment of each deposit, and if it is a secure deposit, particulars about security. So all these particulars need to be recorded in register. It need to be kept at register office. It need to be entered within 7 days after taking authorization from director, secretary, or any other person authorized by board of directors, and that register need to be preserved for 8 years. Next one, deposit repayment reserve, it is completed. Return of deposits completed. Deposit insurance, it is also completed. Next one, dividends. Actually, dividends are classified into two categories. First one, interim dividend. Second one, final dividend. So what is the difference between interim dividend and final dividend? If you declare dividend during AGM, it is called as final dividend. If you declare dividend at any time other than AGM, it is called as interim dividend. So final dividend will be announced in AGM. Interim dividend will be announced in at any time other than AGM. Then who will announce final dividend and who will announce interim dividend? So in case of final dividend, it will be recommended by board of directors and it will be approved by shareholders. So here we are required to remember a point. If board of directors recommends 10% dividend, shareholders can take either 10% or any percentage which is less than 10%, or they can accept 0 also. But they can't ask for more dividend. They can't ask for 11%. They can't ask for 12%. That means they can simply accept the dividend recommended by board of directors, or they can reduce it. But asking for more dividend is not possible. But what about interim dividend? It will be recommended as well as approved. Everything will be done by board of directors only. In simple words, approving authority in case of interim dividend, board of directors. In case of final dividend, recommended by board of directors but approved by shareholders. Now, what sources can be used for the purpose of making payment of dividend? So first one. So in case of final dividend, we can use current year profits. So we can use current year profits. Second one, if they are not sufficient, you can go to free reserves. So that means you can use either current year profits or free reserves. Next one, what about interim dividend? You can use current year profits or free reserves. So, or you can use next year profits also. Say for example, so 2024-25 financial year got completed. Now on 1st August 2025, Board of Directors declared interim dividend. What sources can be used for this interim dividend? First one, 2024-25. So this net profit can be used for the purpose of paying dividend, or free resource can be used, or even 25-26 year profits can also be used. But up to which point of time? Up to last quarter. Last quarter means April 2025 to June 2025 quarter. So for this quarter, if there is any profit, even that profit can also be used for the purpose of paying interim dividend. So this is extra source which is available to interim dividend. Next one. Now, how much amount of profit can be distributed as dividend? Actually, you will get PBIT, which stands for profit before interest and tax. After deducting interest, PBT. After deducting tax, profit after tax. Now you are required to appropriate this profit after tax. How to appropriate? Some amount will be transferred to reserves. Some amount will be paid as dividend. Now how much amount is required to be transferred to reserves? How much amount we are required to pay as dividend? So you can transfer 100% profits to reserves, 0% dividend, or you can pay 100% of profit as dividend without transferring any amount to reserve, or you can transfer 60% to reserve or 40% to dividend. That means you can do anything. It's your wish. If you want to give entire profit after tax as dividend, yes. If you want to transfer entire profit after tax to reserves, yes, it is also possible. It is up to the company whether to transfer that money to reserves or to pay that money as dividend. Now the point is, if company's profit after tax, in simple words, current year profit, if company's current year profit is 100 crores, and if company want to give a dividend of 60 crores, it is allowed. If company want to give dividend of 100 crores, then also it is allowed because profits are adequate. But what happens if company want to give 120 crores as dividend? It is also allowed. So 100 crores will be taken from current year profits and 20 crores need to be taken from reserves and surplus. So whenever you are going to touch reserves and surplus, you are required to satisfy few conditions. So if you are about to give dividend only out of current year profits, no need to satisfy any condition. There is no restriction at all. But if you want to use reserves and surplus, you need to take some precautions. You are required to fulfill some conditions. Then what are those conditions? And one more thing, in current year there is 20 crores loss, but company want to give 30 crores dividend. Is it possible? Yes, possible. Even in this situation also they are required to take that money from reserves and surplus. That means when profits are inadequate, when there is no profit at all, in both these cases still the company can pay dividend. But from where? So from free reserves. But in order to take money from free reserves, some conditions are satisfied. What are those conditions? Rate of dividend. It shall not exceed average rate of dividend for last 3 years. If only 2 years data is available, last 2 years. This is condition number 1. Condition number 2. How much amount we need to take from reserves? So 1/10 of what? Paid up share capital plus free reserves. So out of paid up capital plus free reserves, the company is allowed to withdraw how much money? 1/10 only, that is 10% only. After withdrawing that money, first it need to adjust that money with current year losses. So withdrawn amount need to be adjusted with current year losses, so that you will get some net amount. That net amount can be used for the purpose of paying dividend. Now one more thing, after withdrawing that money from reserves, what should be the balance of free reserves? it shall be more than or equal to 15% of total paid up capital. So these four conditions need to be satisfied. Then only you can take money from free resource. So without satisfying these conditions, taking money from free resource is not possible. And all these conditions are applicable in case of final dividend. Then what about paying interim dividend in case of losses? Yes, then also conditions are applicable, but not all four conditions. Only one condition is applicable, that is first condition. The rate of dividend shall not exceed average rate of dividend during last 3 years. So for interim dividend, only one condition. For final dividend, four conditions. Next one. So from this moment onwards, so dividend includes interim dividend also. That means what we are going to discuss, it is applicable for both interim as well as final. So first one, payment of dividend. First of all, dividend will be declared. How it will be declared? In board meeting, by passing board resolution. In shareholders meeting, by passing shareholders resolution. That is ordinary resolution. In simple words, when it is declared by board of directors in case of interim dividend, when it is declared by shareholders in case of final dividend. So that date will be taken as declared date. Now, within 5 days of declared date, the company is required to deposit that money with separate bank account. So no need to pay that money to shareholders. First they need to deposit this money with a separate bank account within how many days? 5 days. Next one. Within 30 days of declared date, they are required to pay that money to shareholders. If company fails to make payment within 30 days, or company is ready to make payment within 30 days, but the respective shareholder is not claiming that money within 30 days. In both these cases, that amount will be called as unclaimed by shareholder or unpaid by company. So that amount will be called as unclaimed or unpaid dividend. Now what to do with this unclaimed or unpaid dividend? It need to be transferred to a separate account called as unpaid dividend account. And what is the time limit for it? Within 7 days. But this 7 days need to be counted from expiry of 30 days. After expiry of 30 days, we need to count this 7 days. Within 7 days, the company is required to transfer this money to unpaid dividend account. Next one. Now, if that money remains in unpaid dividend account for 7 years, then, so within these 7 years, if nobody made any claim for this amount, then the dividend amount plus interest if any on it plus shares also, all the things need to be transferred to IEPF, which stands for Investors Education Protection Fund. So this will be done after 7 years. Now what happens if that respective shareholder want to claim the money? If you want to claim the money within these 7 years, he need to approach company. He need to request company. So company will take that money from unpaid dividend account and it will give that money to that respective shareholder. But what happens if you want to claim that money after 7 years? He need to go to IEPF office. He need to make request at IEPF office. If they give approval, he can take the money, including shares also. Next one. Now, what happens if company failed to pay dividend within 30 days? So company is required to pay interest. Officer in default is liable for fine plus imprisonment. Both are applicable. So company is required to pay interest. Officer in default, fine plus imprisonment. So when company fails to pay dividend within 30 days of date of declaration. Now, this rule is having exceptions. In those exceptional cases, company is not liable for any punishment. So what are those exceptional cases? First one, shareholder gave some directions to the company to deposit money in a separate bank account. Say for example, shareholder is having SBI bank account. He gave the particulars of SBI bank account to the company in order to deposit the dividend. And now company tried to deposit dividend amount in SBI account, but because of some details mismatch, so the payment got reversed. Now the company intimated same to the shareholder. After this 30 days time limit is expired, the amount still in the hands of company only. So can I punish the company in the given situation? No. Reason? There is no default on part of the company. Actually, shareholder gave instruction to deposit that money with SBI. and company tried to deposit that money with SBI, and because of mismatched details, it got returned. And the same is intimated by the company to the respective shareholder. So now there is no default on part of the company. That's why company is not liable for any punishment. Next, second one. Now company is ready to pay dividend to shareholder, but the shareholder was not ready, he was expired. Now this person is having 3 legal representatives. So wife, son, daughter. Now there is a quarrel between wife, son, daughter about this dividend amount. Now what company will do? Can it pay dividend in this situation? No, because who is entitled to receive the dividend amount? It is not known to the company. If company pays money to wife, later son and daughter demanded that money, so company will get into trouble. So that is the reason why now company will hold that money till this dispute was resolved. Once this dispute was resolved, and if son is entitled to get the dividend amount, company will pay the dividend amount to son. If daughter is entitled to get dividend amount, company will pay that amount to the daughter. But this will be done after case is solved. Till then company will hold the money. Now 30 days time is completed. The money is still in the hands of company. Now say, can I punish company for this default? No, because there is no default on part of company. Next one, third one. Company is required to pay dividend to shareholder. Shareholder is required to pay some calls in arrears. So company is required to pay dividend and shareholder is required to pay calls in arrears. So dividend amount is 10,000 and calls in arrears is 15,000. Now company adjusted entire 10,000 to calls in arrears. Now company has not paid any amount to the shareholder. So can I call this as a default in order to punish the company? No, because this is a lawful debt and dividend amount is adjusted towards lawful debt. So that's why there is no punishment for company. Next one. So like this, if there is any other case where is no default on part of the company, then company is not liable for any punishment. So for example, company is required to pay dividend to the shareholder, but any law or any court, any authority ask the company for not to pay that money. That's why company stopped making payment money. In this case, can I punish the company for non-payment of dividend? No, because it hold the money in order to comply with laws. So that is the reason why in this case there is no punishment for company. So wherever the company is genuine, company is not liable for any punishment. Next one, we need to discuss about IEPF. So that is the last concept. So in order to maintain IEPF fund, central government will create an authority called as IEPF authority. So the name of the authority is IEPF and the duty of authority is to administer IEPF, that is Investors Education Protection Fund. Now how many people will be there in this authority? 1 chairperson, 7 members, 1 CEO, total 9 members. So 1 chairperson, so 1 CEO and 7 members. Next one. Then who will make appointment of all these people? CG. Who will provide resources to all these people in order to administer the fund? CG only. That means everything will be taken care by CG. Now the question is, when IEPF will be credited, when IEPF will be debited? So first one, if dividend is not claimed for 7 years, what will happen? So dividend amount, shares will be credited to IEPF. Now if concerned shareholder makes any request to IEPF authority to release such fund as well as shares, now IEPF will release it. Now it will become debit. Next one. Now a person made application for allotment of securities. So he paid money for allotment of securities, but allotment is not yet completed. What happens when allotment is not made? The amount need to be refunded back by the company. So company is ready to make refund, but the person is not available to take the money. Now what company will do? It will wait for 7 years. After 7 years, if that amount is still not claimed by that person, it will transfer that money to IEPF. Now what happens if that person makes application to IEPF to get this money? It will become a debit. Next one, the same is applicable even for debenture amount, deposit amount and preference share capital amount like preference dividend and repayment, debentures, deposits, interest, repayment. If these amounts are not claimed by respective person for 7 years, even these amounts will be transferred to IEPF. But when he makes any request to IEPF, these amounts will be debited from IEPF. That means any money which is payable by the company to any person, if it is not claimed for 7 years, it will be transferred to IEPF. If it is claimed from IEPF, it will be debited to IEPF. Next one. It is about disgorged money. So what is meant by disgorged amount? If any person, by applying fraud, if he got any advantage, any benefit, that benefit is called as disgorged money. Now what government will do? Government will take this disgorged money. Say for example, I did insider trading and I got 10 crores profit. So this amount will be called as disgorged money. What government will do? This disgorged amount will be transferred to IEPF. Later on, because of my fraud, some innocent people got affected. Now those people are entitled to get compensation. Then who will pay compensation? IEPF from this disgorged money. That means while taking disgorged money from defaulter, it is a credit. While distributing the disgorged money to innocent persons, it will become a debit. Next one. If any person gave any donation to IEPF, credit. If IEPF incurs any expenditure in order to run the fund, debit. So by this we completed about chapter number 3. Next, chapter number 4, it is about accounts and audit. So first one, definition of books of accounts. The word books of accounts includes 4 things. First one, balance sheet. Books of accounts includes first one, receipts and payments, sales and purchases, assets and liabilities, cost records. Next one, books and papers includes all books of accounts, vouchers, documents, agreements, etc. What about financial year? If the company is incorporated during first 9 months, the financial year will end by 31st March of same financial year. If company is incorporated during last 3 months, so the company's financial year will get completed by 31st March of next financial year. But in both cases, what about the start date? It is incorporation date only. Next one. Now in India there is a company. For this company, for outside India, there is an associate company or holding company or subsidiary company or joint venture. That means the Indian entity is having a relation with outside entity. What kind of relation? Either associate relation, holding relation, subsidiary company relation, joint venture relation. Now what is the financial year for Indian company? April 1st to March 31st. But this outside entity is following different financial years. Say for example, January 1st to December 31st. So for the purpose of consolidation, even our Indian companies want to follow this financial year only. But being an Indian company, following different financial years generally not allowed. But in this case, this Indian company is having a foreign entity, which is either associate, holding, subsidiary, joint venture, and it is following different financial year. For the purpose of consolidation, even our Indian company can also follow this different financial year, but for this purpose they are required to get the permission of central government. Only with the permission of central government, Indian company can follow this financial year. Otherwise, following this financial year is not allowed. Every Indian company need to follow this financial year only. Next one. Financial statements. So what is meant by financial statements? It includes balance sheet. In case if it is a commercial entity, P&L account. If it is a chartable entity, income and expenditure account, cash flow statement, statement of changes in equity, notes to account. But for OPC, for small companies, for dormant company, they are not required to prepare cash flow statement. Next one, accounting standards. Who will issue accounting standards? Central government. Central government will issue accounting standards. But who will recommend accounting standards to central government? ICAI. But they can recommend standards to central government, but central government, after taking the consultation of NFRA, National Financial Reporting Authority of India, they will approve the accounting standards. Next one, maintenance of books of accounts. So every company for every financial year, they are required to prepare and maintain books of accounts, books and papers, financial statements. Now we are going to discuss about books of accounts, books and papers. So first one, where to maintain these books of accounts and books and papers? At registered office. Is it possible to maintain these books of accounts and books and papers at some other place? Yes, but who need to decide that place? Board of directors need to decide that place. That means these books and papers and books of accounts can be kept at registered office or some other place in India which was decided by board of directors. But there is an exception to this rule. What is that exception? Branches. So registered office is having two branches. One is Indian branch, other one is foreign branch. Now, registered office will maintain books of accounts related to registered office at registered office only. But what about branches? Actually, according to the above rule, they are required to maintain books of accounts and books and papers of branches at registered office only. But it is not possible. So there may be some practical difficulties. So that is the reason why here there is an exception. What that exception means? Branches can keep books of accounts related to that branch at branch itself. So for example, this is Hyderabad branch. So this is Dubai branch. Now the books of accounts related to Hyderabad branch can be kept at Hyderabad only. And what about Dubai branch? At Dubai only. But both these entities are required to forward periodical summarized returns. What is meant by summarized returns? Instead of sending detailed information, they can provide summary of the information. So for example, Indian branch paid rent to 5 different persons. For 5 different persons, they paid rent. So instead of showing each and every transaction, simply they will take consolidated rent. So this is called as summarized returns. Now, books of accounts of Indian branch need to be kept at Indian branch itself. So foreign branch need to be kept at foreign branch itself. But they are required to send periodical summarized returns to registered office so that registered office will prepare final books of accounts. Now the point is inspection. So who is having a power to inspect books of accounts? It is director, not members. Members can inspect financial statements, but they can't ask for books of accounts. So who can inspect books of accounts means only director. Now, director. So what he can do for the purpose of inspection? He can go to the registered office and he can check the books of accounts of registered office. Then what about the books of accounts of Indian branch? They're not available at registered office. Then what is available at registered office? Summarized returns which are sent by that branch. That means the director can inspect books of accounts of registered office and summarized returns of Indian branch and foreign branch. Now, those informations are summarized information. That is, it is not complete information. If this person want to get complete information, if director want to get complete information, what he can do? He can clearly say his request to branches. Now branches will provide that information within 15 days. Next one. So this is place of preservation. Next one, period of preservation. For how many years these books of accounts and books and papers need to be preserved? 8 years. But if under investigation, if central government ordered that company to maintain books of accounts for 10 years, then we need to take 10 years. If they ask it to maintain for 12 years, we need to take 12 years. That is 8 years or longer period which is ordered by central government under investigation. So for this much of period, the company is required to maintain books of accounts as well as books and papers. Then who is responsible for maintaining proper books of accounts? MD is responsible. Whole-time director who is in charge of finance, that person is responsible. CFO is responsible. Any person who was authorized by board of directors for the purpose of maintaining proper books of accounts, even that person is also responsible. Next one. So 2024-25 year got completed. Now based on this year, the company is required to do certain things. First one, it need to prepare books of accounts. Based on books of accounts, it need to prepare financial statements. Next one, they need to approve financial statements before sending them to audit. So who will approve? Board of directors will approve financial statements. Next one. Now auditor will conduct audit and he will issue audit report. Next one. Board of directors will issue board report. Actually in board report they need to say so many things. They need to say about composition of audit committee. Next one. If audit committee recommendation is not accepted by board of directors, then it must be disclosed in board report. Next one. About LSGA transactions. They must be recorded in board report. So many matters need to be disclosed in board report. And in this board report, they need to address negative remarks made by the auditor in audit report. So everything need to be addressed by board of directors in board report. Next one. Now, shareholders meeting will be conducted. That is, AGM will be conducted. In this AGM, all the shareholders will be provided with 3 documents: audited financial statements plus audit report plus board report. Based on all these 3 documents, shareholders need to decide whether to approve financials or not. If shareholders approves financials, then within 30 days of AGM, the company is required to file approved financials with ROC. Next one. Within 60 days of AGM, the company is required to file annual returns with ROC. So actually, in financial statements, you can find financial data. What about annual returns? Non-financial data. So annual returns will contain the particulars about your reached office, your nature of business, who are appointed as auditors, who are appointed as directors, who gave resignation, who was removed. All these particulars will be provided in annual return. That means financial statements will contain financial data, annual returns will contain non-financial data. So financials will be filed within 30 days, annual returns will be filed within 60 days. What is the first one? Prepare books of accounts. It is already completed. Next one, prepare financials. After that, board of directors need to approve financials. After that, auditor need to conduct audit. He shall issue audit report. Next, board report. Next, all these 3 documents need to be provided to shareholders so that shareholders in AGM will approve the financials. After that, within 30 days, file financials. Within 60 days, file annual return. Now we are required to discuss about these 2 points. That is point 6 and point 7. Point 6 about providing documents to members. Point 7 is about filing of adopted financials with ROC. First one, who need to provide documents here? Company. To whom the documents need to be provided? Members, but not only members, debenture trustee, other entitled persons. So who need to provide the documents? Company. To whom? Members, debenture trustee and other entitled persons. So what to provide? They need to provide financial statements, audit report, board report. 3 particulars need to be provided here. Next one. And what is the time limit for providing all these documents? Just like AGM notice. Yes, 21 days before the meeting. Then what about shorter notice? Allowed. మీ ఇష్టం ఇంకా నోటికి ఏదొస్తే చెప్పేసండి. 14 days is for Section 8 company. It is not shorter notice, it is actual notice only. Okay. If company want to give these particulars for a period less than 21 days before the meeting, then it is required to take the permission of members. Then how many members need to agree? So for this purpose, we need to classify the companies into 2 categories. First one, companies with share capital. Second one, companies without share capital. So if company is having share capital, so we need to take the permission of members. Then how many members need to agree? Majority in number, 95% in value. Both the conditions need to be satisfied. So majority in number means, say for example 100 members are available, 51 members need to agree. And how much capital they need to hold? Those 51% members need to hold at least 95% of capital. So both the conditions need to be satisfied. If company don't have share capital, then simply take 95% of total voting power. It will be sufficient. Now members having this much of values or this much of values, so if they agreed for shorter notice, then shorter notice is allowed. That means with less than 21 days also, they can send all these documents to these people. Next one, how to send these documents? So how to send these documents? Either electronic mode, that is email or physical mode. So you can send the documents either through electronic mode or through physical mode. But here also there are some conditions. So in case of listed companies, in case of unlisted public companies whose net worth is more than 1 crore, turnover is more than 10 crores. That means listed public companies, all unlisted public companies satisfying the criteria. So what is the criteria? Net worth more than 1 crore, turnover more than 10 crores. Private company, not applicable. So the point is, in case of first two categories of company, so if the shares in demat form, then all these documents must be provided electronically, that is through email only. Then how to get email IDs of those people? So actually we will open demat account with NSDL CDSL. According to company records, who are the owners of shares? NSDL CDSL. Now company is required to ask NSDL CDSL to provide the email IDs of real investors. Now NSDL CDSL provide email ID of real investor, and by using that email ID they will communicate all these documents. So in these two categories of companies, so how to send the documents means, if shares are in demat form, then they must be sent through electronic mode. What happens if shares are not in demat form? They are still in physical form. Then what to do? We need to take the consent of such shareholder for sending those documents electronically. If he gave positive consent, then we can send the documents electronically. Otherwise, we need to send the documents physically. Next one. What about private companies? What about unlisted public companies which fail to satisfy the criteria? For these companies, you can forward through any mode, either in electronic mode or in physical mode. That means the mode is mandatory only in case of listed public companies and unlisted public companies satisfying the criteria. What is that mode? Demat shares, only electronic mode. Physical shares, if members agree, electronic mode. If members disagree, physical mode. Remaining all companies, either physical mode or electronic mode. Next one. Now, in case of listed company, a special option is provided. So what is that special option? So in case of listed companies, there will be crores of shareholders. For all those shareholders, sending all these three documents through email ID is difficult. So many number of mails need to be sent by the company. And this data is large in size. So that's why it is not possible. It is not commercially feasible for the company to send entire data to all the shareholders. Now what company will do here? So if it want to take the cost, it will send all the documents at least 21 days before through electronic mode. But if company don't want to bear the cost, then the listed company is having another option, second option. What is that second option? Instead of sending all these documents, they can send a single statement containing the highlights of financials, audit report, board report. So detailed discussion about financials, audit report, board report will be avoided. Instead of it, a summary will be taken, highlights will be taken, and that highlighted statement will be forwarded to all these people. So for example, for sending these documents, if it is taking 100 MB, for sending this statement, it will take only 1 MB. So it is somewhat commercially feasible. But shareholders will not get complete information. So for this purpose, company need to do one more thing. It need to keep all this document at registry office, and it need to ask the shareholders, if anyone is interested to inspect complete documents, they can come to registry office during business hours and they can make inspection. So like that, they need to provide an option to shareholders to make inspection. So if they want to forward all the documents, inspection is not required. Instead of sending all the documents, if they want to send a summarized document which is containing only key points, then they are required to provide inspection option to members. If member want to get full information, they will go and inspect. Otherwise, so he will keep quiet. Next one. Next one, it is about filing of financial statements with ROs. Now, in AGM, we can have two different situations. One is AGM conducted, other one is AGM not yet conducted. In case of AGM conducted also, there will be two situations. Financials approved, financials not approved. It is not approved in first meeting, but it is approved in subsequent meeting, that is adjourned meeting. But in first case, it is approved in first meeting itself. Now the point is, what happens if financials are approved in first meeting? Then within 30 days of first meeting, the company is required to file approved financials with ROC. That's it. Next one. Now AGM is conducted. In first meeting, financials are not approved. So because of this, the meeting got adjourned. Now in the adjourned meeting, financials got approved. Now what company is required to do? So within 30 days of first meeting, they are required to file unadopted financial statements with ROC. Within 30 days of second meeting, they are required to file, yes, adopted financial statements with ROC. That means 2 times they are required to file the documents with ROC. First time, unapproved financials. Second time, approved financials. In both the cases, the time limit is 30 days. But in first case, 30 days will be counted from first meeting date. In second case, 30 days will be counted from second meeting date. What happens if AGM is not conducted? Can we skip filing financials with ROC? No. So from AGM due date. So every AGM will have due date. So within 30 days of AGM due date, the company is required to file financial statements with ROC. Along with filing financial statements with ROC, they need to give reasons. Reasons for what? Reasons for not conducting AGM within due date. So this is how filing need to be done. Next one. Next one, it is about CSR committee. So, which companies are required to create CSR committee? Which companies are required to contribute towards CSR? So, for this purpose, we need to check net worth, turnover, net profit. So, here there is no classification at all. Listed public company, unlisted public company, private company, that kind of classification is not there. For every company, criteria is applicable, whether it is listed or not, whether it is private or public. This criteria is applicable for all companies, including foreign company also. Now, what is the criteria? Net worth, it shall be more than or equal to 500 crores. Turnover, 1000 crores. Net profit, 5 crores. How many conditions need to be satisfied? Any one condition. Then when to check all these limits? We need to take all these values from last financial year. So what happens in current financial year? If these limits are satisfied, then in next year you are required to follow CSR provisions. In current year you are not required. That means, so whenever you want to follow CSR provisions, we need to check previous year figures. If any figure got exceeded, then follow CSR in current year, otherwise not required. Next one. Now, if any condition got satisfied, in current financial year, they are required to follow CSR provisions. That means they are required to spend some amount towards CSR. How much amount? How much amount? For this purpose, they are required to take last 3 years average profit. In that last 3 years average profit, they need to take 2%. That 2% need to be spent by the end of the current financial year. That is by 31st March of the current financial year. This 2% amount need to be spent. And in order to spend this money, the company is required to create a committee called as CSR committee. Then who will be there in this committee? At least 3 directors, out of which 1 shall be independent director. If independent director requirement is not applicable, 2 directors. If it is a private company with only 2 directors, 2 directors. If it is a foreign company, 1 Indian representative, 1 any other person who was nominated by company. Then where to disclose about this composition? In board report. And who can be the chairperson here? Independent director. Next one. What is the role of CSR committee? They will prepare CSR policy. How much amount to spend, where to spend, how to spend. Everything will be designed in a plan called a CSR policy. So this policy will be prepared by whom? CSR committee. It will be approved by board of directors. So board of directors role is giving approval. Now, what happens if this 2% amount is not spent? So, last 3 years average net profit is 100 crores. And the company is required to spend minimum 2%, that is 2 crores. Now, company spent 2 crores. What will happen? Nothing will happen. It is a compliance of law. Company spent 4 crores. What will happen? This extra 2 crores will be carried forwarded to next year. So for example, in next year, if it is required to spend 6 crores, so this 2 crores can be adjusted and they can spend balance 4 crores. That means extra spendings of current year can be set off against future spending obligation. Next one. What happens if it spend only 1 crore by the end of the financial year? Now, what about that balance 1 crore which is not yet spent? So in this case, we need to check, is it related to any ongoing project or not? If it is related to any ongoing project, it need to be deposited in a separate bank account called as unspent CSR account, and this amount can be spent within 3 years. Now what happens if it is not related to any ongoing project? So completely you fail to spend the money. That's why you need to transfer this money to Schedule 7 funds. And what is the time limit available? 6 months from the end of financial year. Even in this situation also, if within 3 years, if you fail to spend the money, then also this amount need to be transferred to Schedule 7 funds. Next one. Auditor. So in case of auditor, we need to classify the auditor into 2 categories: first auditor, subsequent auditor. So who will appoint first auditor? In case of non-government companies, board of directors. If board of directors fails, members. That's it. Then in case of government companies, first C&AG will make appointment. If C&AG fails, board of directors. If board of director also fails, members. Then what is the time limit? So in case of non-government company, after incorporation of company, within 30 days, the board of directors need to appoint auditor. If board of directors fails, within next 90 days, shareholders will make appointment. Then what about government companies case? From incorporation date, within 60 days, C&AG will make appointment. If C&AG fails, within next 30 days, board of directors need to make appointment. If board of directors also fails, within next 60 days, shareholders need to appoint first director. In all the first auditor, in all these cases, what about the term of first auditor? He will stay in company till first AGM only. Next one. Now what about subsequent auditor? So subsequent auditor will be appointed at AGM. So in case of non-government companies, who will appoint subsequent auditor? Members at AGM. And what about the term of that auditor? From first AGM to 6th AGM. Thereafter, from 6th AGM to 11th AGM. Thereafter, from 11th to 16. Thereafter, from 16th to 21. So it can continue so on. If rotation concept is not applicable. If rotation concept is applicable, cooling period concept is also applicable. If rotation concept is not applicable, for every 5 years, he will be reappointed in the company. Next one. What about government companies? In case of government company, appointment will be made by C&AG, but not during AGM. From the commencement of financial year within 180 days. So they will appoint the subsequent auditor. Then what about the term of subsequent auditor? Till next AGM. That is only 1 year. That means in case of first auditor, till first AGM. In case of subsequent auditor, government company, next AGM. Non-government company, 6th AGM. In case of first auditor, multiple options are given. So if board of director fails, members. If C&AG fails, board of director. If board of director fails, members. But in case of subsequent auditor, multiple options are not available. Shareholders must appoint auditor in case of non-government company. C&AG must appoint auditor in case of government company. Next one, casual vacancy. Actually, audit is appointed for 5 years in case of non-government company. In case of government company, 1 year. Now what happens if auditor was expired, or he gave resignation, or he was removed, or he suffers with any disqualification? Now what will happen? Casual vacancy will be created. Who need to fill the casual vacancy? In case of non-government companies, we need to check the reason first. If it is due to resignation, board of directors within 30 days. If it is any other reason, board of directors within 30 days. Then what is the difference here? In case of resignation, the decision of board of directors need to be supported by the shareholders within 3 months. So it is not board of directors or members. It is board of directors and members. That means the decision of board of directors must be ratified by members. But previously, if board of director fails, members will come into picture. Here also, if board of director fails, members will come into picture. But here, along with the board of directors, shareholders need to agree if it is because of resignation. But if it is a government company, Don't check any reason. For any reason, including resignation also, the process is same. What that process? C&AG will appoint within 30 days. If C&AG fails, then board of directors will appoint within next 30 days. And what about the tenure of that auditor who got appointed in casual vacancy? It is not the balanced tenure of the previous auditor. He will stay in company till next AGM. But if it is a direct situation, he will stay in company for the balanced tenure of main auditor, original director. But in case of audit situation, it is still next AGM only. Next one, reappointment of retiring auditor. So for example, 6th AGM. After 6th AGM, subsequent auditor will be reappointed. But shareholders will have option here. Option number 1, they can reappoint the existing auditor. Option 2, they can appoint new auditor. Option 3, they can keep silence. So first one, if they reappointed retiring auditor will be reappointed for another 5 years. That is from 6th AGM to 11th AGM. If they decided to go with new auditor, so retiring auditor need to vacate the office completely and new auditor will take the position. If they kept silent, then retiring auditor is deemed to be reappointed. Next one, audit committee. What happens if audit committee is available? If audit committee is available, audit committee will make recommendation about appointment of auditor, remuneration of auditor, terms and conditions of the appointment, and this recommendation will be made to board of directors, and board of directors need to forward this recommendation to shareholders at AGM. Now at AGM, shareholders will decide the appointment. What happens if audit committee is not available? Now board of directors need to make recommendation to shareholders at AGM. That's it. What happens when audit committee and board of directors are not agreeing with each other with respect to recommendation made by the audit committee? Then the same need to be forwarded to AGM, and in AGM shareholders will decide. And moreover, in this situation, in board report also they are required to give the reasons why audit committee recommendation is not considered by board of directors. So that reasons need to be given in board report also. Next one, rotation concept. So when rotation concept is applicable, in case of listed companies, all. In case of unlisted public companies, when paid up capital is 10 crores or more. In case of private companies, when paid up capital is 20 crores or more. In case of any company means it may be unlisted public company or it may be private company. So if it's borrowings from financial institutions, banks or public deposits, if it is more than or equal to 50 crores, then rotation concept is applicable. What is rotation concept? If individual is appointed as auditor, he will serve the company for 5 years. After 5 years, he is required to wait for another 5 years, which is nothing but called as cooling period. What happens if firm is an auditor? Partnership or LLP firm is an auditor. Then they can conduct audit for 10 years. After 10 years, they need to take rest for 5 years, which is nothing but called as cooling period. Now, there are some extra points relating to this. So AB and Co is the firm which completed 10 years statutory audit for a company. Now there is another firm, XY and Co. So both firms are CA firms only. So this company just completed 10 years. It need to wait for 5 years. Cooling period of 5 years is applicable to this company. Now the point is, if there is common director between AB and Co and XY and Co, now what will happen? Along with AB and Co, even XY and Co is also required to wait for 5 years. Reason? Common partner is there. Next one. First one, common partner. Second one. Now there is a partner in AB and Co. So after 10 years completion, he retired from AB and Co. He joined in XY and Co. Is there any common partner now? There is no common partner. But one of the partner of the previous audit firm was resigned there and he admitted in new firm. Now what about cooling period of 5 years? It need to be followed by AB and Co, by XY and Co. Reason? The person who conducted audit, that person is now there in XY and Co. That's why this company is also, this partnership firm is also required to wait for 5 years. Next one. Now there is no common partner. No partner retired from this firm and joined in this firm, but both belongs to same network of firms. So both are doing business under same brand name. Now what will happen? Even in this situation also, XY and Co need to wait for 5 years. So in all the three situations, when there is common partner, when a partner resigned from this firm and they joined in this firm, or when both belongs to same network, then along with AB and Co, even XY and Co is required to wait for 5 years. Next one. Rules relating to appointment of auditor. So before appointing a person as auditor, so first of all, we need to take some information from that auditor. What is that information? First one, his consent letter. Second one, he need to give a certificate that he was qualified to become auditor for this company. And he need to say he was not disqualified. And he need to say, so whether his number of audits are within limit or not. Because a person can act like auditor for maximum 20 companies. Yes, some companies are exempted here, like OPC, small company. So many companies are exempted here. What about other companies? Max limit is 20. So he need to say, so my appointment in this company will not violate 20 companies limit. So he need to say he is qualified, he is not disqualified, his number of audits are within limit, and he is eligible to become auditor for the said company. So by giving these points, he is required to give a certificate. After taking that certificate, now audit committee will forward the recommendation to board of directors. Board of directors will forward the recommendation to shareholders. Shareholders will make appointment by passing ordinary resolution. Now after this, within 15 days, auditor must be communicated about his appointment. And even this information need to be passed to ROC within 15 days by using a form called as ADT1. Next one. Now what about removal of auditor? Is it possible to remove the auditor? Yes. But for this purpose, three persons need to agree. First, board of directors, next central government, next shareholders. So board of directors are required to pass board resolution, shareholders are required to pass special resolution. So with board of directors approval, CG's approval, and with special resolution, we can remove the auditor. But while making application to CG to remove the auditor, which form we are required to use? ADT 2. 1 is for appointment, 2 is for removal. Next one. Then what about resignation? If auditor want to resign from the company, can he resign? Yes, but he is required to give notice. To whom? If it is non-government company, the notice must be given to company ROC, that's it. If it is a government company, the notice must be given to company ROC plus C&AG. In which form? ADT 3. Next one. Special notice for removing auditor before the expiry of his term. So for example, if rotation concept is not applicable, in 6th AGM, what shareholders are required to do? They can reappoint existing auditor and or they can appoint new auditor. So if rotation concept is not applicable, at 6th AGM, the existing auditor may be reappointed or a new person may be appointed as auditor. Now the point is, shareholders are not satisfied with existing auditor. So company has not gave any agenda to the shareholders in 21 days prior notice. So company gave notice to shareholders to attend AGM, that to 21 days prior notice. In this notice, they will discuss about agenda, but there is no agenda relating to this existing auditor. But some shareholders are not satisfied with the performance of existing auditor. They want to discontinue with that auditor. They want to appoint new auditor. Now what they can do here? So 14 days before meeting, they can give special notice to the company proposing their agenda, just like appointing small shareholder. Next one. 7 days before meeting, that notice must be communicated by the company to remaining shareholders. And auditor must be given with a reasonable opportunity of being heard. After doing all these things, they can appoint some other person instead of existing person. Next one. Eligibility and qualifications to become auditor. First of all, if auditor is individual, he must be a practicing CA in India. If auditor is a firm including LLP, then all partners are not required to be CA. Majority partners are required to be practicing CA. Next one. But in case of signing, only CAs are allowed to do signing. Next one, disqualifications. So what are the disqualifications to become auditor? First one, body corporate is not allowed. That means proprietary firm allowed. Partnership firm allowed. LLP, even though it is a body corporate, it is allowed. But company form of CS, not allowed. So body corporate form of CS, not allowed. But proprietary form of CS and partnership form of CS and LLP form of CS, allowed. What happens if the proposer person is officer in the company like CEO, CFO? What happens if the proposer person is the employee of the company? That person is not allowed to become auditor for the same company. What happens if that officer or employee, what we discussed in point number 2, that person is having a business partner or business employee, and this person who is a CA want to become auditor for the main company? Not allowed. That means companies, partners, companies, employees, officers, not allowed. For such company, officers and employees, if there is any partner or employee, that person is also not allowed. Next one. Now the proposer person, relative, his partner. Total 3 persons got covered. Who are those 3 people? Proposer person, proposer person's relative, proposer person, business partner. Now, if they are holding any security in cash plus yes companies. So what is meant by cash plus yes companies? Main company, its associate, its subsidiary, its holding plus subsidiary of its holding. Now, proposer person or his relatives or his partner are having securities in any of these 5 companies, then the proposer person is disqualified. But there is an exception. Proposer person can't hold any securities. His partner can't hold any securities, but his relative can hold securities. But such securities face value shall not exceed 1 lakh. Next one. Now proposer person, his relative, his partner shall not owe any money to any of these 5 companies. If there is any money which is payable by those people to any of these companies, the proposer person is disqualified. But there is an exception to this rule. What is that exception? 5 lakhs. But here that limit is applicable for all the 3 people. All the 3 people means, so first one, proposer person can hold up to 5 lakhs debt. Relative can hold up to 5 lakhs debt. Partner can hold up to 5 lakhs debt. So is it separate limit or combined limit? We need to take combined limit only. So for example, if each one holds 5 lakhs, 5 lakhs, 5 lakhs, it will become 15 lakhs, which is exceeding the limit. So it is not like that. We need to take the combined holding of the proposer person and all his relatives and all his partners. If that combined holding is exceeding 5 lakhs, then proposer person is disqualified. And third one, providing guarantee or security. If proposer person or his relative or his partner provides any guarantee or security to any of these 5 companies, then those people are disqualified. But here also there is an exception. The exception is up to 1 lakh. So in first case 1 lakh, in second case 5 lakhs, in third case 1 lakh. So first 1 lakh is applicable only for relative, not for proposer person, not for proposer person's partner. But in second case and third case, these limits are applicable for all the people. That is proposer person, partner, relative. And in all the 3 cases, what is the common point? Other party. Who is the other party? Any of the cash plus yes companies. Next one. Now we need to take only proposer person. Don't take relative. Don't take his partner. And on this side, we need to take cash plus yes companies. So cash means main company, its associate, its subsidiary, its holding. S means subsidiary of its holding. Extra S means subsidiary of its associate. So why can't we take subsidiary of subsidiary? Because subsidiary of subsidiary is also a subsidiary. So that's why we need to take the subsidiary of holding, subsidiary of associate. Now we have 6 companies. On this side, only proposer person. On other side, any of the 6 companies. Now the proposer person is having any business relationship with any of the 6 companies, then the proposer person is disqualified. But what happens if the business relationship is purely professional relation? That means as a CA he is providing services to those companies, then so not applicable. He is not disqualified. What happens it is not in professional nature? We need to check the monetary limit. So if it is done at fair price, that is arm's length price, then no disqualification. So if it is not done at fair or arm's length price, then disqualified. That means what is meant by fair price or arm's length price? if company is charging 10,000 for other customers, if it charges same amount for auditor also, then the transaction, the business relationship is done at arm's length price. If any favor is given to auditor, it is not at arm's length price, and because of that favor, now auditor is disqualified. Next one. If a person is already a director or KMP, so that person is not allowed. At the same time, any relative to these people, like director and KMP, those people are also not allowed to become auditor. Now, if a person is in full-time employment elsewhere, that means at some other place he is working as full-time employee, that person cannot do audit at all. First of all, that person cannot have a practice certificate also. So that person is not eligible. And what about the limit here? How many company audit a person can undertake? 20. But while counting this 20 limit, exclude OPCs, exclude dormant companies, exclude private companies whose paid up capital is less than 100 crores. That means we need to count only all public companies, and we need to count private companies whose paid up capital is more than or equal to 100 crores. Now, while counting public companies plus private companies having paid up capital of more than or equal to 100 crores, the total number of companies shall not exceed 20. Next one. What happens if a person is involved in fraud? That person is disqualified for 10 years to become auditor. What happens if a person provides 144 services? 144 services means prohibited services. So for example, proposer person. On this side, we need to take cash companies and we need to eliminate associate company. Now, if the proposed persons, either directly or indirectly, if they provided section 144 services, that is prohibited services, to main company or its subsidiary or its holding, then the proposed person is disqualified. So what are 144 services? So bookkeeping services. Next one, actuarial services, management services, investment banking services, investment advisory services, design and implementation of financial information system, outsourcing financial services, management services. All these things are called as 144 services. Now the proposer person, either directly or indirectly, if they provide 144 service to main company or its subsidiary or its holding, then he will be disqualified. Next one, reporting of fraud. So in case of reporting of fraud, first we need to classify the fraud into two categories. So first one, fraud involving less than 1 crore, fraud involving more than or equal to 1 crore. If the fraud involving less than 1 crore amount, then auditor need to intimate this matter to management. Within how many days? Within 2 days. Next one, if it is a large fraud, if it is involving more than or equal to 1 crore, then auditor need to communicate with this management. Later management is required to give reply to auditor. Later auditor need to report this matter to central government in form ADT 4. 1 is for appointment, 2 is for removal, 3 is for resignation, 4 is for reporting of fraud. Then what is the time limit? 2 days, 45 days, 15 days. So within these time limits, they are required to report the matter. And this fraud reporting concept is applicable not only for CA, it is applicable for CMA as well as CS, who is acting like auditor for the company. It is not applicable, and it is applicable for branch auditor also. So branch auditor means the person who will conduct audit for only branch. That person is called as branch auditor. So fraud reporting is applicable even for branch auditor also. That means each and every auditor need to follow fraud reporting concept. Next one. So prohibited services completed. Next one, CARO reporting. So when CARO 2020 is applicable, so it is applicable to all companies, including foreign companies, but it is not applicable to few companies. What are those few companies? Banking company, insurance company, Section 8 company, 1% company, small company, and private company if it satisfies all the 4 conditions. So what 4 conditions need to be satisfied in case of private company? It must not be holding or subsidiary to public company. It's paid up capital plus reserves. So shall not be equal to or more than 1 crore. Next one, borrowings within the limits, that is 1 crore, total revenue. Revenue from continuing operations plus revenue from discontinued operations. So shall not exceed 10 crores. So if all the four conditions are satisfied, then even for the private company, CARO is not applicable. Next one. So what is the purpose of independence of auditor? So first of all, if auditor is independent, so he can give genuine opinion. Otherwise, his opinion may get influenced by the management. Then what are the factors that will affect the independence of auditor? Self-interest threat. So for example, he prepared books of accounts and he conducted audit for the same books of accounts. Definitely he will give clean report. So this is called as self-review threat, self-interest threat. Self-review threat. What is meant by self-interest threat? Say for example, if auditor is having shares in that company, if auditor gave negative opinion, share value will decrease. Ultimately, auditor will suffer with loss. If auditor is having shares in that company, if he provides clean report, even though there are some negative matters, still if he provide clean report, what will happen? Share price will increase, auditor will get benefit. So this kind of threat is called as self-interest threat. Next, advocacy threat. What is meant by advocacy threat? This auditor asked his clients to make investment in this company. If auditor gave any negative opinion, then his clients will question that auditor. Why you suggested to invest in this company? Like that. So that's why. So here there will be a threat called as advocacy threat. Next one, familiarity threat. If the same person is doing audit for several number of years, then a relation will get created in between auditor and management. Now auditor decision may get influenced by management. So this is called as familiarity threat. And what about intimidation threat? Now management may give a threat to the auditor to give clean report. So because of the threat, so auditor may issue clean report. So this is called as intimidation threat. So because of all these threats, what will happen? Auditor's independence will be affected. If auditor's independence is affected, then he shall not continue as auditor for the company. Immediately he need to vacate the office. Next one, difference between internal audit and statutory audit. So first of all, when internal audit is applicable, so we need to check companies here: listed public companies, unlisted public companies, private companies. Listed public companies, for all companies, internal audit is mandatory. Unlisted public companies, out of 4 conditions, 1 condition need to be satisfied. So private companies, out of 2 conditions, 1 condition need to be satisfied. So then only internal audit concept is applicable. Then what are those 4 conditions in case of unlisted public company? Paid up capital, turnover, borrowings, deposits. So 50 crores, 200 crores, 100 crores, 25 crores. Then what about private company? So ignore paid up share capital, ignore deposits, take turnover and outstanding borrowings, same amounts, that is 200 crores, 100 crores. Next one, who can be appointed as internal auditor? He may be a practicing person, he may be an employee, but in case of statutory audit, only practicing person. In case of internal audit, either employee or practicing person, and that person may be a CA or CMA or any other professional. But in case of statutory audit, only CA is allowed. Next one, who will appoint internal auditor? So board of directors will appoint internal auditor based upon the recommendation given by audit committee. But in case of statutory auditor, shareholders will appoint. Now board of directors or audit committee will discuss the matter with internal auditor and they will decide scope of the internal audit. Now the internal audit report need to be addressed to whom? Board of directors or audit committee, not to the members of the company. But in case of statutory audit, it will be addressed to members of the company. Inspection, inquiry, investigation. So what is the difference between inspection, inquiry, investigation? Inspection is a routine check. Then what about inquiry? If there is any doubt, they will make verification. It will be called as inquiry. What about investigation? So now default is proved. Now they will want to know about how this default happened, when this default happened. So all these things they want to find it out. That's why they will go for investigation. So this is a routine check. Whereas inquiry, it will be done when there is any doubt. Investigation, it will be done when the doubt is confirmed. Now first one, who is having power to go for inspection? ROC or CG? Who is having power to go for inquiry? ROC or CG? And who is having power to go for investigation? Only CG. Now the point is, when inspection will be ordered, when inquiry will be ordered, and when investigation will be ordered. First one, inspection. Actually, every year the company will file financial statements as well as annual returns with the ROC. Now, based on financial statements and annual returns which are filed by the company, if ROC is having any doubt, then ROC can ask for further information and explanation. Now, upon complaint from any person, so ROC may ask for further information or explanation. So when he will ask for further information or explanation? Based on returns filed by the company or based on complaint made against the company. Now, so when ROC asks for further information and explanation, the company is required to provide further information and explanation. Now, what happens if company fails to provide information? What happens if company provides inadequate information? That means they provided information, but it is not complete information. What happens if company provides false information? So first one, company fails to give information and explanation. Second one, company provided inadequate particulars. Third one, company provided false particulars. So in any of these three cases, ROC or central government will go for inspection. Now say when inspection will be ordered. So based upon the financials and annual returns filed or based upon the complaint made against company, so ROC will ask for further information and explanation. If company fails to provide such particulars or provides inadequate particulars or false particulars, then ROC or CG can order for inspection. So in case of inspection, what company is required to do? In case of inspection also, they are required to provide information and explanation. So based on this information and explanation, if ROC feels that there is non-compliance of law, that means company is operating its business without following Companies Act, without following company's rules. If ROC is having any doubt like this, then he will go for inquiry. Second one, company is operated in fraudulent manner. Next one, when shareholders grievances, nothing but issues, they are not addressed. So in total 3 situations. So based upon the inspection report, so he will check whether there is any non-compliance of law. He will check for fraudulent business activities. He will check for investors grievances, whether they are properly addressed or not. If any of these things are found, then next step will be he will go for inquiry. He will go for inquiry. Now in that inquiry, so here there is just a doubt of non-compliance. There is just a doubt of fraudulent activity. So there is just a doubt of not addressing the issues of investors. Now under inquiry, if these 3 things are confirmed, now what they will do? They will go for investigation. But ROC don't have any power to go for investigation. So only CG is having power to go for investigation. If inspection and inquiry is conducted by CG, then CG will go for investigation also. If inspection and inquiry is conducted by ROC, then it will give a report to the CG recommending CG to go for investigation. So now say what is the process? So first every company will file financials and annual returns. So based on that information or based upon the information given by any person against the company, so what ROC will do? So he will ask for further information and explanation. If company fails to provide such information or provides inadequate or false information, then ROC or CG will go for inspection. Under inspection, so if there is any doubt for non-compliance of law, if there is any doubt for having fraudulent business activities, if there is any doubt that the company is not addressing shareholders issues, then they will go for inquiry. In that inquiry, doubts if confirmed, they will go for investigation. Next one. This investigation is of two categories. First one, investigation into affairs of the company, investigation into ownership of the company. So what is meant by investigation into affairs of the company? So they will check the genuineness of transactions made by the company. What about investigation into ownership of the company? They will find out who is the real owner of this company. So who is having financial interest? Who is controlling company's policies? Who is having beneficial interest in the company? What is meant by beneficial interest? The amount will be given by that person, but the shares will be registered on some other person name. So in that situation, the person who gave money will have beneficial interest. So in order to find who is real owner of the company, so central government will go for investigation into ownership of the company. In order to find out so whether fraudulent activities are being conducted in company or not, so central government will go for investigation into affairs of the company. Now, when central government will go to affairs into the investigation of affairs of the company, first one, based on inspection or inquiry report. So based on inspection or inquiry report, they will go for investigation, but it is not mandatory, it is optional. So central government may go for investigation, may not go for investigation. Second one, so based upon shareholders request. So based upon shareholders request, so central government may go for investigation. So this is also not mandatory, this is also optional. And third one, in the interest of public. In the interest of public, so central government can go for investigation. Even this is also optional. And last one, if NCLT passes an order against central government to go for investigation, then it is mandatory for the company to go for investigation. That means when CG will go into investigation into the affairs of the company based upon inspection or inquiry report, based upon shareholders request, based upon public interest, and based upon the order given by NCLT. In first three cases, going for investigation is not mandatory, but in last case, going for investigation is mandatory. Next one. So what are the purpose of going into investigation into the ownership of the company? So to find out real owner. So real owner means who is having interest in success and failure of the company. In order to find out the persons who are having interest in success and failure of the company. That is point number one. Point number two, in order to identify who is beneficial owner. Who is beneficial owner means, say for example, A gave money to B invested that money in company. Now whatever the benefit that was received from company will be given to A. Now according to records of the company, who is owner? B. But who gave money? A. Who is enjoying benefits? A. So A is called as beneficial owner. So in order to find out real owner, that is beneficial owner, central government may go into investigation of ownership. So that is second point, beneficial owner. Third one, the person who is having control over decision making. So company is taking policy decisions, and who is taking control over it? This person is taking control. Even that person is also called as real owner. So in order to identify these three categories of people, so central government will go for investigation into ownership of the company. Next one. So when NCLT will ask the central government to go for investigation into affairs of the company, first of all, some shareholders need to make an application to NCLT. Then only NCLT will pass an order against central government to go for investigation. If NCLT passes such order, it is mandatory for the central government to go for investigation. Now, how many shareholders are required to make request? 1/10 of total shareholders, or 100 members, or members having 1/10 of total issued share capital. So 1/10 of members, or 100 members, or members having 1/10 of total issued share capital. So whichever is lower. So these many number of shareholders need to approach NCLT. Now NCLT must feel like this, then only it can order central government. So what is that feel? So here the company is conducted its business in fraudulent manner, NCLT must feel like this. Or the company is doing business against to the interest of members or company or public or creditors, or the company is defrauding these people, or company is oppressing members. What is meant by oppression of members? So controlling shareholders can oppress minority shareholders by their decisions. So this is called as oppression. If oppression is proved, if fraudulent conduct is proved, if fraudulent intention against other parties is proved, now what NCLT will do? NCLT will order central government to go for investigation. Now it will become mandatory for the central government to go for investigation. So this is the overall review. So here, inspection, inquiry, investigation. What is the difference? Inspection is a regular check. Inquiry, it will be done whenever there is a doubt. Investigation, when doubt is confirmed, in order to know about more particulars, they will go for investigation. But there is a difference in exercising authority. Inspection, ROC or CG. Inquiry, ROC or CG. Investigation, only CG. Next one. Among these three things, which is negative activity? Inquiry, investigation, both are negative activities only. What about inspection? It is not negative activity because it is a regular check. Next one. So when ROC will ask for further information or documents, so based upon documents filed by the company, based upon complaint received by the ROC against company. In both these cases, ROC will ask for further information, explanation, documents. The company must provide such details within specified time. What happens if they provides inadequate particulars or they fail to provide so required details within specified time? What happens if that information is unsatisfactory? In all these three cases, so he will go for inspection by asking some other extra information, documents and explanation. Now, if ROC is having a doubt about business activity of the company, whether it is conducted in fraudulent manner or not, whether it is following provisions of Companies Act or not, whether the investors' grievances are addressed or not. So based on these three doubts, what ROC can do? He can go for inquiry. Now, after that inquiry, so they will decide whether to go for investigation or not. Next one. So when ROC asks for further information or documents, when ROC asks any document under inspection, or when he asks any information under inquiry, it is the duty of company plus its officers. So whatever the information, whatever the explanation that was asked by the ROC must be provided by both company as well as officers. Now the point is, what happens if the investigation, if the inspection or inquiry is related to 2024-25 financial year, and in that time there is a person who is an officer in the company, but now in the current date he was not there in the company. That means he is a previous officer. As of now, he is not a present officer. So can ROC ask information even from this officer? Answer is yes. That means if ROC asks for information, company is required to provide that information, officers are required to provide that information. Such officers may be either past officers or present officers. Next one. So then what about seizure of books? Is seizure of books allowed? First of all, who will seize? ROC or central government? Under what? Under inspection or inquiry. So which books can be seized? The books which are related to company, the books which are related to directors, the books which are related to KMP, and the books which are related to auditors, that is CA as auditor, CMA as auditor, CS as auditor. If there is a chance of falsification of any of these books of accounts, then ROC or CG under inspection or inquiry can seize these books of accounts which belongs to these people. Now, for how many days it will be seized? Maximum 180 days. After the completion of 180 days, if they want to seize the books of accounts once again, yes, they can seize for another 180 days also. After that, they need to return the books of accounts. Next one. Instead of seizing books of accounts, they can do one more thing. So what is that thing? So they can directly inspect the books of accounts which are provided by the company. In that situation, they can take the copies of books of accounts without seizing the original books, or they can directly inspect in original books without taking copies or without seizing those books of accounts. But in such situation, they will put some identification marks on the books of accounts. So for example, they completed the verification of all ledgers. They can make a identification marks. Yes, it is completed, it is completed, it is pending, like that. They can put identification marks. Next one, and one more thing. So during inspection and inquiry, ROC or CG will have all the powers of civil court. So what are the powers of civil court? They can ask for books of accounts. They can inspect books of accounts. They can ask for physical examination of persons. So all the powers are available to civil court. Those powers are also available to ROC or CG under inspection or inquiry. Next one. So investigation by SFIO. So what is the full form for SFIO? Serious Fraud Investigation Office. Now, when case will be handed over to SFIO? Only under investigation. Actually, who can conduct investigation? CG. What kind of investigations it will carry? Investigation into affairs of the company, investigation into ownership of the company. In case of investigation into affairs of the company, so it is having two options. One is to assign a normal officer to conduct investigation. Other one is to assign SFIO to conduct investigation. So if it is a small fraud, a normal person will be assigned for investigation. If it is a large fraud, then the case will be handed over to SFIO, which stands for Serious Fraud Investigation Office. Now this person will investigate. This person will investigate the affairs of the company, and they will provide both interim report as well as final report. So what is the difference between interim report and final report? So for example, if total investigation process took 1 year of time, so after completion of total investigation process, if he provides any report to the central government, it is called as final report. So before the completion of investigation, every month, if he is forwarding any report to the central government, it will be called as interim report. Now based on interim report and based on final report, which is provided by SFIO, central government will take action. Next one. So when NCLT will order central government to go for investigation, certain members need to file the suit with NCLT. How many members? 1/10 of total members or 100 members. If company does not have share capital, we need to take 1/5 of total members. So those many number of people need to request NCLT. And if NCLT is satisfied that if company is operated in fraudulent manner, if company is meant to defraud creditors, members and others, if company is oppressing its members. Next one, if there is any fraud, misfeasance, misconduct in management. Now, if company fails to provide the details requested by members, in any of these cases, what NCLT will do? It will ask central government to carry investigation into affairs of the company. Next one. So, CG can go for investigation into ownership of the company. What is the purpose? To find out who is financially interested in success or failure of the company. Next one, who can materially influence the company's policies, and in order to identify beneficial owners. That means those people will give money for making investment, those people will take benefits, but the investment will not be recorded on the name of those people. So that kind of people will be called as beneficial owners. Next one. Now, while conducting investigation on main company, it can conduct investigation on other persons also. Other persons are nothing but called as related persons. So when central government is conducting investigation on one company, along with that company, it will conduct investigation on other related parties. Then who are those other related parties? We need to take caste plus S companies, and we need to eliminate associate company. That means while conducting the investigation on main company, so central government can conduct investigation of its subsidiaries. investigation of its holding company, investigation of subsidiary of its holding company. This is first category. Second category, there are some companies and there is main company. So both companies are managed by same person, same MD or same manager. Now, even though this company is not a subsidiary, not a holding, not a subsidiary of its holding, but even in this situation also, central government will investigate the affairs of this company. Reason? What is the reason behind that? There is a common MD, common manager. That means same person is managing both the companies. When same person is managing both the companies, when he did fraud in one company, definitely there will be fraud in another company also. So that's why even this company is also subject to investigation. Next one. Now, third situation, there is a company. So there is a company. In this company, board of directors team is available. So this board of directors team is following the instructions of directors of main company. That means these directors are controlling the main company. These directors are controlling another company, not directly. They are controlling the board of directors of another company. So even in this situation also, so this company's affairs can be investigated by central government. Next one, fourth category. So MD, manager, employee of the same company. Even those people will be investigated. So along with main company, who will be investigated? 3 body corporates, 3 individuals. For those 3 individuals, main company's MD, main company's manager, main company's employee. For those 3 body corporates, cash plus S companies, we need to eliminate associate. Next one, having common MD or manager. Third one, main company board of directors are controlling the board of directors of another company. Now all other body corporates are also subject to investigation, and all these parties, 3 individuals and 3 body corporates, will be called as related parties. Next one. So in investigation also, that person, that is investigator, will have a power to order for seizure of the books. Okay, then for how much time period he can seize the books of accounts? 180 days. After 180 days, he can request for another 180 days. After that, again 180 days, till the completion of investigation, he can seize the books of accounts. But for every 180 days, what is required? Permission is required. And he can take the powers, help of central government, state government, police departments, and other statutory authorities. Because investigation, in case of investigation, the fraud is already proved. Now the investigator is about to find out the details of such fraud. Now if he need the help of any of these people, then he can take the help of central government, state government, police department, even statutory authorities. But for this purpose, in order to take the help of these people, what is required? CG's prior approval is required. Next one. Now what action CG will take based upon report given by investigator? So if it is a body corporate, CG will order for winding up. If it is an individual who involved in body corporate in order to do fraudulent activities, then this person will be imprisoned, and he will be liable for fine also. That means if that person is individual, fine plus imprisonment. If that person is body corporate, then winding up. In case of winding up, so we need to sell the assets first so that we will get some money, and we need to pay the liabilities with that money. So while paying liabilities, we are required to pay compensation to the persons who suffered with loss because of fraud committed by that body corporate. If any asset belongs to any other person, the asset need to be restored back to that person, because that asset belongs to some other person, not to body corporate. By doing some fraudulent activities, it got the asset. Now what to do with that asset? Give it back. If it is the asset of the company, sell it, and you will realize the money and pay that money in order to pay compensation to all aggrieved persons because of fraud committed by the body corporate. Next one. Then what about cost of investigation? In order to conduct investigation, central government incurred some cost. If it is a serious fraud, they even appointed SFIO. So it also involves some cost. Then what about cost of this investigation? It will be recovered from winding up surplus. That means in case of winding up, if the asset belongs to some other person but not to company, that asset will be given back to the original owner. If that asset belongs to company, it will be sold and sale proceeds will be used to pay compensation to agreed persons, and the sale proceeds will be used to pay, yes, cost of investigation which is incurred by the central government. Next one, compromise, arrangement, amalgamation. So what is the difference between compromise, arrangement, amalgamation? So whenever there is a dispute between parties, if parties want to settle the dispute, it will be called as compromise. What is meant by arrangement? Actually there is no dispute at all, but based upon certain situations, so the parties will make some arrangements. It will be covered under arrangement. So for example, company, creditor. Company is required to pay 10 lakhs to creditor, but creditor is asking for 12 lakhs. Company is ready to pay 10 lakhs only. Now there is a dispute between company and creditor. If they solve this dispute, it will be called as compromise. Now company need to pay 10 lakhs to creditor, but company's position is not so good to pay this 10 lakhs. Company can be able to pay only 3 lakhs. Now company and creditor can make an agreement with each other to take this 3 lakhs as final settlement. So this is called as arrangement. That means here they are agreeing without dispute, and here they are agreeing with the dispute. So if it is with the dispute, it will be called as compromise. If it is without dispute, it will be called as arrangement. Then what about amalgamation? If A Limited acquires B Limited, amalgamation. If A Limited and B Limited merge with each other in order to form AB Limited, it is also called as amalgamation, because the word amalgamation includes mergers also. Now the question is, so between whom the compromise or arrangement or amalgamations will be made? Company and creditors, company and members, or company and creditors as well as members. So there may be a dispute between these people. It can be compromised. They can agree mutually without any dispute, nothing but arrangement. Or they can go for amalgamation. In all these cases, who are the common parties? Company and creditors, or company and members, or company and creditors as well as members. Now, in order to make any compromise or arrangement or amalgamation, so these people permission is not sufficient. So that plan of compromise, plan of amalgamation, plan of arrangement need to be approved even by NCLT. So that's why any of these parties means either company or creditors or members. If company is under liquidation, liquidator. So any of these people can make an application to NCLT. That means first they need to prepare a plan. Plan for what? Plan for compromise or arrangement or amalgamation. So first they need to prepare a plan. So based upon that plan, they need to make an application to NCLT. So after making an application to NCLT, NCLT will order for the meeting of creditors or members as the case may be. Now, a notice of that meeting need to be given to all creditors as well as members. That notice need to be posted on company's website also. If that company is a listed company, that notice must be placed on SEBI website as well as stock exchange website. Say for example, the company got listed in NSE. The notice must be displayed in NSE website. If the company got listed in BSE, the notice must be displayed in BSE website. And it must be even published in newspapers. So after giving notices, so what will happen? If any person want to give any objection, they can provide the objection for the prepared plan. But in order to give objection, that person may be either member or creditor. All members are not eligible to give objection. All creditors are not eligible to give objection. Then which members and which creditors are eligible? In case of members, they need to have at least 10% of shares. In case of creditors, they need to at least have 5% of total debt. Then only they can make objections. After that, meeting will be conducted. In that meeting, approval is required. If it is members meeting, members approval is required. If it is creditors meeting, creditors approval is required. Then how many people need to agree? Same. Majority, that is more than 50% in a number. And next one, minimum 3 by 4, that is 75% in value. So in total number of members or creditors, so number shall exceed 50%. Next one, in terms of value, the people who are giving support need to have at least 75% of total value. So then only the scheme will be approved. After this scheme is approved in the meeting, the approved scheme need to be submitted to NCLT. Now NCLT will give final order, and this final order is binding on each and every party. Next one, within 30 days of NCLT order, that order need to be forwarded to ROC. And this scheme must follow accounting standards. Actually, this is internal reconstruction. For internal reconstruction, you will have some standards. Whether the company is following those standards or not, who will check and verify? Company's auditor. So compromise or arrangement includes takeover offer. Takeover means amalgamation only. So the procedure which was discussed till now, it is applicable for compromise, arrangement, even for amalgamation. But in material, it is displayed only compromise, arrangement. So amalgamation is not discussed here. But even though it is not discussed, the same procedure is applicable even for amalgamation. Now say what is the procedure? So first one, they need to prepare a plan. Plan of what? Compromise, arrangement, amalgamation. So after preparation of plan, what they are required to do? They need to make an application to NCLT. Who can make an application? Creditors, members, company. If company is under liquidation, liquidator. Now what NCLT will do? It will order for meeting of creditors or members. Now for this meeting, the company is required to issue notice. And how the notice must be circulated? It must be given to all members, in case if it is members meeting, all creditors if it is creditors meeting. That notice must be advertised in newspapers. If it is listed company, that notice must be published in concerned stock exchange website as well as SEBI website. Next one, if any person want to give objection, yes, they can provide objection. But in order to provide objections, if he is a member, he need to have at least 10% of shares. If he is a creditor, he need to have at least 5% of debt. Now in the meeting, they need to approve the plan. So two consents are required here. First one, majority in number need to agree. Second one, they need to hold 3 by 4 of total value, that is 75% of total value. If they agree, the plan will be approved. Now after their approval, NCLT will give final approval order which is binding upon all the parties. Now NCLT order need to be filed with ROC within how many days? 30 days. So by following this procedure, company can initiate compromise, arrangement or amalgamation. Next one, in case of amalgamation, the CG need to NCLT need to address few issues. What are those few issues? In case of amalgamation, so for example, A Limited is going to purchase B Limited, and only A Limited will continue in existence. So in this case, A Limited is called as transferee company, and B Limited is called as transferor company. Now transferor company and transferee company, transferor company will give assets and liabilities, transferee company will give purchase consideration. Now in NCLT order, it need to discuss about the fate of each asset and liability. So will it be continued with the transferor company or will it be transferred to transferee company? And NCLT order need to address the purchase consideration. So how to pay the purchase consideration in the given case? By giving cash or by allotting securities like shares, debentures, bonds, etc. So it need to address purchase consideration also. Next one, what about the employees of transferee company? They need to address about that situation also. They will become the employees of transferor company. What about the pending cases against transferor company? They will be continued by transferee company. So everything which was there on the name of transferor company need to be continued by transferee company. So central government order, NCLT order need to address all these points. And finally, what about dissenting shareholders? Because some of the shareholders of transferor company may not agree for this transfer. So in that situation, dissenting shareholders need to be provided with exit offer. So at the value which was fixed by registered valuer, those shares need to be purchased by transferee company. So all these things need to be addressed by NCLT while giving NCLT's final order. But these points are applicable only in case of amalgamation. In case of compromise or arrangement, these points are not applicable. Next one. So there is another concept called as simplified mergers and amalgamations. So what is the procedure we need to follow for merger and amalgamation? Same procedure. We need to follow the same procedure. That is, first preparing the plan. So second, applying to NCLT for conduct of meeting. NCLT will order for meeting and company will issue notice for the meeting. If any person want to make objection, if he is eligible, he can make objection. In meeting, 2 consents are required, one in number, other one is in value. And thereafter, we need to approve the plan, and that approved plan will be approved by NCLT. Now NCLT order need to address all these issues. This is in case of normal merger or amalgamation. Now what about simplified process? That is fast track merger and amalgamation. So here in very less time, the merger and amalgamation approval will be completed. So how it will be completed? First of all, for which mergers and amalgamations this is applicable? So the mergers and amalgamations between small company with another small company. Next one, startup company with another startup company. Small company with another startup company. So small company to small company. Startup company to startup company. Small company to startup company. And last one, holding company, wholly owned subsidiary company. So total 4 situations. In these 4 situations, so NCLT will have 2 options. One is to go for detailed procedure, just like what we discussed till now. Other one is simplified process. Then what is the simplified process here? So for example, A Limited is going to purchase B Limited. So in this case, A Limited is called as transferee company, B Limited is called as transferor company, because B Limited is transferring its assets and liabilities to A Limited and A Limited is paying purchase consideration. Now what is the simplified process? So both transferor company and transferee company, that is both A Limited, B Limited, they are required to give notice containing the plan to 3 categories of persons. First one, ROC. Second one, if the company is under liquidation, official liquidator. Third one, any person who is affecting because of this decision, and that means affected persons. So first, these people are required to prepare a plan, and that plan must be given to ROC, official liquidator, affected persons. Now a 30 days time limit will be given to these people. So within 30 days, they will provide their objections or suggestions. Now based upon the objections or suggestions given by these people, now A Limited is required to conduct members meeting plus creditors meeting. B Limited is required to conduct members meeting as well as creditors meeting. Now approval is taken in that meeting. How many people need to agree? So normally, what is the consent percentage? In number, more than 50%. In value, more than or equal to 75. But here it is 90%. So here also, in creditors meeting also, more than 50% people need to agree, and those people need to have minimum 90% of total debt. Because in regular process, 75% will be sufficient. But in fast track process, 90% people consent is required. So in number, 50%, in value, 90%. For members meeting, it is applicable for both A Limited members meeting as well as B Limited members meeting. And for creditors meeting of both the companies also, same rules are applicable. Now after taking the approval, now from this moment onwards, transferee company will continue, not transferor company. What is transferee company here? A Limited. Now A Limited will give approved plan to again 3 category of people. Who are those people? ROC, official liquidator. Instead of affected person, it will give approved plan to central government. Now ROC as well as official liquidator, they will have certain time limit. If they want to give any objections or suggestion, they can give that objection or suggestion to central government. Now central government received three informations. One information is from A Limited. Another information, nothing but objections or suggestions from ROC, objections or suggestions from official liquidator. So based on all this information, central government will decide whether to continue with fast track merger or to go for regular merger. So if CG is happy with fast track merger, so then they can proceed with the plan. If CG is not happy with fast track merger, so they want to go for regular merger. Now CG can't directly make an order for regular merger. It need to convey this matter to NCLT. Now NCLT will take the final call whether to go for regular merger or not. So this is about fast track merger case. Next one. So what is the next one? Merger or amalgamation with foreign company. So for example, Indian company and foreign company is there. Indian company is going to merge with foreign company. So this is also a merger or amalgamation case. Then what procedure they are required to follow? Same procedure. If simplified process is applicable, they can follow simplified process. If simplified process is not applicable, they will follow regular process. But here the problem is, transferee company is required to pay purchase consideration to transferor company. How to discharge this purchase consideration? Either in cash or by way of depository receipts like ADR, GDR, or by using both. And this entire process need to comply with the provisions of FEMA also. That is Foreign Exchange Management Act. That's it. And last concept. So what about merger or amalgamation because of CG's order? Actually, merger or amalgamation, it is the voluntary decision of companies. But in few cases, in the interest of public, what CG can do? CG can order for merger or amalgamation. In that situation, there is no further option available to the companies. So, say for example, CG ordered A Limited and B Limited to merge with each other to form AB Limited. Now there is no option to A Limited shareholders and B Limited shareholders. Both need to agree. But in this situation, because of this merger, if any shareholder is suffering with loss, then that loss need to be compensated. Who need to compensate? Transferee company. Transferee company means AB Limited. Because A Limited, B Limited merge with each other, they form AB Limited. That means transferor companies are A Limited, B Limited. Transferee company is AB Limited. So who need to pay compensation to the shareholders of A Limited and B Limited who suffered with loss? Yes, transferee company. Sir, what happens if they received only less compensation? Loss is 1 lakh, but they received compensation of 30,000 only. Still there is a loss of 70,000. Then what is the option available to those people? So because of compulsory merger, they are suffering with loss and that loss is completely not compensated. So then they can approach NCLT. They can go for appeal. If NCLT asks CG to provide extra compensation, now CG will ask transferee company to provide extra compensation. That's it. So here, no need to follow the regular process or simplified process, because this is the order which was given by CG. So by this we completed this chapter. And next one, prevention of oppression and mismanagement. So if controlling shareholders, so if they create any disturbance to minority shareholders, then it is called as oppression. Say for example, there are 3 shareholders A, B, C. A is having 80% shares, B is having 10% shares, C is having 10% shares. In this case, who is called as controlling shareholder? A, because he can easily pass OR or SR. And what about minority shareholders B and C? They can't do anything. So in this situation, so what A can do? So A can easily affect both B and C. Reason is, so under Indian law, how to take decisions? By having more than 50% of consent. They can easily take decision, which is nothing but called as OR. That means if more than 50% of people agrees, then it will become the decision of the entire company. Even though there are some people who was not agreed with this proposal, but still they are required to follow this because of rule of majority. So we are following that kind of rule. If majority people agree, it will become the decision of entire people, not only the majority people. So that's why if OR is passed, it will become the decision of the company. If SR is passed, it will become the decision of company. Now what about dissenting people? They need to follow the same. In this situation, there is a chance to A to affect both B and C. If he affects both B and C, it will be called as oppression. Next one. Then what are the remedies available to minority shareholders? Because if I'm having certain number of shares which is capable enough to pass ordinary resolution, so I can easily pass ordinary resolution and I can compel remaining shareholders to follow my decision. So for this point, other shareholders are called as minority shareholders. And what remedies are available to minority shareholders? Let's see one by one. First one. So A, B, C and D. 4 people are available. A is having 60% shares or 70% shares. B 10%, C 10%, D 10%. So in this case, who can easily pass over? A. So A is called as controlling shareholder. And what about B, C, D? Minority shareholders. Now A, by passing ordinary resolution, you want to do ultra vires activity. That is the beyond the powers of the company, which are stated in MOA or AOA. Then what will happen? B, C, D, even though they are minority stakeholders, they can stop A from doing such activities because it is ultra vires to the company. So whenever controlling shareholder want to do ultra vires activities, minority shareholders, they can stop the controlling shareholder. Next one. In order to stop the controlling shareholder, they need to get stay order. That stay order is otherwise known as injunction order. Next one. Now, it is not ultra vires, it is within the powers of the company, but A want to defraud BCD. That means controlling shareholder want to defraud minority shareholders. Even though now in this situation it is not ultra vires, as the intention is to defraud remaining people, so BCD can go to court and they can bring injunction order. So first, what is the reason? First case, it is ultra vires to the company. It is beyond the powers of the company. Second case, even though it is within the powers of the company, they want to do fraud against minority shareholders. And third one, so management is having some wrong people. So A is not correct person. He will take only personal advantage but not company's advantage. In this situation, whatever the decisions that are made by A can be stopped by remaining people by showing this person as a wrong person. Next, point 4. So whenever special resolution is required, then what happens if A passes ordinary resolution? It will not become the decision of the entire company. Actually, according to rule of majority, see if majority people, if more than 50% people agree, it will become the decision of whole the people. But in this case, whenever SR is required, so simply OR is not equal to SR. That's why it will not become the decision of the entire company. Next one, personal actions by shareholders. So what about personal actions by shareholders? Actually, every shareholder will have few rights. That is right to get dividend, right to get bonus shares, right to get right shares, and right to vote. So these are the rights which are available to individual shareholders. If controlling shareholder want to give dividend only to few shareholders but not to other shareholders. So for example, A want to declare dividend and he only want to take the dividend. He don't want to give any dividend to BCD who are minority shareholders. No, BCD can stop this because getting dividend is each person's right. Getting right shares or bonus shares is each person's right. So voting at the meeting is each person's right. If controlling shareholder want to remove such rights from minority shareholders, then minority shareholders can stop the controlling shareholder. Next one. Now, breach of duty. Actually A, so he is the controlling shareholder. He need to act in the best interest of the company. So that is the duty on part of A. But what happens when there is any breach of duty? He is not acting in the best interest of the company. Then what will happen? B, C, D can stop A. That means in normal situation, rule of majority will prevail. If more than 50% people agree, it will become the decision of the entire people. But in few situations, minority shareholders can stop controlling shareholders. What are those situations? First one, by using war, they want to do ultra vires activities. Minority shareholders can stop him. So by using war, they want to commit fraud on minority shareholders. Minority shareholders can stop them. So the person who is capable of passing war, that person is not a good person. That person is having some fraudulent intentions. Then The decisions made by that person can be challenged by minority shareholders. So when SR is required, the person who is capable of passing war passes only war. Then it will not become the decision of the entire company, because in that situation what is required? SR is required. Next one, by using war, if that person want to affect the personal rights of the shareholders, it is not possible. By using war, if that person commits breach of his duties, own duties, then remaining people can stop that person. In all these cases, rule of majority will not be prevail. That means the decision of majority people will not become the decision of entire company. Next one. So what are the rights available to member to prevent oppression and mismanagement? So till now we discussed about oppression. What is meant by oppression? If controlling shareholders want to affect the minority shareholders, it is called as oppression. Then what is meant by mismanagement? So what is meant by mismanagement? So because of directors' ineffective decisions, company is suffering with loss. If directors made sound decisions, then there may be any loss, there may be no loss to the company. But because of inefficiency of directors only, the company is suffering with loss. Then it will be called as mismanagement on part of directors. Now in case of oppression, mismanagement, what are the rights available? Either member or central government can go to NCLT. If member or central government, if they go to NCLT, NCLT will check the case, and in that situation, if NCLT feels that there is oppression, if there is mismanagement, what NCLT will do? So in case of oppression, so they will ask controlling shareholder to transfer certain shares to minority shareholder. So what will happen because of this? So for example, in previous case, A is having 70% shares and B is having 10, C is having 10 shares, D is having 10% shares. Now NCLT will ask A to give 21% of shares to remaining 3 people. Now what about the share of A? It will become 49. And what about the share of B? 17, C 17, D 17. Now A alone can't make any decision. That means till now, because of his supreme position, so he enjoyed a lot. Now this power was removed by NCLT. How this power was removed? By transferring certain shares of this person to remaining shareholders, that is minority shareholders. So this is how NCLT will deal with oppression. Then what about mismanagement? So if there is any mismanagement, NCLT will remove those directors. And NCLT will add disqualification to those people. Now those people will not be allowed to become director in any company for 5 continuous years. That means disqualification by court or tribunal case. So it will give disqualification, and that person is disqualified for how many years? 5 years. Now the question is, if certain members want to go to the company, how many members need to appeal to the company, appeal to the NCLT? If central government want to make an application to NCLT based on operational mismanagement, when it can go to NCLT's place? So first one, number of members. So how many members are required to file a suit with NCLT regarding operation or mismanagement? Same rule. If the company is having share capital, if the company is not having share capital. If the company is having share capital, 1/10 of total members or 100 members or any number of members having 1/10 of issued share capital, whichever is lower. If company does not have share capital, 1/5 of total members. These many number of people need to make a complaint with NCLT regarding operation mismanagement. Now NCLT will take action. Next one. If central government want to file a suit with NCLT, based on what reasons it will file a suit? So for example, so in the company, in board of directors team, there are some people who are found guilty of fraud. That means the company's board of directors contain fraudulent people who already proved in various fraud cases. Now based on this reason, central government may ask NCLT to open the case. Next one. Second one. Now board of directors are having genuine persons only, but because of their mismanagement, because of their negligence, company is suffering with loss. Now CG can make application to NCLT. Third situation. Now board of directors are good only, but because of their negligence, even entire industry is getting affected. Not only that single company, entire industry is getting affected. Then in this situation also, CG can make an application to NCLT. Or if the company is operated in such a manner in order to affect company's interest or members' interest or creditors' interest. That means the company is formed to defraud these people. Even in this situation also CG can go to NCLT. So in this situation, CG will ask NCLT to look at the matter. Now what NCLT will do? So in this case, NCLT will remove such directors and they will appoint new director, and remove directors are disqualified for 5 years. Next one. Last concept. Class action suit. What is meant by class action suit? If group of persons combinedly filed a suit with NCLT, then it will be called as class action suit. Then group means who will be covered here? Members will be covered. Depositors who gave deposit amount to the company, even those people are also covered here. In case of members, how many people need to make suit? So we need to check whether company is having share capital or not having share capital. In case of depositors, no need to check all these things. Next one. If company is having share capital, then 100 members, 1/10 of total members, or persons having 1/10 of issued capital, whichever is lower. If company don't have share capital, 1/5 of total members. Next one. In case of depositors, 100 depositors, 1/10 of total depositors, or any number of depositors having 1/10 of total value. So these many number of depositors can file class action suit. Now what happens when a class action suit is filed with NCLT? Now what NCLT will do means NCLT will give advertisement. So NCLT will give advertisement about this class action suit. Now after giving advertisement, so whatever the cases which are having same type of nature. So for example, so members or depositors went for class action suit. So based on ultra virus activities. Now any class action suit which is related to ultra virus activity will be covered with this main class action suit. That means multiple cases with same reason will be clubbed with each other. Next one. So when class action suit will be taken, here also there are some reasons. So first one. So company is doing ultra virus activity. That means it is not following MOA AOA. So without following MOA AOA, company is about to make a contract. By bringing class action suit, we can stop the company. Without following company law or some other law, it is making a contract. Now by bringing class action suit, we can stop the company. Next one. Now members passed either WAR or SR to do a contract. But company is doing something which is against to this WAR or SR. Now we can stop the company by using class action suit. That means company is doing 3 mistakes here. First one, it is doing ultra virus. That means it is not following MOA OA. Second one, it is not following Companies Act and other applicable laws. Third one, it is not following shareholders mandate. That is WAR or SR. In all the 3 cases, company is doing some activity which is against to MOA OA, which is against to Companies Act or any other law, which is against to WAR or SR. Then what we can do? By bringing class action suit, we can stop the company from doing such activities. Next one. Now company passed a resolution. Company passed a resolution in order to alter MOA or AOA. Actually to alter MOA AOA, what is required? Special resolution is required. If it is a section 8 company, along with special resolution, CG's approval is also required. Now the point is, this resolution is passed by suppressing some material facts, or by providing some false particulars. So by providing false particulars or by suppressing some material facts, so they passed a special resolution in order to alter MOA AOA. Now what we can do? We can bring class action suit and we can make this special resolution as void. We can stop company from doing anything based on this special resolution. And because of this, if any person suffered with loss, so we can ask even for damages. So by this we completed entire Companies Act. So what is our next chapter? IBC. IBC stands for Insolvency and Bankruptcy Code. Code of Indian. So actually it will deals with 2 matters. One is insolvency situation, other one is bankruptcy situation. So what is meant by insolvency? If a corporate person means body corporate, or individual. If a corporate person or individual is not capable of clearing their liabilities, whether through income or through assets, if they are not capable of clearing that debt, then they are said to be in which position? Insolvency position. Now, what is the solution for this insolvency position? In case of corporate entities, first we will try to revive that entity. If revival is not possible, liquidation. That means winding up. In case of individual, we can't say go and die, because in case of corporate entities we can order for liquidation, but in case of individuals we can't do like that. So in case of individual, so we need to order for bankruptcy. Now the point is, so revival process is called as resolution process. That is solution for insolvency. Next one, liquidation process. So first, in case of corporate entities, we need to apply resolution. If resolution is not working, we need to go for liquidation. But in case of individual, there is only one situation which is called as bankruptcy. Now the point is how to deal with all these situations. In order to deal with resolution, we need to have a separate person called as interim resolution professional, and thereafter resolution professional, who is a final person. For liquidation, we need to have liquidator. For bankruptcy, we need to have bankruptcy trustee. So who will take care about resolution process? RP. Who will take care about liquidation process? Liquidator. Who will take care about bankruptcy process? Bankruptcy trustee. Then who can become RP or liquidator or bankruptcy trustee? Who can become RP or liquidator or bankruptcy trustee? So for this purpose, there are three institutes: ICAI, ICMAI, ICSI. So ICAI, they will produce chartered accountants. ICMAI, CMS, ICSI, CS. Now, if any person qualified CA and he is having 10 years practice experience, the same is applicable even for CMS and CS also. If these people are having 10 years practice experience, they are required to write an exam which is conducted by respective institutes, which is about insolvency course. If they complete that insolvency course, now these people will get enrolled to a panel which is maintained by IBBI. IBBI stands for Insolvency and Bankruptcy Board of India. Now IBBI will maintain a panel. Now any person who is a chartered accountant, cost accountant, company secretary with 10 years practice experience and who has qualified the exam which is conducted by respective institutes, so that person name will be enrolled to this panel. Now the person whose name is enrolled in this panel can act like RP if it is a resolution case. He can act like liquidator if it is liquidation case. He can act like bankruptcy trustee if it is bankruptcy case. That means single person will do three roles. And who is that single person? Insolvency professional. This person will be called as insolvency professional. Then how to become insolvency professional? By completing these courses, by having 10 years of practice experience, by passing the exam conducted by these three institutes. So that person will become IP. His name will be entered into panel maintained by IBBI, and this person will be appointed as either as RP or as liquidator or as bankruptcy trustee. So in case of RP, we discussed about IRP. Who is IRP? Interim resolution professional. That means temporary RP. So first of all, temporary RP will be appointed by NCLT. Later on, committee of creditors will appoint final RP. So that's why we discussed about two situations here. One is IRP, other one is RP. So now a corporate entity become insolvent. It went into insolvency. Then it will be called as corporate insolvency. What happens when individual went into insolvency? It is called as personal insolvency. So there are two types of insolvencies. One is corporate insolvency, other one is personal insolvency. So what is meant by corporate insolvency? Companies, LLPs, or any other body corporate. If they went into insolvency process, it will be called as corporate insolvency. Here even individuals will also be covered when who provides guarantee to any of these corporate entities. So who provides guarantee for any of these corporate entities, that individual will be covered under corporate insolvency only. Next one, second one, personal insolvency. So who will be covered under personal insolvency? Individuals, partnership firms, proprietary firms, everything which is not having separate legal entity status, which is not having artificial person status, all these entities or persons will become normal persons. Their insolvency will be covered under personal insolvency. Now the question is, in case of corporate insolvency, who will take care about the matter? It is NCLT, National Company Law Tribunal. In case of personal insolvency, who will take care about the matter? DRT, Debt Recovery Tribunal. And the orders of NCLT can be appealed at NCLAT, National Company Law Appellate Tribunal. And the orders of DRT can be appealed at DRAT, so Debt Recovery Appellate Tribunal. Next one. Now, the important concept is corporate insolvency only, but not personal insolvency. So that's why we are going to cover corporate insolvency. Then what is the procedure in case of corporate insolvency? First one, there must be a default. So what is meant by default? So if a company is required to pay minimum 1 crore, but company fails to pay that 1 crore amount, then it is called as default. When there is any default, then what can be initiated against the company? Corporate insolvency resolution process. So initially we can't go for liquidation. Initially we need to go for resolution. So that's why CIRP can be initiated. Now the question is, who will initiate CIRP? NCLT. Why NCLT will initiate CIRP? Because some people made a complaint against company. Who can make the complaint against company? Financial creditor, operational creditors. Next one, corporate debtor. Now the question is, what is the difference between creditor and debtor? Creditor means the person who is entitled to get the money. Debtor means the person who is obliged to pay the money. Then what about financial creditor and operational creditor? If company is required to pay money for credit purchase of goods, operational creditor. If company is required to pay salaries to employees, operational creditor. So paying for raw materials, paying for labor, incurring overhead expenses, all these things will come under operational debts. And the person to whom the company is liable to pay money, those people will be called as operational creditors. Then what about financial creditors? Financial creditors. So if company took any loan from any bank or financial institution, the bank or financial institution will become financial creditor. Next one. Now, financial creditor can initiate the case, or operational creditor can initiate the case, or corporate debtor itself, that means the company itself, can initiate the case. So if there is any default, either financial creditor or operational creditor or corporate debtor itself, that is the main company which is under insolvency position. So those people can ask NCLT to initiate CIRP, which stands for Corporate Insolvency Resolution Process. Now, at the time of making application, so financial creditor is required to propose IRP. Operational creditor is required to propose IRP. Corporate debtor is required to propose IRP. IRP stands for Insolvency Interim Resolution Professional. Now, proposing IRP by financial creditor is mandatory. Next one, by corporate debtor is mandatory. But by operational creditor, It is optional. Now the point is, if they file a suit with NCLT in order to initiate CARP, now NCLT will review the case and NCLT will pass an order to initiate CIRP. Now within how many days this CRP process need to be completed? Within 180 days. So there are time extensions. We can discuss about that concept at later point of time. So as of now, general rule 180 days. The entire CRP process need to be completed within 180 days. Now after initiating CRP, it need to be completed within 180 days. Now what NCLT will do? First one, it will do three things. First one, it will appoint IRP who was proposed by applicant. So financial creditor may propose IRP. So operational creditor will propose IRP and corporate debtor will propose IRP. That IRP will be appointed as IRP by NCLT. But this person is temporary RP. The main RP will be appointed by COs. So now NCLT will appoint IRP. NCLT will make public announcement about CRP process. And finally, NCLT will impose moratorium period. So what is meant by moratorium period? During moratorium period, so no person is allowed to file a fresh case against company. And no person is allowed to continue the existing case also. All pending cases and all fresh cases need to be stopped. So till the completion of entire CARP process. That is called as moratorium period. So what NCLT will do? It will appoint IRP who was proposed by applicant. It will announce public announcement. And finally, it will impose moratorium period, and this moratorium period will be there till the completion of CRP process. Now, IRP is appointed. What IRP will do? IRP will collect the information about debts. He will collect the information about debts. So what he will do by collecting the information about debts? He will find out who are the creditors of the company. So what he will do after finding out who are the creditors of the company? He will form a committee called as COC, that is Committee of Creditors. Now after forming COC, now what COC will do? Now they will decide whether to continue with existing IRP or to appoint new RP. If they want to continue existing IRP, they can continue. Now IRP will become final RP also. But if they want to appoint some other person, then by taking the permissions of NCLT and IBBI, they can proceed with new RP. Next one. What new RP will do? So what new RP will do? So he will prepare information memorandum. So what is meant by information memorandum? So it will contain each and everything about the company. So even SWOT is also covered. Strength, weakness, opportunities, threats, everything, every information about the company will be provided in information memorandum. Now, RP will show this information memorandum to few investors in order to attract investment. Now, if investor want to make any investment in this company, so they can make that investment based on this information memorandum. That amount will be used in order to revive the company. Now, the person who is investing in the company will be called as resolution applicant, RA. That person is called as resolution applicant. Now, resolution applicant, after reading information memorandum, he will come up with a plan called as resolution plan. Now, this resolution plan will be given to RP. Now, what RP will do with this resolution plan, which are submitted by various resolution applicants? So, he will present all these plans in COC meeting. Now, COC members need to agree the resolution plan which is proposed by resolution applicant. So, if it is objected, if no plan is approved, the immediate consequence will be NCLT will order for liquidation. If plan is approved, but that plan is not in accordance with IBC, so NCLT will order for liquidation. If plan is approved and it is following all the provisions of IBC, then NCLT will also approve that plan. Now, if NCLT approves that plan, the company is required to implement that plan and the company is required to revive. Now the point is, at the time of implementation of plan, will NCLT have any role? Yes. NCLT can monitor the implementation process. They will monitor the implementation of this plan. If there is any issue, they will give some directions also. Next one. If any modification is required in the plan, NCLT can give modifications also. If there is no use for that plan, so even though that plan is implemented, the company is not going to be revived. Even after making adjustments also, it is not possible to revive the company. Then it will pass liquidation order. So when plan is completely ineffective, it will pass liquidation order. So these are the powers that are available to NCLT during the implementation of plan. Now the point is, so if the company is revived successfully, what will happen? No need to go for liquidation. But if plan is not approved, next one, if plan is approved, but it fails to fulfill the requirements of IBC, that means IBC provisions are not satisfied. Next one, plan is approved plus IBC provisions are satisfied, but it become ineffective. So because of this plan, no valuation is there for company, not possible to revive the company. In all these cases, what NCLT will do? NCLT will pass liquidation order. Once NCLT passes liquidation order, what will happen to RP? He can become liquidator, or NCLT can appoint some other person as liquidator. Now what is the role of liquidator? First, liquidator need to prepare liquidation estate. What is meant by liquidation estate? All the assets of the company will be added to liquidation estate. If that asset doesn't belong to company, if that asset belongs to some other person, but company is having possession of that asset, that kind of assets will not be added here. That means here those assets will be added where company is having ownership. Next one. So all assets will be added to liquidation estate, and this liquidation estate will be used to pay debts of the company. So while paying debts, there will be a priority order. So we need to discuss about the priority order. So first priority, second priority, third priority, like that. So after paying all the debts, now liquidator will ask the NCLT to pass final order about dissolution of the company. So now NCLT will pass dissolution order. After passing dissolution order, the company will be dissolved. So this is how liquidation process will end. Now say, in case of corporate persons, that is in case of corporate insolvency, what is the process? First, they will try to set the company by resolution plan. If it is not possible, they will liquidate the company. Then what is the procedure that need to be followed here? First of all, there must be a default. Minimum amount of default will be 1 crore. Next one, who can file application with NCLT? Financial creditor, operational creditor, corporate debtor. So while making application, they are required to propose IRP. Now what NCLT will do? It will initiate CRP. It must be completed within 180 days. Now what NCLT will do? It will do three things. First one, it will appoint the proposed candidate as IRP. Second one, it will make public announcement. Third one, it will impose moratorium period. So during this moratorium period, no fresh cases, no existing cases can be continued. Then what IRP will do? He will collect information about debts. He will create a committee of creditors. Now committee of creditors, so they will appoint RP. Now RP will prepare information memorandum, which is nothing but a database, and RP will give this database to resolution applicants, nothing but investors. Now various investors will come up with various plans. All these plans need to be submitted by RP in COC meeting. Now in COC meeting, one of the plan may get approved, and if it is satisfying IBC provisions, and if it is implemented properly to revive the company, then so with this step everything will be completed. What happens if the plan is not approved? What happens if plan is approved but it is not in accordance with IBC? What happens when both are satisfied but the plan is ineffective? In all these cases, NCLT will pass for liquidation order. Now who will become liquidator? RP will become liquidator, or some other person may become liquidator. Next one, in case of liquidation, what they will do? They will pull up all the assets into one estate called as liquidation estate, and they will sell asset by asset, and they will realize money. With that money, they will pay debts in priority order. After paying all the debts, now liquidator will make an application to NCLT to ask for dissolution. Now NCLT will pass dissolution order.
So first of all,
What is the difference between corporate insolvency and personal insolvency? If a company or LLP or any other body corporate or personal guarantor who is an individual for corporate debtor. So for all these cases, insolvency will be called as corporate insolvency. What about personal insolvency? Individual, sole trading concern, partnership firm. So these are called as personal insolvency. Then what is the solution for corporate insolvency? First one, resolution. So if it is failed, next one, liquidation. What about personal insolvency? Bankruptcy proceedings. Then who will do entire process? In case of resolution, it will be done by RP or IRP. Initially IRP, but later on RP. And what about liquidation? Liquidator. What about bankruptcy? Bankruptcy trustee. And all these people are nothing but insolvency professionals. Then who will prepare all these insolvency professionals? ICAI, ICMAI, ICSI. So in order to become insolvency professional, so the person need to qualify the exam conducted by ICAI, ICMAI, ICSI, and that person must be a qualified CA, CMA, CS with 10 years of practice experience. Next one. So in case of corporate insolvency, so first one, resolution. So how to initiate resolution? So in this case, either financial creditor or operational creditor or corporate debtor, they can file an application with NCLT to initiate CARP. Now if NCLT accepts the application, CARP will be initiated and it must be completed within 180 days. Next one. And thereafter, NCLT will make public announcement. It will appoint IRP and it will impose moratorium. So in case of moratorium, so it is not allowed to file any fresh case against the company and it is not allowed to continue the existing cases also. Next one. And thereafter, IRP will collect the claims from all the creditors. He will create a committee called as COC and COC will appoint RP and RP will prepare information memorandum. By using that information memorandum, so resolution applicant will give his resolution plan. Nothing but investor will give his investment plan. Now one of the plan need to be approved by COC in its meeting and thereafter final approval is required from NCLT. So what happens if plan is not approved by COC? What happens if plan is approved but it is not in compliance with IBC? What happens if plan is approved and it is in compliance with IBC, so but proper implementation is not possible? Liquidation. In all these cases, NCLT will order for liquidation. In case of liquidation, so existing RP can continue as liquidator or new person can become liquidator. Then what is the role of liquidator? So first he will run the company for certain time period in order to make a beneficial liquidation and thereafter he will prepare liquidation estate. So liquidation estate means it is nothing but the properties of corporate debtor. Now he will sell all the properties in liquidation estate so that he will realize some money and by using that money he will pay debts in some priority order. After paying debts, what is the last step? Dissolution. Dissolution means closure of the company. That's it. So first one, applicability, non-applicability of IBC. So IBC is applicable to all these people. Who are these people? Corporates, non-corporates. Under corporates, company got covered, LLP got covered, any other body corporate got covered. Individual is also covered when he provides any personal guarantee to corporate person. Then what about non-corporate? Individuals, partnership firm and proprietor firm. So now for all these people, what is applicable? IBC is applicable. That is the first one. Then what about non-applicability of IBC? It is not applicable to financial service provider. That means the entities which are providing financial services. So in case of insolvency of such entities, it will be dealt by RBI, but not by IBC. So example, banks, financial institutions, insurance companies, asset reconstruction companies, mutual funds, and collective investment schemes and pension funds. So all these entities are nothing but financial service provider. So their insolvency will be dealt by RBI but not by IBC. That means IBC is not applicable for these entities. Next one, regulatory mechanism and regulatory bodies. So first of all, IBBA stands for Insolvency and Bankruptcy Board of India. So they will maintain the panel of insolvency professionals. And if insolvency professional is involved in any misconduct, who will take action against that person? IBBA. And IBBA will maintain a database. So for example, if any person gave any loan to the company, he need to give that information to IBBA and that information will be saved in database. What is the purpose of giving that information to IBBA database? In future, so when you want to initiate CRP proceedings against a corporate debtor, first you need to prove that that corporate debtor owes you some money. So how you will prove in the NCLT? By using the database information. So that's why at the time of giving loan only, you need to update the database of IBBA. Next one. So that database is called as information utility. So we covered 2 points. Next one, adjudicating authority. So who is adjudicating authority? In case of corporate insolvency, it is NCLT. In case of personal insolvency, it is DRT. So National Company Law Tribunal, Debt Recovery Tribunal. And appellate authority, National Company Law Appellate Tribunal, Debt Recovery Appellate Tribunal. They are appellate authorities. Next one, insolvency professional agencies means CA Institute, CMA Institute, CS Institute. Insolvency professionals means CS, CMS, CS who completed insolvency exam after having 10 years of practice experience. And these people can act like RP, IRP in case of resolution process. They can act like liquidator in case of liquidation process. They can act like bankruptcy trustee in case of bankruptcy proceedings. Next one, who can initiate CARP? Who can't initiate CARP? Who can initiate CARP means financial creditor, nothing but banks or financial institution which provide loan to the corporate debtor. Next one, operational creditor, nothing but supplier who supplied goods on credit basis. Even employees will be covered under operational creditor. Next one, corporate debtor, company itself, company or LLP, whatever it may be. So which need to pay money to either financial creditor or operational creditor. So that company or LLP itself will be called as corporate debtor. Now the question is, who cannot initiate CARP process? So first of all, there is a company A Limited. On this A Limited, already CARP is initiated and the CRP process is completed during last 12 months. That means 12 months time is not yet expired. So after successful completion of CRP, 12 months time is not yet completed. Now is it possible to initiate CRP once again against the same company? No. That means if one CRP process is completed, in order to initiate another CRP process, you are required to wait for 12 months. Next one. Now, A Limited is already under CRP. Now, a person want to initiate another CRP against A Limited. Is it possible? No, because when a company is under CRP, it will be under moratorium. It is not possible to file a fresh suit. And it is not possible to continue existing suits also. So because of this reason, if a company is already under CRP process, it is not possible to initiate another CRP against the same company. Next, third one. Now, on A Limited, CRP is initiated and plan is also submitted. But with respect to implementation of plan, the corporate debtor or creditors made a default. When they made any default during 12 months, then it is not possible to initiate CRP against that company once again within 12 months. That means after 12 months, it is allowed. Next one, finally, if A Limited is under liquidation. So if it is already under liquidation, how is it possible to initiate CRP? So it is not possible. That means in total 4 situations, initiation of CRP is not possible. What are those 4 cases? First one, CRP. So this is initiated. This is initiated and it is pending. So it is not possible to initiate another CRP. Next one, CRP. It is initiated, but They fail to implement the plan. They fail to implement the plan. Next, you are required to wait for 12 months. Next one, CRP is initiated and they implemented the plan successfully and 12 months time is not yet expired. So in all these cases, it is not possible to initiate a fresh CRP. And last one, what happens when the corporate debtor is already under liquidation? So if it is already under liquidation, it is not possible to initiate CRP. So in first case, so CRP is pending. In second case, CRP is failed but 12 months is not yet expired. In third case, CRP is successful but 12 months time is not yet completed. In fourth case, the company went into final stage. Next one, resolution applicant. So who is resolution applicant? Nothing but investor. So RP will prepare information memorandum. Based on the information in information memorandum, resolution applicant will give resolution plan. Resolution plan means nothing but plan of merger, plan of amalgamation, plan of acquisition, takeover. So this is nothing but called as resolution plan. Who will give resolution plan? Resolution applicant. Nothing but resolution applicant is the person who will make investment in the company. Now the question is, who are not eligible to provide resolution plan? So all people are eligible to provide resolution plan. That means any person can become resolution applicant in order to provide resolution plan, but few persons are completely not allowed. Then who are those few persons? First one, insolvent. So first of all, if he is insolvent, he need to take care about himself, not about the company which is under CRP process. Next one, willful defaulter. So willful defaulter means he took a loan from the bank and he intendedly want to avoid the payment of loan. In that situation, bank will declare that person as willful defaulter. When any person is declared as willful defaulter, so that person is not eligible to provide resolution plan. Next one. Now, if any person is having NPA, NPA stands for non-performing asset. So if the debt amount is outstanding for more than 90 days, the asset will be classified as non-performing asset. Now, if a person account become NPA, or if an entity account become NPA which is managed by this person, that means his account become NPA or the entity's account become NPA, that entity is being controlled by this person. In both these cases, this person is not eligible to provide resolution plan, because first of all he need to take care about his own NPAs or his entity's NPAs. Next one. So this is imprisonment case. So if any person did any crime and he went to jail, then that person is not allowed to provide resolution plan. But here there is a condition. For how many years he need to go to the jail? First one, if it is the offense which is covered in 12th schedule of IBC. If the offense is covered in 12th schedule of IBC, then 2 years of imprisonment will be sufficient in order to stop that person from providing resolution plan. Sir, what happens if it is related to any other law? Then it will be 7 years. Say for example, if it is related to company law, 7 years. If it is related to LLP law, 7 years. If it is related to any other law, 7 years. If it is related to IBC, just 2 years imprisonment will be sufficient in order to make that person not eligible for providing resolution plan. Next one, any person who is disqualified to act like director under company law. So we discussed about section 164 subsection 1 disqualifications, section 164 subsection 2 disqualifications. So in both these disqualification cases, the concerned director will be disqualified. In 164 subsection 2, all the directors in the company will be disqualified. Now the person who is disqualified to act like director, the same person cannot provide resolution plan. Next one. Now, if any person is prohibited by SEBI from assessing stock markets, even that person is not allowed to give resolution plan. Next one. If any person is involved in preferential transaction, undervalued transaction, extortionate transactions, or fraudulent transaction. So what is the definition of each one? Let's see one by one. So first one. Now there is corporate debtor, and this corporate debtor is having so many financial creditors. Okay. Now out of financial creditors, say for example 10 financial creditors are available. Out of 10 financial creditor, so corporate debtor want to make payment to one financial creditor by keeping remaining 9 financial creditors aside. That means he is giving priority to that one financial creditor. So this is nothing but preferential transaction, because if he want to pay money, he need to pay money to all 10 financial creditors proportionately. But instead of paying that money proportionately, he is giving the entire money to one single financial creditor. That means he's doing a preferential transaction with one single financial creditor. Now the case is, if any person is convicted under preferential transaction, that same person cannot be given cannot be so a resolution applicant. That means that person cannot provide resolution plan. Next one. This is preferential transaction. Next one, undervalued transaction. Say for example, corporate debtor is having assets. It is having asset, that is land and building, whose value is 10 crores. But corporate debtor sold this 10 crore value asset to a person for 3 crores only. So this is called as undervalued transaction. What will happen if corporate debtor did like this? Now actually this 10 crore asset need to be available for payment of debt amount to creditors. Now what happens if it is sold for 3 crores? Company will realize only 3 crores. What about balance 7 crores? It is nothing but loss to creditors. It is not loss to company. It will become loss to creditors. So that is the reason why even this transaction is called as a void transaction. So this is a preferential transaction. This is undervalued transaction. Next one. Now corporate debtor is in dire need of funds. So he went to a money lender office and he took a loan from money lender at the rate of interest of 40% per annum, which is unreasonable rate of interest. Now remaining financial creditors are getting normal interest only, but this financial creditor is getting 40% per annum interest. So here also fund diversion is taking place. So for example, if liberal rate is 20% per annum, but they are paying extra 20% per annum, that means they are diverting funds to this person. So what happens when the fund got diverted to some other person? That fund is not available for payment of debts to creditors. So that is the reason why even this transaction is also void. And this kind of transactions are called as extortionate transactions. And not only these 3 transactions, in order to defraud creditors, if corporate debtor made any transaction, the transaction will be called as fraudulent transaction and it is void. Now the point is, if any person is involved in either preferential transaction, that is giving priority to one creditor. Next one, undervalued transaction, that is by selling asset for lower value, and extortionate credit transaction, taking loan with unreasonable terms and conditions, or any fraudulent transaction, that person is not allowed to become resolution applicant. That person is not allowed to provide resolution plan. Next one, guarantor. The person who is acting like guarantor for corporate debtor. That means if corporate debtor fails to pay money, this person is required to pay money. So if that person is in that position, that is guarantor position, that person is not eligible to provide resolution plan. Next one. So just now we discussed about 8 points. Now, if that person belongs to some other country, say for example, USA, and in USA, according to USA laws, that person is suffering with disqualifications like what we discussed in point 1 to point 8. Now, even this person is also not eligible to provide resolution plan. That means point 1 to point 8 covers about ineligibility cases according to Indian laws. Point 9 covers about ineligibility cases according to foreign laws. And what about point 10? Any person who is connected to any person who is involved in first 8 transaction, or any person who is involved in 9th transaction. So all relatives, that is connected persons to above people, will be disqualified and they are not allowed to provide any plan. So now say, who can provide resolution plan? Any person except these people. Who are these people? Point 1 to 8 according to Indian laws, point 9 according to foreign laws, point 10 relatives of the person who covered in Indian laws and relative of the persons who covered in foreign laws. So what are the cases? Insolvency, willful defaulter, whose account or whose entity's account become NPA, and who is having imprisonment. If it is related to IBC, 2 years. If it is related to any other law, 7 years. And disqualified to act like director, prohibited by SEBI from assessing stock markets, and who carried preferential or undervalued or extortionate or fraudulent transaction, and who provides guarantee. Next one. So, who can initiate CRP with NCLT? Financial creditor, operational creditor, corporate debtor. Now, what are the conditions to initiate CRP? First one, there must be a default. In all the cases, the primary requirement is there must be a default. So then only initiation of CRP is possible. Now, what is meant by default here? So company is liable to pay at least 1 crore, but company fails to pay that 1 crore. Then it will be called as default. When this default is triggered, then only these people can file application with NCLT in order to initiate CRP. Now, financial creditor means who need to file the case. Say for example, company is having loans from SBI, HDFC and ICICI. So this company is having financial debts from SBI, HDFC and ICICI banks. Now the point is, who can initiate CRP? Any financial creditor. So SBI alone can initiate CRP. HDFC alone can initiate. ICICI bank alone can initiate. So the default is with respect to SBI. Can HDFC initiate CRP even though there is no default with respect to HDFC bank? Answer is yes. The default may be related to the financial creditor who is filing case or may not be related. Because as of now they committed default with respect to SBI. But in future they will commit default with respect to HDFC as well as ICICI also. So that's why the default may be related to the applicant, may not be related to the applicant. So who can initiate means any financial creditor. Next one. Can all the financial creditors together initiate the case? Yes, there is no problem. They can initiate. Or they can appoint some other person to initiate the case because they are doing banking business. If they focus on this corporate debtor, they will lose their business. So that is the reason why they can appoint some other person to carry all these matters. Now say who can initiate CRP here? Any financial creditor, whether the default is related to that person or not. All financial creditors together or any person who was authorized by financial creditor. Next one. What happens if it is a debentures case? In case of debentures also, debenture holders provide loan to the company. Now company made default. Now how to take action? Now it will become class action suit. So in this situation, how many people are required to file the suit? 100 members, that is 100 debenture holders, or 1/10 of total debenture holders, whichever is lower. So these many number of people need to approach NCLT in order to initiate CRP. So this is with respect to financial creditors. Then what about corporate debtor? So if corporate debtor itself want to initiate CRP, then resolution is required. If corporate debtor is a company, what kind of resolution is required? SR. If corporate debtor is LLP, what kind of resolution is required? So resolution which is required to pass SR, nothing but 3/4 of total partners. So if you take 3/4 of total partners, it is nothing but equal to 75% only. Even SR is also equal to 75% only. So these many number of people need to agree. In case of company, 75% members. In case of LLP, 75% partners. They need to agree in order to initiate CRP. That's it. So we completed about financial creditors as well as corporate debtor. Next one, what about operational creditor? In case of operational creditor, who will be covered? Suppliers. They will be covered. Employees. Even those people will also be covered. Now, in order to file a petition with NCLT in order to initiate CRP, first of all, they need to give a demand notice. So whatever the amount that was payable by the company to these people, for that amount, they are required to provide demand notice to the company. After providing demand notice, so they need to wait for 10 days. Now within 10 days, if company makes payment, then no need to go to NCLT. Within 10 days, if company made any objection with respect to quality of goods or services, First of all, that objection need to be cleared. What happens if company remains silent within 10 days? So company has did nothing during these 10 days. Now what will happen? So on 11th day onwards, you can get a right to go to NCLT. That means first you need to give demand notice. Later company need to respond within 10 days. If there is no response from company within 10 days, then you can go to NCLT in order to initiate CARP. Next one. And while going to CARP, so this person is required to propose IRP, and this person is required to propose IRP, and this person is required to propose IRP. But the difference is, so here mandatory, but here optional. Now, once case is filed by any of these people, 14 days time is available to NCLT. So within 14 days, what NCLT will do? So within 14 days, NCLT can accept the application or can ask for resubmission of application. So at the first instance, NCLT will not reject the application. It will ask for resubmission. So if the application is resubmitted, again 14 days time will be given to NCLT. Within this 14 days time period, it can accept the application. Now it can reject the application. Now what is the time limit available to make resubmission? 7 days. So this is common for all the three cases. Next one. So once application is accepted, what will happen? CIRP process will be commenced. It will be commenced. Now what is the time limit to complete CRP process? So it is 180 days. You can get a one-time time extension not exceeding 90 days. So total time limit will become 330 days. So 180 plus 90, it is 270 only. Then why extra 330? Because of legal delays. So you need to consider even legal delays also. After considering legal delays, instead of 270, we are required to take 330. But CMA Institute, it is provided as 360 days in CMA Institute material. But you are required to follow 330 only. So within 330 days, CRP process need to be completed. Next one. So process need to be completed means the plan need to be approved by COC. What happens if plan is not approved by COC within this time limit? Then CRP process is failed. Now NCLT will order for liquidation. Next one. So after this, what NCLT will do? NCLT will impose moratorium period. So what about moratorium period? Actually, it is valid for entire CRP time period. If CRP time period is for 180 days, moratorium period is also is for 180 days. If it is for 330 days, moratorium period will also be for 330 days. That means moratorium period is valid for entire CRP process period. Now, in case of moratorium period, what is the effect? So, other persons cannot initiate a fresh suit against corporate debtor. Next one, existing people cannot continue existing cases against corporate debtor. Next one, then what about banks which provide loan to corporate debtor? Can they enforce security interest? That means can they sell the assets by using SARFAESI Act? No. So it must be kept on hold. Next one, then what about supply of necessary things to the corporate debtor? It cannot be stopped. So the supply must be continued. And can corporate debtor sell its assets? No. Can it provide such assets as a security for getting any extra loan? No. So all these things are not allowed during moratorium period. But some things are allowed. Say for example, taking loan, allowed. Giving properties of company as security for getting loan, allowed. But all these things need to be done by RP. By taking the prior approval of COC with 66% voting. So he can do all the activities which are mentioned here, but COC approval is required. And how many people in the COC need to agree? 66% people. So 66% is not in number. We need to take 66% in value. That means out of total debt, the persons who are agreeing for this need to hold how much debt? 66% of the total debt. Next one. After imposing moratorium period, what is the next step? It will appoint IRP who was proposed by financial creditor or operational creditor or corporate debtor. But what happens if there is any pending proceeding against proposed IRP? Some disciplinary action is pending against the proposed IRP. What NCLT will do now? NCLT will cancel the recommendation and it will ask the IBBS to send a new person. That new person will be appointed as IRP. What about if operational creditor fails to provide recommendation of IRP because for him it is not mandatory, it is optional only? Then what will happen in case of operational creditor? So NCLT will ask IBBA to send a person and that person will become IRP. Next one. So next one, duties of IRP. So what are the duties of IRP? First of all, he will run the company. Actually, so who will run the company? Board of directors. Officers like CEO, CFO, MD. So all these people need to run the company. But when it is under CRP process, the board of directors will be suspended. The officers will be suspended. All the powers of board of directors and officers will get transferred to IRP. Now IRP will take care about the management of the company. Okay, but what is the main objective of IRP? It is not to take care about the management of the company. The main purpose is to create COC. Because once COC is created, they will appoint RP. So till then he need to run the company. That's why he will get all the powers of board of directors. Okay, now. So for this purpose, in order to create COC, what he will do? He will collect claims from all the people. Nothing but he will collect claims from all the creditors. After collecting claims, he will create COC. And after collecting claims, he can intimate about this claim to database maintained by IBBA, which is nothing but called as information utility. Next one. Now COC is formed. After formation of COC, within 7 days, COC is required to conduct a meeting. In that meeting, they are required to appoint RP. Then who can be appointed as RP? IRP can be appointed as RP or some other person can be appointed as RP. If they want to appoint some other person as RP, then whose approval is required? NCLT approval and IBB approval is required. If they want to continue with IRP as RP, then no problem at all. Just intimate this matter to NCLT. Separate approval is not required. But if they want to change, separate approval is required. Now the question is, who will be there in COC? For the members of COC. So actually, COC means Committee of Creditors. That means we need to have either financial creditors or operational creditors or both. But under COC, only financial creditors are available, not operational creditors. That means COC committee means it is a committee of financial creditors only, not operational creditors. Then what happens if company is having only operational creditors but not financial creditors? Then we can take operational creditors. If financial creditors are available, don't take operational creditors, ignore them. If financial creditors are not available, they'll only take operational creditors into the COC team. Now, in case of financial creditors, how to take them? First one. So, financial creditor, SBI. SBI provided 10,000 crores loan. Now, SBI will be added to financial creditor. Now, this 10,000 loan is given by SBI, HDFC and Punjab National Bank, which is nothing but consortium agreement. Consortium loan. Consortium loan means the loan which is provided by multiple banks together in order to reduce the risk. Now, what about financial creditors? SBI is a financial creditor, HDFC is the financial creditor, Punjab National Bank is also financial creditor, and all the three parties will become the team of COC. But what about voting? So voting will be done proportionately. Next one. So what happens if there is an entity which provides both loan as well as credit supply of goods? So that entity provide loan to the company, that entity provide goods on credit basis also. That means that entity is nothing but both financial creditor as well as operational creditor. Then what to do here? We can add this person to COC, but he can vote based on his financial debt but not based on operational debt. Next one. What happens if there is any financial creditor but that person is a relative for the corporate debtor? So for example, so holding company of that company provide loan to this company. Now holding company is nothing but a related party. Now holding company cannot become financial creditor. It cannot enter into COC. Why? Because it may take biased opinions. Now say who will be the members of COC? Financial creditors. If the financial debt is provided in consortium, all financial creditors who are in the consortium agreement. Next one. If the person is both financial creditor as well as operational creditor, even that person will be included, but voting will be restricted to financial debt. What happens if that financial creditor is a relative? That person is not allowed. Next one. COC meeting. Next one, COC meeting. First of all, who will conduct COC meeting? If it is first meeting, IRP will conduct. If it is subsequent meeting, RP will conduct. Reason? In first case, RP is not yet appointed. First of all, they need to conduct first meeting in order to appoint RP only. That's why who will call the meeting? IRP. After first meeting, RP will be appointed. So thereafter, who will call for the meeting? RP. Now, IRP or RP, they are required to give notice of the meeting. And this notice must be given to whom? All COC members. So notice must be given to all COC members because those people are the persons who are entitled to vote at COC meeting. Next one, not only COC members. So if corporate debtor is a company, then they can provide notice to suspended board of directors also. If corporate debtor is LLP, they can provide notice to suspended partners also. Next one, what about operational creditors? Yes, but for this purpose they need to hold at least 10% of total debt. Then even these people are also allowed to participate in meeting. But who are entitled to vote? So this people is entitled to vote and these people no and these people no. So notice will be given to all the three category people. All the three category people can attend the meeting, can see the meeting. But who are entitled to vote at the meeting? Only COC members. Remaining people are not allowed to vote at the meeting. Next one. Then in that meeting, how to take the decision? So in case of general matters, how much voting is required? In case of secured creditors meeting, how much voting is required? In case of special situations, how much voting is required? So first one, in case of general matters, how much voting is required? 51%. In case of secured creditor matters, 75%. In case of special matters, 66%. Say for example, appointing RP, 66. Next one, approving the resolution plan which was submitted by resolution applicant, 66%. For getting time extension of maximum 90 days, so 66 only. So these are the special cases. In all these special cases, what is required? 66 is required. So when nothing is specified, then if it is normal case, 51, secured creditor case, 75% is required. And one more thing, so during moratorium, the company is not allowed to sell its asset. During moratorium, the company is not allowed to provide its asset in order to raise any extra loan. But this can be done by RP with the permission of COC. Now, how much percentage of voting is required? 66 only. So theoretically it is 51-75, but in most of the cases it is 66 only. Next one. So resolution professional can do certain things by taking the prior approval of COC. So how much percentage of voting is required? Just now we discussed it is 66%. So with 66% of voting, so what an RP can do on behalf of COC? First one, RP can change the capital structure. What is meant by changing capital structure? So he can decrease paid up capital, or he can decrease unpaid capital, or he can increase authorized capital, or he can convert shares into stock into shares, or he can consolidate shares, or he can divide shares. So all these things are nothing but changes in capital structure. Now, who can initiate changes in capital structure? RP during CRP process. But for this purpose, RP is required to get a prior approval from COC with how much percentage of voting? 66% of voting. And taking interim finance. Next one, providing its property as security to get the loan. So creation of security interest means very simple, giving property to get the loan. Next one, so can sell financial debts and operational debts? Yes. So financial debt means, so till now we discussed about financial creditor and operational creditor. That means the corporate debtor is required to pay money to these people. But what about the financial debts receivable by the corporate debtor? What about the operational debts which are receivable by the corporate debtor? That means corporate debtor make credit supply of goods, or corporate debtor provides loan to other parties. Now corporate debtor is financial creditor, operational creditor. Now corporate debtor is having right to recover those money. Then who will recover that money? RP. So RP can sell those assets also, because for corporate debtor balance is nothing but asset. He can sell that balance to some other person in order to realize the money. Next one. So can he allow transfer of shares? Say for example, existing shareholders want to sell some shares to third parties. So can he allow this transfer? Yes, but COC prior approval is required. Next one. Can he update the change of ownership in the above case? Yes. For this also COC approval is required. Next one. Can he change the management of the company? Not only the main company, including its subsidiary also. Can he change the management? Answer is yes. Next one. Can he change the terms and conditions of appointment and remuneration of statutory auditors, internal auditors? Yes. So even some other personnel is also covered, like CEO, CFO, managing people like MD, WTD. So even those people are also covered. But for all these cases, what is required? COC prior approval is required. Next one. So can RP give instruction to banks in order to make debit? That means, say for example, corporate debtor is having State Bank of India current account. So in that current account, the corporate debtor is having 10 crores of funds. Now RP want to utilize 3 crores of funds. So can he debit the account? Answer is yes. But for this also, what is required? COC prior approval is required. Next one, can he undertake related party transaction? Yes, it is also allowed. So can he amend constitutional documents? Nothing but MOA and AOA. So can he alter MOA and AOA? Yes. Next one, can he delegate his authority to some other person? Yes, but some other person must also be insolvency professional. Next one. So can he invite a resolution applicant to provide resolution plan? Yes. Actually, this is the main objective. Last point is the main objective. He need to invite the resolution applicant to provide resolution plan, so that those plans will be submitted to COC and COC will finalize one plan. Now all these things are nothing but powers of RP, and RP can do all these things, but what is required? Prior approval from COC with 66% of voting is required. Next one, information memorandum. So information memorandum, who will prepare information memorandum? RP will prepare information memorandum. And what about the content of information memorandum? It will contain the latest financial position of the company. So it will contain the cases which are initiated by the company, which are initiated against the company. In simple words, pending cases. All pending cases will be provided in information memorandum. So if any other matter is relevant for the purpose of resolution plan, even that information will also be included in information memorandum. So content will be 3 points. First one, latest financial position. Second one, pending cases. And third one, any other relevant information. Now, all this information will be fed in information memorandum, and RP will give this information memorandum to resolution applicant. Now, resolution applicant need to maintain confidentiality. So what is meant by maintaining confidentiality? Secrecy. Because that information is a private information. If he leaks that information to any other person, definitely it may cause some damage to the company. So that is the reason why whatever the information that was provided in information memorandum, that need to be, yes, that need to be kept at confidential level. Next one, submission of resolution plan. So after providing information memorandum to resolution applicant, what he will do? He will come up with his own plan, which is nothing but called as resolution plan. Who can provide resolution plan? Any person except few people. Those few people are covered in earlier question. Okay, now the point is, what about the content of resolution plan? So resolution plan need to address certain points. First point, how that plan is going to pay CRP cost. So first thing that need to be addressed is how the plan is addressing to pay CRP cost. What is meant by CRP cost? So it is nothing but fees payable to RP. That is first one, fees payable to RP. Second one, RP can raise some interim finance in order to run the company. So for raising that interim finance, RP may incur some expenditure. That amount will be called as CRP cost. Next one, now government is also supporting for insolvency process. So government is also incurring some money. Now RP is required to pay that money also. So this is also called as CRP cost. So now, four things will be included in CRP cost. First one, fees payable to RP. Second one, cost incurred by RP. Third one, cost incurred by RP in order to raise interim finance. So this is interim finance related cost. This is other cost. In both cases, it is incurred by RP. So that's why he will ask for reimbursement. And next one, government cost. Next one, government cost. So government is also facilitating the entire process. So government need to be paid. So that amount will be called as government cost. And last one, any other cost which is specified by board. Here board means not board of directors. Here board means IBBI, Insolvency and Bankruptcy Board of India. So all these amounts together will be called as CIRP cost. Now in resolution plan, first they are required to address how they are going to pay CRP cost. Okay, after paying CRP cost, so RP is happy. Now we need to make some other persons happy. Who are those people? Creditors. Actually COC was created in order to realize the dues only. Now how this resolution plan is addressing to pay the amount which is payable to creditors. But in this case, here creditors means not only financial creditors, even operational creditors are also included. For the purpose of decision making, only financial creditors. But at the time of payment, both financial creditors as well as operational creditors need to get payment. That is second point. Next, third point. So third point is how the company will be managed once plan is approved. Yes, I provided resolution plan. So I provided how to make payment to CRP cost. I provided how to make payment to creditors. Now, after approval of this plan by NCLT, how the management will happen. So how resolution applicant is going to manage the affairs of corporate debtor. Even that need to be addressed here. And finally, how the plan will be implemented. So these 4 points need to be provided in plan. What is the first one? To pay CRP cost. Second one, to pay creditors balance. Third one, how to manage affairs of the corporate debtor once plan is approved. And fourth one, how to implement the plan and how to supervise the plan. Now, in all these cases, the plan must not violate any provisions of IBC. What happens if plan is violating any provisions of IBC? So that plan will not be accepted by NCLT and NCLT will pass liquidation order. In that situation, RP will not be appointed as liquidator because what he is doing when the plan is violating IBC. So there is a misconduct on part of RP. That's why. So NCLT will appoint a new person as liquidator. Next one, approval of resolution plan. So once plan is prepared and it is given to RP, RP will provide that plan to COC. Now COC with 66% of voting need to approve the plan. So after approval of plan by COC, the plan need to be submitted to NCLT. If NCLT also agrees for the same, then what will happen? The plan will become binding upon every party. Every party means corporate debtor, employees, members, creditors, guarantors, and other stakeholders. For all the people, the plan will become binding. So by this we completed about CRP process. Next one, liquidation. So when liquidation will be ordered, if plan is not approved within CRP time period, that is 180 days with extensions 330 days, then liquidation order will be passed. And what happens if plan is approved but it was rejected because of non-compliance with IBC? Liquidation. What happens if plan is approved and it is in accordance with IBC but company failed to implement the plan? Liquidation. In all these cases, the company went into liquidation. But what about liquidator? RP will continue as liquidator, but if the plan is not in accordance with IBC provisions, then it is the default of RP, so new person will be appointed as liquidator. Next one. So sometimes COC committee may also ask NCLT to go for liquidation, but even in this situation also 66% voting is required. So with 66% of voting, they can ask for liquidation also. Next one. Then what are the powers and duties of liquidator? So what liquidator will do? So first of all, he will verify the claim of all the creditors. So whether it is genuine or not. Next one. He will take the control over all the assets, properties, actionable claims of the company. That means if there is any asset on the name of the company, who will take care about it? Liquidator. Next one. He will assess the value of such properties. Next one. He will take proper measures in order to protect such properties. Next one. He will carry the business also. Sir, if liquidation is order is passed, why he will carry the business? Because we need to go for beneficial liquidation. So beneficial liquidation means liquidation with maximum benefit. So for this purpose, he can run the company for few days. Next one. And he can sell both mobile property as well as immobile property, including actionable claims of corporate debtor. But he need to sell all these things to the person who is eligible to provide resolution plan. That means he is not allowed to sell all these assets to a person who is not eligible to provide resolution plan. Next one. Then what about dealing with negotiable instruments? Yes, it is allowed. What about recovering money from contributories? First of all, who is contributory? Members. So in case if it is a company having shares, what are the liability of members? Up to unpaid value of shares. If it is a company limited by guarantee, what is the liability of members? Up to guarantee amount. If it is unlimited company, what is the liability of members? Unlimited. Now the persons, that is the members who are required to pay money at the time of liquidation, they are called as contributories. Then who will recover money from contributories? Liquidator. If contributory is expired, then from his legal heir or estate, who will recover the money? Liquidator. So everything will be taken care by liquidator. So can he take any professional assistance from any professional? Yes, it is also possible. Next one. And he will determine who are the creditors of the company, so that after selling all the assets, he will distribute that money among creditors. Next one. So can he file any civil case or criminal case on behalf of the company? Yes. Can he defend any civil case or criminal case which is filed against the company? Yes. Initiation is possible, defending is also possible with respect to civil case as well as criminal case. Next one. So can he investigate the affairs of corporate debtor in order to find out undervalued transactions or preferential transactions or extortionate transactions or fraudulent transactions? Yes. What happens if he found out all these transactions? He will reverse the transaction. What happens if he reverse the transaction? The benefit which is already passed from company to other person, that benefit will be restored back, and that benefit will be added to liquidation estate, which will be used for the purpose of making payment of debts. Next one. So with respect to papers, deeds, receipts, documents, applications, petitions, affidavit, bonds, instruments, so can he deal? Yes, he can deal, he can execute, and he can sign on those documents also. Now, if any direction is required from NCLT, he may apply to NCLT also to get that direction. And finally, if IBBA specifies any other function, IBBA specifies any other function, even that function can be carried by liquidator. Next one. One more point, which is a note point. So can he take the consultation from creditors? That means the persons who are entitled to get the money. So can he take consultation from those people? Yes, he can take, but it is not mandatory to follow that consultation. Yes, you people are getting proceedings of the liquidation estate. I'm the liquidator. If I want to take consultation, I can take consultation from you, but it is not mandatory for me. It is no obligation or part of me in order to follow your instructions. Next one, liquidation estate. What is the purpose of liquidation estate? It is nothing but pooling of all assets. So after pulling all assets, I will sell asset by asset and I will realize money, and that money will be used to pay debts of the company. Now here we need to discuss about which assets will be included in the definition of liquidation estate, which assets will be excluded in the definition of liquidation estate. So on left hand side, all the assets will be included. On right hand side, all the assets will be excluded from liquidation estate. So first one, if company is having ownership on any asset, that asset will be included. Next one, company is having ownership, the possession is with some other person. So for example, company is having a land and building which is provided to another person on lease basis. Even that property is also included. Even though the possession is not there with the company, so that property will be included in liquidation estate, because who is owner for that property? Company. Then what about tangible properties? Yes. What about intangible property? Yes. What about mobile immobile property? Yes. Provided in all these cases the ownership must lie with company. Next one. So what about litigated properties? Litigated property means, say for example, there is a litigation between company and other person about an asset. Now company is able to get this asset under that court proceeding. Now even this asset will be added to liquidation estate. Next one. Then what about benefit received by the company after reversal of undervalued transactions? After reversal of extortionate transactions, preferential transactions, fraudulent transaction, all those benefits will be added to liquidation estate. So next one, this is key point about secured creditor. Say for example, so A Limited is the corporate debtor. It took a loan from State Bank of India by providing its plant and machinery as security. So now SBI is called as financial creditor and secured creditor also, because property is offered as security, plant and machinery is offered as security. That's why SBI is called as secured creditor. Now secured creditor will have two options. What is the first option? So they can sell plant and machinery. They can sell plant and machinery. They will realize some money. That money will be used in order to set off the debt amount. Then what happens if they realize excess amount? Excess amount will be returned to the company. What happens if they realize exact amount? No problem at all. Both amounts will be set off with each other. What happens if there is still a deficiency? So for example, bank is required to get 1 crore, but after selling the plant and machinery, bank realized only 60 lakhs. What about balance 40 lakhs? So that amount can be recovered from company, but last priority will be given. Not initial priority. Which priority will be given? Last priority will be given. Or SBI is having second option. So to relinquish plant and machinery, actually SBI is having a right to sell the plant and machinery. It can relinquish that right. It can waive off that right, and it can give that plant and machinery to liquidator. Now liquidator will add this plant and machinery to liquidation estate. Actually this need to be sold by SBI only, but who is selling the asset now? Liquidator. So here SBI waives off its right. Now in this case, so he will get initial priority, not first priority. He will get initial priority to get the money. So now two options are available to secured creditors. They can select either first option or second option. If they select first option, that plant and machinery cannot be added to liquidation estate. If they select second option, the plant and machinery will be added to liquidation estate. Next one. Any other property belonging to corporate debtor will be added here. Next one. So we discussed about various assets from point 1 to point 8. Now after selling asset by asset, company will realize some money, and that money is also called as liquidation estate. All realized proceeds will be called as liquidation estate. Now second one, on right hand side, So these assets are not to be included in liquidation estate. First one. So in point A to point E, the common thing is asset belongs to some other person, but its possession is in the hands of company. Ownership is not there for company, but possession is there for the company. So can this asset be added to liquidation estate? No. Next one, point 2 and point 5. Both are similar points. So for example, there is set of agreement. There is set of agreement. So what is meant by set of agreement here? So for example, there is a company and another company. So this company will provide goods on credit basis. So they will provide goods on credit basis, and this company will provide property as security. They will provide property as security. Now, if company fails to pay the money, this property will be taken over by supplier. So this is nothing but set of agreement. So this is nothing but set of agreement, because this company is providing goods to this company, and in relation to that, this company is providing property to this company. So if company is unable to pay money, now both the transactions will be set off with each other. So this is set of agreement case. In case of set of agreements, so what about this property? Can it be added to liquidation estate? No, it is already under set of agreement. So if the amount is not paid, this company is allowed to take this property as a set off. So now the rights are with this company. When the rights are with this company, how can we add this property to the liquidation estate? So it is not possible to add this property to the liquidation estate. So this is just like secured creditor case. Next one. Then what about the personal assets of shareholders in case of company? What about personal assets of partners in case of LLP? Those personal assets cannot be added to liquidation estate because their liability is limited. That is the feature of corporate entities. So in case of company, the liability is limited up to unpaid value of shares. Beyond that, no liability. Or guarantee amount. Beyond that, no liability. In case of LLP, partners liability is limited up to agreed capital contribution. Beyond that, no liability. So here, in most of the cases, the liability of people is limited. That's why, so we can't take the personal assets of those people. That means the personal assets of members and the personal assets of partners will not be added to liquidation estate. Sir, what happens if it is unlimited company? So if it is unlimited company, even personal assets are also liable in order to pay the debts of the company. In that situation, those personal assets will be added to liquidation estate. Next one. Then what about the assets of subsidiaries? Can I add the assets of subsidiary company in order to pay the debts of holding company? No. Subsidiary is a separate entity. So just because you own more than 50% of shares, it doesn't mean you are having complete control over the assets of that subsidiary company. So subsidiary company is treated as separate company only. Its assets belongs to subsidiary only, not to holding company. That's why whether it is Indian subsidiary or foreign subsidiary, the assets of subsidiary cannot be added to liquidation estate. Next one, distribution of assets. Now, I realize the money through liquidation estate. So how to pay this money? How to distribute this money? So here 7 points will be there. So what are those 7 points? First one, initially CRP cost. Next, second one, workers maximum 24 months salary plus secured creditors who waived off, that is who relinquished their right to sell the property. They will get initial priority, but only after CRP cost. Next one, third category, employees. So workers means their salary is nothing but direct expense. Employees means their salary is nothing but indirect expense. So workers means they are directly involved in the work. Employees means they are common people. They will do multiple tasks. So employees, in case of employees, last 12 months wages. Next one, unsecured creditors. Next one, so government. So government nothing but statutory dues plus secured creditors. Why again secured creditors? So in this case, secured creditors has not relinquished their right to sell the property. They themselves sold the property, but still there is some deficiency. In order to recover the deficiency, they will participate along with government in fifth priority. And thereafter, preference shareholders. And finally, equity shareholders. So this is how we need to distribute the liquidation estate to all these people. Next one. So after doing this, so there is nothing left to do. So that's why now liquidator will make an application to NCLT to pass dissolution order. Now NCLT will pass dissolution order, and later this dissolution order need to be communicated to ROC. By whom? Liquidator. Within how many days? 7 days. So by this we completed about IBC. SEBI Regulations. So under this chapter we are going to learn about 3 different topics. First one, IPO, that is public issue of securities. Second one, insider trading. And third one, about takeover. So now let's see first one, which is about IPO. So before going into this topic, we need to learn about few basic things. So if company want to raise capital, how many options are available? 2 options. First one, it can arrange finances, nothing but loans. Second one, it can go for issue of securities. That means it can offer its shares, debentures, bonds in order to get the money. Now, in case of issue of securities also 2 options are available. To make either private issue or public issue. That means if securities are offered only to select group of people, it will be called as private issue. But if shares are offered to entire public, then it is called as public issue. Again, public issue is divided into 2 categories. So one is IPO, second one is FPO. So if company is going for public issue for the first time, then it is called as IPO. If it is subsequent time, then it will be called as FPO. Now under IPO or FPO, company can create new shares. So if company create new shares, who will get the money for those shares? Company will get the money. But there is another option called as selling existing shares, nothing but called as offer for sale. So in case of OFS, existing shareholders, nothing but promoters only. So they are having bulk number of shares. So existing shareholders, they will sell the shares by using IPO, FPO. So in this case, who will get the money? Selling shareholder will get the money. Promoter will get the money. So if company creates new shares, company will get the money. If company sell the existing shares of existing shareholders, nothing but promoters, those promoters will get the money. So now, in this IPO or FPO, who can participate? Who can participate? So first one. So actually, if the company is going to issue 100% of securities, then in this 100%, so minimum 25% need to be offered to public. Why 25% minimum? Because in order to carry listed company status, minimum 25% of the capital need to be held by public. And what about balance 75? It can be held by promoters or some other persons. But minimum capital that need to be given to public is 25%. So minimum 25% need to be offered to public. Next one. And what about balance 75? In balance 75, so promoters will be covered. Next one. So subscribers will be covered, who will be there at the time of incorporation of the company, and some other investors will also be covered. Private investors. But in this 25%, only public will be covered. Now the point is, if company went for public issue, in this public issue, there are some reservations. Say for example, first one, promoter. So promoters are required to take some stake. How much stake? 20%. Why promoters are required to take at least 20%? So if promoter is taking 20%, then public will show some interest. So public will rely on the company because promoters are also investing the money in the company. So that is the reason why public will subscribe for the securities. If promoters are not taking 20%, now what will happen? Public will not rely on the company. So no more subscriptions. Because of lack of subscription, the company need to cancel the entire public issue. So that is the reason why this 20% will be called as minimum promoter contribution. Now what about balance 80%? That 80% can be offered to public. So who is public here? One is RII, second one is NII, and third one is QIB. So in QIB, anchor investor will be involved, and in QIB even mutual funds will also be involved. So first one, RII stands for retail individual investor. NII stands for non-institutional investor. So what is the common point between RII and NII? In both cases the investor is an individual. In both cases investor is individual. So what about RII? Is a small individual, that means small investor. What about NII? Large investor. So for example, if he is going to invest more than or equal to 2 lakhs, NII, less than 2 lakhs, RII. That is the difference. But in both cases the investor is individual only. Then what about QIB? Here investor is body corporate, nothing but institution. And this institution will include mutual fund companies. This institution will include even anchor investor also. So what is mutual fund company? Actually mutual fund company will pull the money from public, and that pulled money will be used to purchase the securities of other company. That means mutual fund companies will purchase the securities of other company. Mutual fund companies can take some share in public issue. So what amount will be used by the mutual fund company means the amount which was pulled by the mutual fund company by issuing units to the units holders. Now what about anchor investor? Who is anchor investor? He is nothing but a brand ambassador for this company. So if anchor investor made any investment in that company, definitely people will rely the company. People will also make the investment in that company. Say for example, Nagarjuna, he is making investment in Kalyan Jewellers. Now what will happen? A brand image will be created to Kalyan Jewellers. Now if a person want to invest in Kalyan Jewellers, he can freely invest that money because even Nagarjuna also invested in Kalyan Jewellers. So now Nagarjuna will be called as anchor investor. But in many cases anchor investors will be entities only, not individual person. So that's why they are classified under qualified institutional buyers. Now this 80% will be subscribed by whom? RII, NII and QIB. QIB includes both anchor investor as well as mutual fund companies. Next one. Now what about the pricing methods? So actually there are two pricing methods. One is fixed price method, other one is book built method. So what is the difference between fixed price method and book built method? Say for example, here shares will be offered for a fixed price. Say for example 110 rupees. Now if a subscriber want to subscribe for the shares, how much value he need to pay? For each share 110 rupees. But what about book built method? Here range will be prescribed. Instead of 110 they will say 100 to 120. If any person want to subscribe for the securities, they can say subscribe for either 100 rupees or 101 or 102 and so on up to 120 rupees. Then what about the final price? Based on demand level, so after subscription, so company will decide the final price. So here price is already prefixed, but here price is fixed only after receiving subscription money from the public. Sir, what happens if the final price is 111 rupees? So any person who subscribed for less than 111 rupees, that amount will be refunded back. What about the persons who subscribed exactly for 111 rupees? Securities will be allotted. What about the person who subscribed for more than 111 rupees? Securities will be allotted and excess amount will be refunded. So this is called as fixed price method and this is called as book built method. Now let's see the questions. First one, company want to go for public issue. Public issue means it may be either IPO or FPO. In that IPO or FPO, it may be either OFS or it may be about creation of new shares. Okay, then what about rights issue? Offering shares to existing shareholders. It is called as rights issue. Now, in order to go for public issue, whether it is IPO or FPO, whether it is creation of new shares or offering existing shares. And to go for rights issue, the company is required to satisfy certain conditions. What are those conditions? First one, debarred. So it is about company. So company, its promoters, its directors, its selling shareholders. If it is OFS case, who will sell the shares? Existing shareholders. Those people are called as selling shareholders. Now, if company or its promoters or its directors or its selling shareholders, if they are debarred by the SEBI from going to stock market, from assessing stock market, then that company cannot go for either public issue or rights issue. So what is the condition number one? If any of these people are debarred by SEBI from assessing stock markets, then so public issue and rights issue, both are not allowed. Next one. So now, company, promoters, directors. So previously 4 persons got covered. Company, promoters, directors, selling shareholders. Now only 3 persons got covered. Company, promoters, director. So selling shareholder is not covered here. Okay, when any of these persons are declared as willful defaulter, so they took a loan from the bank and they made default willfully. Now the bank declares that person as willful defaulter. If any of these people declared as willful defaulter, then what will happen? That company cannot go for either public issue or rights issue. So in point number 1, they are debarred from assessing security market. In point 8, they are declared as willful defaulter. In first point, 4 persons are debarred. In last point, 3 persons are declared. Now in any of the cases, going for public issue and rights issue is not possible. So point 1 and point 8 both are interlinked with each other. Next one, point 2. So point 2 and point 3, which is about agreement. If a company want to go for public issue, it must enter into agreement. Agreement with whom? Agreement with any one of the stock exchange. Agreement with depository banks. So stock exchanges means many stock exchanges are available in India. Example, National Stock Exchange, Bombay Stock Exchange, and so many stock exchanges are available. So if a company want to go for public issue, first of all, it need to make a listing agreement with any of the stock exchanges. Sir, what happens if application is made to one single stock exchange? That one single stock exchange need to give approval. What happens if application is made to 2 stock exchanges? Both the stock exchanges need to give approval. If the application is made to 3 stock exchanges, all the 3 stock exchanges need to give approval. That means if application is made to n stock exchanges, all n stock exchanges need to give approval. Next one. What about agreement with depository bank? Actually in India, depository banks means only 2. One is NSDL, other one is CDSL. So these are called as depository banks. National Securities Depositories Limited, Central Depositories Securities Limited. Now the point is, what is the purpose of making agreement with these depository banks? In order to facilitate dematerialization of securities. So for example, company is having securities. Those securities may be either existing securities or new securities. So which need to be offered in this public issue. Now these existing securities need to be converted into demat form. These new securities need to be converted into demat form. The process of converting physical securities into demat securities is called as dematerialization. For this purpose, the company is required to make an agreement with depository bank. So company is required to make agreement with 2 parties. One is stock exchanges, other one is depository bank. So then only it is allowed for public issue and rights issue. So we completed how many points? 4 points. So this is stock exchange case, this is dematerialization case. So one is debarred, second one is willful defaulter, third one is agreement with stock exchange, and next one agreement with depository bank. Next one, 5th point, partly paid shares. If the company is already having partly paid shares, can it go for public issue of securities? No. First ask the existing shareholders to pay the balance amount. That means first make the partly paid shares into fully paid shares by asking for call money. After that, if still there is any requirement, you can go for public issue. Next one. 0.5, which is about firm arrangements. So now, company is having a requirement of 100 crores. So it is having a requirement of 100 crores. So can it ask public to give 100 crores by offering its securities? No. So out of 100 crores requirement, company need to arrange its own funds. Okay, how much own funds need to be arranged here? So for this purpose, they are required to arrange minimum 75% of the requirement. Sir, what is meant by own funds here? First one, own funds which belongs to company. Second one, private finances like loans taken from banks or financial institutions. So all these things together will be called as, yes, and this fund must be at least 75%, and this is called as firm arrangement. Now, what about balance 25%? The balance 25% can be taken from public. So when your requirement is 100 crores, you can take only 25 crores from public. What about balance amount? You need to make your own arrangements, which is nothing but called as firm arrangement. So own arrangement means it may be own fund or it may be borrowed fund. Next one. Then what about promoter holding? Existing promoter holding. Say for example, a company want to go for public issue. In that company, who may be the shareholders? Promoters or non-promoters. So promoters will have some shareholding, non-promoters will have some shareholding. So company is having shareholders in both promoters as well as non-promoters, and both are having shares. Now if this company want to go for public issue, so promoter holding need to be converted into demat form. That is mandatory. Sir, what about the holding of non-promoters? It is not mandatory. But converting promoter physical holding into demat holding is mandatory. Next one. Then what about expenses? Actually, so your requirement is 100 crores. Your requirement is 100 crores. But how much amount you can take from public? 25 crores only. Now in order to raise money from public, you need to incur some expenses. You need to appoint some SEBI registered intermediaries. You need to hire some professionals like CS, CMA, CS. And you are required to pay underwriting commission. So many expenses got involved here. Then what about these expenses? So can this 25 crore amount can be used for these purposes? Yes. Yes, this is called issue expenses. And issue expenses can be taken from this 25 crore. Then how much amount it can be? So maximum 25%. So 25 crores into 25% means 6.25 crores. So out of 25 crores, 6.25 crores can be used for the purpose of issue expenses, and balance amount can be used for the purpose of the main object for which the company is going to raise the money. Next one. Then what about subscription period? Yes, company went for public issue of securities. Now public will be given with an option to subscribe for securities. What should be the time limit that need to be given to public now? Minimum 3 days, maximum 10 days. So within this time limit, what public will do? They will pay money, they will subscribe for the securities. And what about minimum subscription? 90%. So what happens if there is no minimum subscription? If there is any underwriter, so he will make it as minimum subscription. If there is no underwriter, and if there is no minimum subscription, the issue need to be cancelled, and the amount which was collected till now need to be refunded back. So to go for either public issue or rights issue, all these conditions need to be satisfied. Next one, IPO. A company want to go for IPO, initial public offer. So what conditions it is required to satisfy? So actually here we have 4 conditions: about net tangible assets, about EBIT, about net worth, and about change of name. So there are 4 conditions. Now what happens if these 4 conditions are satisfied, and what happens if 4 conditions are not satisfied? Let's see. Actually, in case of pricing, company can adopt either fixed price or book built pricing. Now, if 4 conditions are satisfied, company is having 2 options. First one, it can go either for fixed price method or it can go either for book built method. Now the question is, what happens if those four conditions are not satisfied? So if those conditions are not satisfied, then it is mandatory for the company to go for book built method. So EBIT condition, so net worth condition, net tangible assets condition, change of name condition. If all the conditions are satisfied, company can opt in between fixed price or book build. But if any one condition got failed, now there is no option. Company must go for book built method. So what is the reason behind that? If four conditions are satisfied, the company is not so risky. Investing money in that company is not risky. So that's why you can opt either for fixed price or for book build. But what happens if any of these conditions got failed? Investing money in that company is somewhat risky. So that's why they are required to follow only book built method. Now what about the reservation percentages? So first one, fixed price method. Second one, book built method, but four conditions are satisfied. So four conditions are satisfied. And third one, book built method, where four conditions are not satisfied. Either four conditions or any one condition, it is not satisfied. Then what should be the reservation percentage? What should be the reservation percentage? For RII, for NII, for qualified institutional buyers. So now say, what is the reservation in case if four conditions are satisfied? How much percentage? 35%. So this is minimum. So minimum 35%. NII, minimum 15%. QIB, maximum. So maximum 50%. So greater than or equal to 35%, greater than or equal to 15%, less than or equal to 50. That means more priority is given to whom? Individuals rather than QIBs. Why more priority is giving to individuals rather than QIBs? Because investing in the company is less risky because all the four conditions are satisfied. What happens if any condition got failed? Now risk need to be transferred from individual to QIB. Now QIB are required to take minimum 75%. So previously it is maximum 50 only. That is 0 to 50. But this time it is 75 to 100. So that much of percentage need to be taken by qualified institutional buyers. Then what about NII? 15 only. But instead of greater than or equal to, we need to take less than or equal to. Then what about RII? Less than or equal to 10%. So if any condition got failed, this should be the reservation percentage. Then what about if they followed fixed price method? Four conditions are satisfied, but they followed fixed price. Now, minimum 30% need to be given to RII. Balance can be subscribed by NII. If there is still any balance, if it is not taken by either RII or NII, it will be taken by QIB, unsubscribed portion. So unsubscribed portion means that portion which is not subscribed by RII and NII. That portion is called as unsubscribed portion that will be subscribed by QIB. That means here the more weight is given to individuals. Why more weight is given to individuals? Because four conditions are satisfied. Next one. Now, so in this 50%, 5% reservation need to be given to mutual funds. In this 75%, 5% must be given to mutual funds. And out of 75%, 60% must be given to anchor investors. So this is sublimits. So in case of second situation, 5% to mutual funds. In case of third situation, 5% to mutual fund plus 60% to anchor investor. Okay, next one. Now we need to learn those four conditions. Because depending upon those four conditions, these percentages will be decided. So that's why we need to learn those four conditions. So what are those four conditions? First one, net tangible asset. What is meant by net tangible asset? Take gross tangible asset, deduct depreciation if any, you will get net tangible asset. Antena? Okay. So take net tangible asset. So in each of the last 3 years, it is not average. It is not average. We need to check each of the last 3 financial years. In each of the last 3 financial years, the minimum net tangible assets must be 3 crores, more than or equal to 3 crores. That means now we are in which financial year? 2025-26. Now in 2024-25, 3 crores. 2023-24, 3 crores. 22-23, 3 crores. Don't take average here. We need to check every year. Every year, the minimum net tangible asset must be 3 crores. Next one. Then what about EBIT? What is meant by EBIT? Pre-tax operating profit. Operating profit means before interest, before tax. So we need to take EBIT. So for this purpose, so we need to take last 5 years. We need to take last 5 years EBIT, not average. We need to take last 5 years EBIT. So for example, first year EBIT is 20 crores. Second year 10 crores. Third year minus 5 crores. That means loss. Fourth year minus 20 crores. And fifth year, so 10 crores. So total, we need to take 5 years EBIT value. In 5 years EBIT value, we need to take 3 most profitable years. So 3 most profitable years means 20, 10. Don't take this 20, this is loss. And 10. So 3 most profitable years is 20, 10, 10. And we need to take the average of those 3 most profitable years. So 20 plus 10 plus 10 divided by 3. So what is the value? 13.33. This company is not eligible to go for IPO. If they want to go for IPO, they need to go only through book build method. Reason? This amount must be minimum 15 crores. So we need to take 3 most profitable years from last 5 financial years, and we need to take the average of those 3 most profitable years, and that average must be minimum 15 crores. Next one, what about net worth? So net worth means capital plus reserves or assets minus liabilities. What about net worth? We need to check last 3 years in each of the financial year, not average. In each of the financial year, the minimum net worth shall be at least 1 crore. That means point A and point C is linked with each other. Minimum net tangible assets in each of the last 3 years, 3 crores. Minimum net worth in each of the last 3 years, 1 crore. But what about EBIT? Out of 5 years, we need to take 3 most profitable years, and we need to take the average of those 3 most profitable years. Next one. What happens if there is any change of name? Actually, change of name, when it will happen? When there is change in nature of business. That means the company has changed the nature of business. So old business, new business. Now, turnover includes turnover from old business, turnover from new business. So out of total turnover, the turnover from new business must be minimum 50%. So if old business turnover is 10 crores, new business turnover is 20 crores, then total turnover will be 30 crores. So out of 30 crores, 50% means minimum 15 crores is from new business. So in this case, 20 crores is available. That means this condition is satisfied. Next one. Now one more requirement, which is with respect to net tangible asset. So if the 50% of net tangible assets are held in monetary assets, what is meant by monetary assets? Either cash or bank balance, or which can be converted into cash immediately. So which is nothing but called as monetary asset. If the 50% of net tangible assets amount is held in monetary assets, then, so first of all, the company is having huge fund. If 50% is in monetary asset, the company is having huge fund. Now company need to make a promise to use this fund for firm arrangements. What is meant by firm arrangement? So making own contribution for the requirement. So out of total requirement, minimum 75% need to be taken from own funds. Now for that own funds, they can use this monetary assets. Next one. Other conditions with respect to IPO. So second point is already completed. Let's see third point. So can a company issue convertible debt instruments to the public without issuing equity shares? Or is it mandatory for the company to issue equity shares first and later other securities? So it is not mandatory. If company want to issue equity shares first, it can issue. If company want to issue other securities first, it can issue. There is no problem at all. Next one. So what is minimum subscription? 90% of total value. What about minimum number of subscribers? Minimum 1000 subscribers must subscribe. That means number of allottees must be minimum 1000. What happens if minimum subscription is not met? What happens if minimum number of subscribers are not available? That is, the subscription level is less than 90% or number of subscribers are less than 1000. Then what will happen? The issue need to be cancelled. But in case of minimum subscription, there is an alternative called as underwriting. But in case of subscribers, there is no alternative. So minimum 1000 subscribers need to subscribe. Next one. Point 5. It is about the company is already having convertible securities. Convertible securities means the securities which need to be converted into equity shares. And they are about to mature. In this time, the company want to issue its equity shares to the public. Is it allowed or not allowed? First of all, the existing convertible securities need to be converted into equity shares first. And thereafter only they can go for public issue. So without fulfilling the existing requirement, they can't go for public issue. Next one. Fund monitoring. Actually, if company raises any money from public by saying any objective, that amount must be utilized only for the purpose of said objective. For administrative expenses, they can spend maximum 25% of amount raised. This point is already completed. Now balance 75% amount need to be spent for what? It must be spent for the purpose for which the amount is raised. Now, whether company is spending that money for the said purpose or not, who will monitor? So if it is a small public issue, company will monitor. But if it is a large public issue, bank or financial institution will monitor. So large means how much large? So if the issue size is minimum, it is more than 100 crores, then bank or PFI will monitor the utilization of fund by the company. And they will give reports also. That on which basis? Quarterly basis. And they will provide such reports until 95% of the amount is utilized. Next one. And getting credit rating is also mandatory. So you are required to get credit rating from credit rating agencies which are registered with SEBI. And that credit rating need to be provided in offer document. So this is also mandatory to go for IPO. Next one. Differential pricing. So here differential pricing is nothing but giving discount. Is it possible to give discount? Yes, possible. But to whom the discount need to be given? First one, RII. You can provide discount to RII. You can provide discount only to employees also. But employees will also be covered under RII. Then how much discount is allowed? Maximum 10%. Maximum 10%, that's it. That means if Reliance Industries Limited went for further public offer, it can give 10% reservation to its own employees. If State Bank of India went for further public offer, it can give 10% reservation, 10% discount for its own employees. So employees may get discount, or all the retail individual investors can get discount, but that discount shall not exceed 10%. Sir, what happens if it is fixed price? Say for example 100 rupees. 10% will be applied on 100. What happens if it is book build? That is range is given as 90 rupees to 110 rupees. Then 10% discount will be applied on floor price, that is 90 rupees. So discount will be given on 100 rupees if it is fixed price. Discount will be given on 90 rupees if it is book built method. Next one. What about anchor investor? No discount at all. No discount at all. That means the highest price need to be charged from anchor investor only. Next one. And what should be the face value? It depends upon issue price. If the issue price is 500 or more, then face value shall be 1 to 10 rupees. If the issue price is less than 500 rupees, then face value shall be 10. That means if it is less than 500, 10 rupees. If it is more than or equal to 500, 1 to 10 rupees. So this should be the issue price as well as face value. Next one, promoters lock-in period. So when company went for public issue of 100 crores. So minimum 20% need to be given to promoters. This is called as minimum promoter contribution. Now what happens if promoter took 30%? 20% is called as minimum promoter contribution. Extra 10% is called as additional promoter contribution. Now the question is, after taking this much of money, and after taking money from public, can they exit from the company by selling those shares? No. So if they did like this, then it will become cheating. So that is the reason why they need to hold for certain time period. Then for how many years they are required to hold that securities? So for this purpose, classify the issues into two categories: IPO, FPO. Next one, minimum contribution, that is 20%, additional contribution, that is 10%. Now minimum contribution need to be preserved for, locked for 3 years, whether it is IPO or FPO. Next one, what about additional thing? 1 year if it is IPO, not applicable if it is FPO. So this is lock-in period. Lock-in period means, so in this time period, promoters are not allowed to sell the shares. Next one. Okay, we completed about part 1, which is about public issue of securities. What about second part? Insider trading. So the information about the company is divided into two categories. One is GAC, other one is UPSI. So GAC means generally available, GIA, generally available information. UPSI means unpublished price sensitive information. What is the difference between generally available information and UPSI? So generally available information is a public information. Anyone can know about it by making some research. Then what about UPSI? This is completely inside information, which is not known to public. But this inside information will be classified into two categories. Inside information which will affect share price, inside information which will not affect share price. So for example, there is some inside information. If it is leaked to the public, nothing is going to happen. So share price will not fluctuate. Then it is internal information only, but it is not called as UPSI. Then when inside information will be called as UPSI? That is inside information. But if it is known to public, if it is leaked to public, definitely share value may fluctuate. It may rise, it may fall down. So that kind of internal information will be called as UPSI. So what is the full form for UPSI? Unpublished. That means internal information. Sensitive information. Nothing but if it is known to public, so share value will fluctuate. So that's why it will be called as UPSI, unpublished price sensitive information. Now the point is, so there are some people in the company who will have access to this insider information, and those people are called as insiders. Those people are called as insiders. If any person is having any access to UPSI, say for example auditor, so before the declaration of financial results, auditor need to verify the financial results. They need to give their opinion whether they are reflecting true and fair view or not. Now auditor will have access to the UPSI, because if the company's financial performance is good, if company is getting huge profits, if company is entering into a very large number of contracts with large profit, then it is a positive news. If it is leaked to the public, share value will increase. What happens in current quarter if company suffers with losses, or company lose some contracts, or company is required to pay huge penalty under any contract, then it is a negative news. If it is leaked to public, then share value will fall. But before going to public, this information will be assessed by whom? Auditors. Now auditor will become insider. Auditor will become insider because that person is having access to UPSI. Now being an insider, what he is not allowed to do? Insider trading. This is not allowed. Second one, so giving information to somebody else to make insider trading, even that is also not allowed. That means this insider shall not carry insider trading. Next one, he shall not allow any other person to do insider trading. So what happens if this person is providing information to other person to do insider trading, or if this person himself is doing insider trading? Then so SEBI will punish this person. So SEBI will take the gain which was earned by this person, and this gain will be called as disgorged amount, and this disgorged amount will be transferred to IEPF. And because of this person, if any person suffers with loss, that disgorged amount will be distributed to those people. Now it will become a debit to IEPF. Next one. Now there is another person called as connected person. So who is connected person? Actually, he is having access to UPSI. But whether UPSI is in his position or not, so it is irrelevant. That means, say for example, he is a independent director. He's an independent director. So he can get information about UPSI if you want. But whether he got the inside information or not, so this person will be called as connected person, and all connected persons are called as deemed insiders. So now what is the difference between generally available information and UPSI? So generally available information means it is known to public. So UPSI means it is not known to public, but when it is made known to public, it is going to affect the share price. Now the person who is having this kind of information will be called as insider. Some people will have access to this information. They may or may not have this kind of information in their hands. Those people are called as connected person, and all such connected persons, whether they are having any info about this matter or not, so those people will be called as deemed insiders. Next one. So what is the obligation on insider or deemed insider, that is connected person? They shall not do insider trading. They shall not pass that information to any person in order to do insider trading. Next one. Trading plan. So even insider is also a human being. He want to make some investments. So he want to invest mainly in his company only, not in outside companies. Now, how is it possible to invest in that company where he is an insider? Yes, it is possible. For this purpose, he is required to prepare a trading plan first. So how many shares he is going to buy, or how many shares he is going to sell, at what price he is going to buy, at what price he is going to sell. All these things need to be documented first, which is nothing but called as trading plan. Now that insider need to provide this trading plan to compliance officer of the company. Who is compliance officer? Who will take care about compliance of SEBI regulations? That person will be called as compliance officer. Now trading plan need to be submitted by insider to compliance officer. Now what compliance officer will do? So he will give approval. After giving approval, this compliance officer will forward this plan to stock exchange where this company was listed. If the company is listed in NSE, he will forward this trading plan to NSE. If the company is listed with BSE, he will forward the trading plan to BSE. Now the question is, when to execute this trading plan? Only after 6 months. Not within 6 months, only after 6 months. Why only after 6 months? So first of all, he is an insider. He knows about various facts, including insider information also. Now the point is, if we allow that person to trade within 6 months, definitely he will get some advantage. What happens if we allow that person to make trade after 6 months? So the inside information will be nullified. The effect will be nullified. So that is the reason why after 6 months only he is allowed to trade. Sir, can he deviate from trading plan? So for example, initially he want to purchase 1000 shares for 1 crore rupees. So this is the trading plan, and this trading plan need to be executed after 6 months. After 6 months, now the company is not having any future. Now he want to decrease number of shares, or he want to decrease buying price. Is it possible? Not possible. Once trading plan is approved, it must be executed according to trading plan only. That means deviations and modifications are completely not allowed. So by following this procedure, even insider can do trading. Next one. Now, how company is going to prevent insider trading? How company is going to prevent insider trading? So for this purpose, company will assign some tasks to whom? First one, CEO. Second one, audit committee. Third one, employees. And fourth one, SEBI registered intermediaries or fiduciaries. So total 4 persons will be given with responsibility. Okay, what kind of responsibility will company give to these people? First one, CEO. So CEO need to place internal controls. So he need to place internal controls. So for what? So for stopping outsiders to get information about OPSI. So for this purpose, CEO need to implement internal controls. Now, whether these internal controls are operating effectively or not, who will check and verify? Audit committee. So who will place internal controls? CEO. Who will check the internal controls? Audit committee. Next one. Then what about employees? So for this purpose, the company is required to prepare whistleblower policy, and this policy need to be explained to all the employees, so that if there is any leakage of OPSI to outsider and that fact is known to any employee, immediately he will communicate that matter to the company, so that company can take necessary actions. So what is the role of employee? Very simple. Whenever there is any OPSI leakage, he need to intimate that matter to management. Then what about intermediaries and fiduciaries? So whenever there is any leakage of OPSI, now intermediaries like stockbrokers, depository banks, all these entities need to support company for inquiry purpose. Because if these people provide any assistance, then it will be very easy for the company to trace out which information is leaked, who leaked the information. All these things can be traced out during investigation with the help of these entities. That's why these entities need to provide assistance to the company. Now say, what is the role of CEO? To implement internal controls, to stop OPSI leakage. Then what about audit committee? To check whether these internal controls are operating effectively or not. What about the employees? So they need to report any OPSI leakage to the management. So what about intermediaries and fiduciaries? Under investigation about OPSI leakage, they need to provide all assistance to the company. Next one. And one more question is pending, which is about code of fair disclosure. So what is meant by code of fair disclosure? Say for example, if any OPSI is leaked, what is the duty on part of company? Now company must make public disclosure about it. That means now OPSI must be declared as public announcement. Now OPSI will become generally available information. Say for example, one of the promoter was changed. It will definitely going to affect the share value. This information is not known to the public initially, but one person knows about this fact, and this information is passed to the company. Now what company can do? Now it can make a public announcement about the change of promoter. What happens if it makes any public announcement? The person who got the OPSI, that person is unable to get any benefit, because he will get benefit when that information is not known to public. But when that information is known to public, he will not get any benefit at all. So that's why whenever there is a possible leakage of OPSI, then what is the better solution for it? Make that OPSI as generally available information, so that even public will aware about it, so that the effect of that leakage will be nullified. Next one. And while making OPSI as generally available information, that means while making public announcement, don't do any selective disclosures. So what is meant by selective disclosures? Disclose only to existing equity shareholders, disclose only to employees, disclose only to stakeholders. This is not allowed. If you want to disclose, if you want to make public announcement, it need to be made to entire public. Next one. And while attending interviews, so definitely interviewers will ask few questions, nothing but rumors about the company. So they will ask, yes, your company promoter is going to change. This is the rumor which we heard in market. Is it true or not? They will ask for it. Now you need to give responsible answers. You need to give responsible answers. So if there is no change, you need to confirm that. If there is change, you need to confirm that point. So don't give any negligent answer, because if you give any negligent answer, then people may think differently and people will start buying or selling the shares. So that is the reason why in interview, if interviewer asks any question, so give the answer responsibly. Next one. So some companies will do some meetings with trade analyst also. So while doing any meeting with trade analyst, so disclose only to the extent relevant for public information. So don't disclose any obscene trade analyst meeting. If you want to disclose anything, it must be generally available information. So don't disclose any insider information in trade analyst meeting. So all these precautionary measures need to be taken by the company, and these precautionary measures are called as code of fair disclosures. So what are those points? When there is any oopsie leakage, so make it public information. And while making public information, so make complete disclosure, so not selective disclosure. When you are attending any interviews, properly attend every rumor that was there on the name of the company. So when you are giving any meeting with trade analyst, so give only public information but not oopsie. So by this we completed about insider trading. Next one, takeover. So what is meant by takeover? So here, who are the parties involved? Acquirer, not acquiring. Persons acting in concert and target company. So total 3 persons are available. So first one, acquirer. Second one, persons acting in concert. Third one, target company. So acquirer and persons acting in concert, they may be either individuals or body corporates. But what about other party? It must be company. It must be a body corporate. That too, it must be a listed entity. So the target company must be always a listed entity. But in case of acquirer and persons acting in concert, they may be listed entity, may be unlisted entity. So they may be an entity, or those people may be either individuals also. So there is no restriction on this side. But on this side, there is a restriction that person must be always a listed entity. That is, target company must be always listed entity. Now the point is, so acquirer or persons acting in concert is going to take over target company. So what is meant by take over? So now acquirer either alone or acquirer along with persons acting in concert, nothing but the supporting persons. So these people will support acquirer in order to acquire target company. So that's why these people are called as persons acting in concert. Now acquirer either alone or together with PAC, that is persons acting in concert, if they are about to purchase more than or equal to 25% of total shares of target company, then it is called as takeover. Now this takeover is of different types. First one, horizontal takeover, vertical takeover, hostile takeover, friendly takeover, conglomerate takeover. So what is meant by horizontal? Manufacturer, distributor, wholesaler, retail seller. Now if wholesaler want to acquire distributor, it is horizontal takeover. If retail seller want to take over wholesaler, it is horizontal. So now another wholesaler, another wholesaler, another wholesaler, another wholesaler. If this wholesaler want to acquire the business of another wholesaler, so what type of takeover it was? Is it vertical or horizontal? Either vertical, either horizontal. So first one, this is vertical and this is horizontal. So if wholesale dealer purchases distributor business, it will be called as vertical takeover. And what about purchasing another wholesale business? It is horizontal. Now what happens if this person purchases any entity which is completely not related? Conglomerate. So what happens if a company acquires another company by taking the permission of board of directors and shareholders? Friendly takeover. By purchasing more than 50% of shares in open market? Hostile takeover. Hostile kaadu. Okay. Now the point is, whenever acquirer and persons acting in concert, if they purchase minimum 25% of total shares of target company, then so open offer will be triggered. Now we are required to discuss about open offer. This is the main concept under takeover. So what is meant by open offer? When this much of stake is purchased by these people, they are required to make open offer to remaining shareholders of target company. Remaining shareholders of target company. So if they want to sell the shares, they can sell the shares to this acquirer. If they want to hold the shares, they can hold the shares. But first of all, this acquirer and persons acting in concert need to provide an offer to the existing shareholders of the target company. What that offer? If they're ready to sell, these people must take the shares. If they're not ready to sell, they can leave this case. So this kind of situation will be called as open offer. So for example, now in this target company, so 50% is held by promoters and 50% is held by public. Now out of 50% promoter stake, this acquirer and person acting in concert is buying 25%. Now at the same time, so they are required to make open offer to public also, because they are buying shares from promoter. They need to buy shares from all public also. But in case of public, we need to give option. It is not compulsion. If public want to sell the shares, they can. Otherwise, they can hold the shares. And this open offer requirement is called as mandatory open offer. This is called as mandatory open offer. Then, so after acquiring 25%, if acquirer and person acting in concert want to acquire more than 5% of extra stake, that means already this company, this acquirer and person acting in concert are holding 25%. Now they are about to purchase another stake which is more than 5%. Now also open offer will be triggered, and this open offer is also mandatory open offer. That means again they are required to make offer to existing shareholders, nothing but public. If public want to sell the shares, they can sell the shares to acquirer and persons acting in concert. Then what about voluntary open offer? The company's the acquirer and person acting in concert is already having 25% stake. Now they want to purchase extra stake which is less than or equal to 5%. So in this case, open offer will not be triggered. But if acquirer and person acting in concert want to take open offer, then they can take, but this will become voluntary open offer. So now say when open offer will be triggered. When open offer will be triggered? First one, acquirer plus persons acting in concert. When they bought more than or equal to 25% of total shares. So it is mandatory to make open offer. Next, after holding 25%, this is further holding. So in case of further holding, so if it is less than or equal to 5%, then it is optional open offer. If it is more than 5%, it is mandatory open offer. Now, these people are already having 25%. They want to purchase another 25%. Is it possible or not possible? Possible. They want to purchase another 30%. Is it possible or not possible? Not possible. Because if they purchased extra 30%, the total holding will become 80. But what about minimum public contribution in case of listed company? 25%. So minimum 25% need to be held by public in order to maintain listed status. But in this case, 80% is acquired by acquirer. Now what about public holding? It may be either 20% or less than 20%. Now this company will lose listing status. So that is the reason why. So acquirer plus person acting in concert, they can purchase up to maximum 75% because minimum 25% is reserved for public. Next one. Then how to make open offer? How to make open offer? So first of all, acquirer plus person acting in concert, so need to make public announcement. They are required to make public announcement about open offer. So what they are required to disclose? So we are purchasing 25% of shares from promoters, or we are already having 25%. We are purchasing extra stake from promoters. As we are purchasing stake from promoters, we want to purchase shares from public also. So for this purpose, we are going for public offer, that is open offer. Like this, they are required to make public announcement. After making public announcement, they are required to communicate about this matter to SEBI. Not only SEBI, so target company. Not only target company, stock exchange where the target company is listed. So now, how many days is required in order to communicate about this public announcement? 5 working days. So within 5 working days, after making public announcement, within 5 working days, so the detailed plan regarding how to make open offer need to be forwarded to SEBI, target company, and the stock exchange where target company is listed. Here it is just for communication purpose. Here also it is just for communication purpose. But in case of SEBI, it is not for communication purpose. It is for receiving objections. That means who can give objection to the plan which was given by acquirer and person acting in concert? Only SEBI. Now, in case of target company, in case of stock exchange where target company is listed, they will just receive the information, they will do nothing. But in case of SEBI, they will receive the information, they will provide their objections. Now, for providing objections, what is the time limit? So, for objections, it is 15 days, 15 working days. So, SEBI will take 15 working days to give their objection. If objection is given within 15 working days, according to objections, the plan will be updated. Open offer plan will be updated. If no objections were received from SEBI within 15 working days, so after expiry of 15 days, the plan is deemed to be approved by SEBI. Next one. After SEBI approval. After SEBI approval. So SEBI approval means when it provide approval within 15 days, the date of receipt of approval. If it fails to provide approval within 15 days, 16th date. That means the date on which the 15 days time period is expired. So from that date onwards, within 7 working days, the company is required to prepare detailed public announcement containing detailed terms and conditions of offer, because previously it prepared a plan, but for this plan SEBI made some objections. That means the plan is updated. Now the updated plan need to be communicated to public within 7 working days. Next one. Then within 12 working days, they are required to open the offer process. So within 12 working days, they need to open the offer process. That means from 11th working day onwards, the public must be capable of exercising their option. Now, this offer will be open for how many working days? 10 working days. During these 10 working days, if any public want to sell the shares, they will exercise their option. If they want to hold the shares, they will lapse this option. Now, after 10 working days, so all offers will be received by the acquirer and person acting in concert. Now, for the offers received by acquirer and person acting in concert, they are required to make payment in order to acquire the shares. Now, within how many days they are required to make payment? 10 working days. Now, say what are the time limits here? So, first of all, when all these points will be triggered? In case of mandatory open offer, in case of voluntary open offer. Mandatory open offer, when it acquires more than or equal to 25%, plus further acquisition of more than 5%. Mandatory open offer. Voluntary open offer, already they are having 25% of capital. Now they are about to acquire additional stake, but which is less than or equal to 5%. In this case, voluntary open offer. So first of all, they need to prepare a plan, and the plan need to be made publicly available. After that, within 5 working days, provide the plan to SEBI, target company, stock exchange where target company is listed. Next, SEBI, if it want to provide any objection, it will provide the objection within 15 working days. Now, if no objection is received within 15 working days, after the expiry of 15 working days, the plan is deemed to be approved. Now, the detailed plan need to be communicated within 7 working days of SEBI approval, and the offer process need to commence within 12 working days of SEBI approval. And this offer process need to stay for at least 10 working days. After that, the payment need to be made to public within another 10 working days. Next one, how to make payment. So how to make payment? So you can pay in cash, or you can give listed equity shares. So listed equity shares of acquirer or persons acting in concert. Next one, listed secured debt instruments. So secured debt instruments means it may be debentures or bonds which is properly backed with a security, and those securities must also be listed. Or they can even provide convertible debt instrument which need to be converted into listed equity shares in future. So what need to be given to public in order to buy the shares of the public? Either cash or listed equity shares, or listed secured debt instruments, or convertible debt securities which can be converted into listed equity shares. So by offering these things to the public, they can buy the shares of target company. Next one, for this purpose, the company acquirer is required to open escrow account also, which will act like guarantee. So now, in this escrow account, the acquirer and person acting in concert need to deposit cash, or they need to provide either bank guarantee or they need to provide either frequently traded and freely transferable equity shares, and they can deposit other securities also. What is the purpose of depositing all these things in escrow account? If within 10 working days, if acquirer fails to make payment to the selling shareholder, then that payment will be made through escrow account. Sir, what happens if within 10 working days he made payment? Then after 30 days, all this amount which was there in escrow account will be released. Next one, obligation of target company. So next one, obligation of target company. So actually, under open offer process, who will be involved? Target company will be involved, and acquirer plus persons acting in concert will be involved. So what are the obligations of target company and what are the obligations of acquirer plus person acting in concert? First one. So here the purchases, the shares are purchased by acquirer and person acting in concert. Now the company want to do business negligently. Is it allowed or not allowed? Not allowed. Previously, how they are running the business, in the same manner they need to continue the business. Even the outsider bought 25% of shares or extra stake after 25% of shares, the members of the target company, the directors of the target company need to run the company as it is. That is obligation number one. So the company need to be operated in ordinary course of business. Second point, they shall not announce any corporate action. What is meant by corporate action? Declaration of dividend, issue of bonus shares, issue of right shares. They can't offer such things. Why? Because acquirer and person acting in concert are about to purchase the shares of public. When they are about to purchase the shares of public, you can't stop the public by offering corporate actions. If you say, I will pay dividend to you, then what public will do? To get dividend, they will not sell shares to the acquirer. If you announce any bonus issue or rights issue to get that benefit, they will not sell the shares to the acquirer. So that's why don't stop public from selling those shares to acquirer. So that's why announcing corporate action is not allowed. Third one, target company is required to provide list of its members to acquirer plus person acting in concert. Reason? Now acquirer and person acting in concert will make open offer to these members. Now if these people want to sell the shares to acquirer, they will purchase the shares. So for this purpose, first of all, acquirer must know who are the members of this company. How they will get information about this? Yes, target company need to give this information. And last obligation, so out of assets, we need to take material assets. So material assets of target company shall not be sold, shall not be given on lease, shall not be provided as security to get any loan without the permission of shareholders. That means if SR is passed by shareholders, so doing all these things is allowed. Now say, what are the obligations of target company? They need to run the company as usual in ordinary course of business. Next one, they shall not announce any corporate actions in order to attract public. Next one, they shall give list of members to acquirer and target company. And last one, they shall not alienate, that is sale or lease or any kind of disposal. They shall not alienate material assets of the target company without passing SR. Now what about the obligations of acquirer plus persons acting in concert? So fourth point is applicable as it is. So even target company is also not allowed to alienate the material assets of target company without the permission of shareholders. That means target company is not allowed to sell the assets of target company. Acquirer and person acting in concert is not allowed to sell the assets of target company. To sell the assets of target company, that to material assets of target company, what is required? SR is required. The same obligation will continue here also. Apart from this, what are other obligations? So SEBI regulations must be followed. Next one, payment must be made within time. Payment must be made within time. If there is any non-payment, if there is any non-compliance of SEBI regulations, who are liable? Acquirer and person acting in concert, both are jointly and severally liable. So we completed about obligations of acquirer as well as obligations of target company. Next one, withdrawal of offer. So acquirer and person acting in concert made offer, open offer. Can they withdraw the offer? Yes, it is allowed only in few situations. First one, statutory approvals are not obtained. Say for example, SEBI approval is required, but SEBI rejected the application. What to do now? Cancel the open offer. There is no other option. When statutory approvals are not given, then you need to cancel the open offer. Next one. If acquirer is a natural person and he was expired. So if acquirer is expired, then who will purchase the shares? So open offer process will be cancelled. Next one. Any condition stipulated in the agreement for acquisition. Say for example, in voluntary open offer case. So already the acquirer is having 25% of shares. They want to purchase another 3%. So here a voluntary open offer will trigger. Now, at the time of going to voluntary open offer, they made a condition like this. If minimum 10% of public offers their shares, then only I will buy. Otherwise, I won't buy. Now, what happens if this 10% people give offer? They will buy. What happens only if 7% people give offer? They will not buy. That means what will happen to the open offer? It will be cancelled. But this kind of condition is applicable only in case of voluntary open offer. In case of mandatory open offer, it is mandatory, no condition is applicable. So compulsorily acquirer need to acquire the shares of public. But in case of voluntary open offer, they can put condition like this. Okay, I will buy the shares of public, only this condition is satisfied, like that. He can put a condition also. If that condition is not satisfied, entire open offer process will be cancelled. Next one. Any other reason? So, which is given by SEBI. In all these cases, offer will be cancelled. Next one. So, preconditions for making voluntary offer. First of all, having 25% of minimum stake is mandatory. So, without having 25% of minimum stake, you can't go for voluntary open offer. So, having 25% of stake is mandatory, and you need to go for extra stake, which is less than or equal to 5%. Next one. So, no voluntary open offer in last 52 weeks. No voluntary open offer in next 6 months. So, both these conditions need to be satisfied. Next one. During open offer, so they can purchase shares from the public only, but not from any other source. Next one. They can put condition also, minimum level of acceptance like 10%. If public subscribed for 10%, then only we can proceed further. Like that, they can put conditions also. So, what are the conditions? Already existing stake must be at least 25%. New stake shall not exceed 5%. Second one, last 52 weeks, no voluntary offer. Next 6 months, no voluntary offer. And shares must be acquired only in offer period, that too from public, not from any other source. And finally, they can put conditions for voluntary open offer also. If that condition is fulfilled, then only they will make voluntary open offer. Otherwise, voluntary open offer will be cancelled. Next one. So last question, which is about disclosure norms. So one is event-based disclosure, other one is continual disclosure, and last one is encumbrance disclosure. So what is meant by event-based disclosure? Say for example, whenever the shares are acquired, it is an event. Whenever the shares are sold, it is also an event. Acquired means how to acquire? Two options are available. First option, I will give money, I will take shares. This is called as acquisition. Second option, so previously I took shares as security to provide loan to you, but you made default. When you made default, I will take those shares. So this is also called as acquisition. Then what about sale of shares? So if I give shares to you in order to get some money, this is called as sale. Second one, so previously I took shares from you as a security for giving loan. Now you made loan default. Now instead of taking those shares onto my name, I want to sell those shares. In this case, it will become sale only. So whenever there is an acquisition, including acquisition through encumbrance, that is charge. Whenever there is sale, including sale through encumbrance, that is charge. So in case of acquisition, in case of sale, it will be called as event. So after the happening of this event, the same need to be disclosed. Now the question is, who need to disclose? Acquirer, persons acting in concert. Both the people are required to make disclosure. Next one, promoters of the target company are also required to make disclosure. So who are required to make disclosure? Promoters of target company. Next one, acquirer. Next one, person acting in concert. When they are required to make disclosure? At the time of acquisition, at the time of sale. To whom they are required to disclose? Target company. Next one, stock exchange where this target company is listed. Next one, continual disclosures. So this is continuous disclosure. This disclosure need to be made by every person after the completion of financial year. Okay, who are required to disclose? Again, promoters, acquirer plus persons acting in concert. Now the point is promoter. So after the completion of financial year, within 7 working days, he need to communicate about his holding in the company to target company and stock exchange where the target company is listed. Then what about acquirer plus person acting in concert? So even this person, after the completion of financial year, within 7 working days, he need to state about his holding to target company and stock exchange where target company is listed. Now in case of promoter, this is irrespective of shareholding. In case of acquirer plus person acting in concert, so minimum 25% of capital need to be subscribed by them. That means in case of promoter, even though he is holding 1% also, he need to disclose his interest in the company within 7 working days of completion of financial year. But in case of acquirer, in case of person acting in concert, they are required to make such kind of disclosure only when they are having minimum 25% of shares. Next one. Then what about encumbrance disclosure? This is very simple. So whenever promoter is having some shares of target company and this promoter gave those shares to a money lender as a security to get some loan. So here encumbrance is created, charge is created. The same need to be intimated to company as well as stock exchange where company is listed. Next one, whenever the loan is repaid, that means whenever the charge is released, even in that situation also this promoter is required to make disclosure. So this is called as encumbrance disclosure. So first point, it is about sale as well as purchase. Second point, at the end of every financial year. Third point, at the time of creating charge, at the time of release of charge. So these people are required to make disclosure to whom? Target company or stock exchange where target company is listed. So by this we completed about takeover also. So complete SEBI regulations got completed. MCQs in MCQ booklet. First one, how many minimum members are required to form a public limited company? So answer is 7. Silent go. In order to be a government company, 51% of shares need to be held by either central government or state government or both. So any or all of the above. Next one, in case of limited companies, what is limited? Liability of members. So in case if there is any restriction on transfer of shares, it can be there for private company. Then what about foreign company? It is a company registered outside India but having place of business in India or conduct any business in India. So the correct option is either 1 or 2. Next one, company which do not have any significant accounting transaction is called as dormant company. LIC. So LIC is a statutory corporation. At the same time, it is a public financial institution. So option B. Persons who sign the MOA are called as subscribers. After incorporation, they will become members. Certificate of incorporation will be issued by ROC. Declaration by professional at the time of incorporation of company means either CA or CMA or CS or advocate. So answer is any of the above. So change of register office within a city or town or village requires. So if it is within the same city, board resolution. If city got changed, but ROC is same, state is same, then special resolution. If city got changed, ROC is also changed, but state remains same. SR plus CG's approval. If state got changed, SR plus CG's approval. So this is first case. What is sufficient? Board resolution is sufficient. Next one. Section 8 companies cannot. Yes, they cannot distribute dividend. ABC Limited is registered in India with 100% shares being held by KYZ Limited, a company registered in UK having no business in India. Now ABC Limited is called as, it is Indian company. So it is not a wholly owned subsidiary for foreign company. It is wholly owned subsidiary only, but not for foreign company, because this company is registered outside India and this company don't have place of business in India. That means that company is not a foreign company. It is a company which is incorporated outside India. That's it. Now, this company is incorporated in India, so it is Indian company, and we need to call that company as wholly owned subsidiary for a company which is incorporated outside India, but not for foreign company. So that option is not given. That's why we need to take first option. Next one. ABC Limited has 35% shares in XYZ Limited. The majority of directors of XYZ Limited are appointed and removed by ABC Limited. Then XYZ Limited is subsidiary company. So if one company holds more than 50% of total voting power in another company will become subsidiary. If first company controls majority directors of second company will become subsidiary. So this is second category case. A guarantee company is similar to LLP. Reason? So in case of LLP, partners are not required to give capital. In case of guarantee company also, they are not required to provide money as of now, but at the time of liquidation. So in case of guarantee company, the members are required to contribute up to guarantee amount. If it is LLP, the partners are required to contribute up to agreed capital contribution, which is nothing but guarantee amount. Next one. If a company is converted into LLP, now the intimation is given to previous ROC within how many days? 15 days. The same is applicable if firm is converted into LLP. Next one. Foreign companies related chapter number. It is chapter number 22. Next one. In case of secured debentures of public issue, the security is created in favor of. So whether it is deposits or debentures, whenever the company offers security, that security will be created in favor of trustee. If it is debentures, trustee of debentures. If it is deposits, trustee of deposits. So the answer is, this is debenture, so trustee of debentures. Fully convertible debenture is debt instrument. So this is not FR. In FR, it may be called with some other name, but in law, it is called as debt instrument only. Then what about register of deposit? Is it mandatory or optional? Mandatory. What about the content? According to company's rules. Next one. A debenture trustee can be, so any entity which is registered with SEBI. That means only SEBI registered entities can act like trustees. Next one. And what is meant by loan? Actually, all these things are loan, but in parallels to Companies Act, cash credit will be taken as loan. Next one. In case of deposits by company, what about brokerage? Rate of interest and brokerage, it is as per guidelines issued by RBI for NBFCs. So here NBFC is not mentioned. We need to take RBI related point. That is option 3. Once declared in AGM, dividend cannot be revoked. IEPF stands for Investors Education and Protection Fund. So once dividend is declared, the amount must be transferred to a separate bank account within 5 days. So a practicing chartered accountant may be appointed as auditor for a term of 5 years. That is from 1st AGM to 6th AGM. Director responsibility statement is the part of board report. Actually, board report will contain a separate statement with respect to director responsibility. Next one. NFRA stands for National Financial Reporting Authority of India. Actually, ICAI will give accounting standards, and those standards will be prescribed by central government after consulting with NFRA. Statutory auditor shall be practicing CA. In normal course, the board report is signed by, if chairman is there, and if the chairman is authorized by board of directors, then chairman. If there is no chairman, or if chairman is not authorized by board of directors, then board of directors will sign. So in this case, the answer is chairman. That too with the authority of board of directors. C&AG stands for Comptroller and Auditor General of India. Next one. The financial statements are to be filed with the register within 30 days of AGM. Next one. In case of private company, internal auditor has to be appointed if the turnover is 200 crores. For listed companies, for all companies, this is mandatory. For unlisted public companies, out of 4 conditions, 1 condition need to be satisfied. For private companies, out of 2 conditions, 1 condition need to be satisfied. Now for private company, what are those 2 conditions? Turnover, paid up capital. Now turnover limit is 200 crores. Audit report is to be addressed to shareholders. But if it is government company audit, the audit report shall be addressed to C&AG. Next one. CARO 2020 is effective from next year onwards, that is 1st April 2021. Next one. First auditor is appointed by Board of Directors. When nothing is given, assume that company as non-government company. So in case of non-government company, first auditor will be appointed by Board of Directors. If Board of Directors fails, then only shareholders will come into action. So answer is Board of Directors. Auditor can render the following additional services to the company where he is the auditor. Internal audit, no, prohibited. Accounting and bookkeeping, prohibited. Investment advisory services, banking services, prohibited. None of the above, correct answer. Additional director tenure is up to next AGM, not next board meeting, it is next AGM. Then what about alternate director, when he will be appointed? When original director went outside India for a period of at least 3 months. Woman director has to be there if the company is listed company, turnover is 300 crore or more, either of the above, none of the above. Answer is either of the above. Section 184 of the Companies Act provides for disclosure of interest. So directors, before going to board meeting, if they are having any interest in the proposed transaction, they need to disclose that fact to remaining directors. They shall not participate in board meeting. They shall not vote at board meeting. That is the concept. But what is given here? Ordinary, board, special. So answer is none. A whole-time director is appointed for a term of managing director, whole-time director, manager. Every person will be appointed for 5 years. During last 5th year, they can be reappointed for another 5 years. Next one. If a person other than retiring director is proposed, a check of dash is to be deposited with the proposal. If I want to become a director in the company, I need to deposit how much money? 1 lakh. When that amount will be refunded me? So if I got more than 25% of favorable votes, then the amount will be refunded. Next one. So answer is 1 lakh. So a director may be appointed by small shareholder. Small shareholder means a shareholder who holds shares worth of face value of maximum 20,000. A company may remove director with appointed with ordinary resolution, removed with ordinary resolution. Only in special cases the removal process is different. Next one. Managing director's appointment is ratified in AGM through every director appointment will be done through ordinary resolution only. Section 203 provides for the appointment of whole-time KMP. So which companies are required to have whole-time KMP? All listed companies, all unlisted public companies having paid up capital of 10 crores or more. In case of private company with paid up capital of 10 crores or more, instead of whole-time KMP, they are required to have whole-time CS. Next one. The eligibility and conditions of appointment of MD is mentioned in which schedule? Schedule 5. Schedule 7, CSR. Schedule 5, appointment particulars relating to MD, WTD, manager. So here we discussed about a few conditions like under 19 Acts, no imprisonment, no fine exceeding 1,000 rupees. Under COFEPOS Act, no detention, and he must be a resident of India. That means he should stay in India for last 12 months. So these are the conditions which are provided in schedule number 5. Next one. Maximum remuneration to all managerial person is 11%. So 0.11 means 11%. Independent directors are not entitled to get. Because what happens if they got shares? They will become interested persons. They will become related persons. Then how they can continue as independent director? So that's why stock options are not eligible. Board report need to be addressed to members. So whether it is audit report or board report, both are addressed to members. But if it is a listed company, so audit report and board report need to be addressed to SEBI also. Along with members, they need to be addressed to SEBI also. But this is a normal situation. We need to write members only. Next one, power of board of directors may be restricted subject to. So first of all, board of directors by passing board resolution, they can do anything. But such power can be restricted. That means in certain areas, board of directors alone can't make decision. They are required to take the permission of shareholders. So like this, where we can put restrictions? It can be there in Companies Act, AOA, or resolution passed by shareholders. So that is any or all of the above. Related party transactions are provided in which section? 188. Majority of audit committee members shall be independent. Then independent directors separately shall meet at dash in a calendar year once. If it is board of directors meeting, 4 for each calendar year, 1 for each half of the calendar year, and third situation completely not applicable. That is OPC with only one director case. Next one. Then what about the quorum requirement of board meeting? 1/3 or 2, whichever is higher. Next one. If dash of the directors requires that a resolution under circulation be placed in board meeting for decision, it has to be complied with. It is not 2/3, 1/3. If 1/3 directors demanded to go for board meeting instead of resolution by circulation, then the company must go for resolution by board meeting only. Because we discussed about RBC. A company can go to RBC at any point of time. But in two situations, it can't go to RBC. Situation number 1, when 1/3 of directors demand for board meeting only. Situation number 2, under SS1, that too in Annexure A, there is a list of agendas. For those agendas, so RBC is not allowed. Only they are required to conduct board meeting. So in these two areas, RBC is not allowed. Only board meeting is allowed. So answer is 1/3. Next one. Minutes of board meeting are to be signed by. So chairman of present meeting or chairman of next meeting. Say for example, they passed board resolution by conducting board meeting. Now minutes need to be prepared. Who need to sign? Chairman of the present meeting. Now they passed board resolution through resolution by circulation, that is without conducting board meeting. Then what about preparation of minutes? It is required here also. But when to prepare these minutes? In next board meeting. Then who need to sign these minutes book? Next board meeting chairman. That means, so minutes book of board meeting can be signed by either present chairman or next board chairman. Next one. Minutes book of board meeting are to be preserved for permanently. Every minute book need to be preserved permanently. At where? Registrar office. Next one. SFIO stands for Serious Fraud Investigating Office. The decision to authorize buyback of board can be made. Actually, we discussed about powers of board of directors. All such powers need to be exercised by board of directors in board meeting only. Only in few cases they are allowed to go for RBC. What are those few cases? Taking loans, making LSD transactions. Only for that transactions only they can go for RBC. Then what about buyback? Board meeting is mandatory. So answer is only in board meeting. In case chairman is executive, at least dash of board of directors shall be independent directors. So first one, according to SEBI regulations, we need to check who is chairman. If chairman is executive, then 1/2 of the total directors need to be independent. If chairman is non-executive, then 1/3 of total directors need to be independent. Next one. Majority of members of audit committee shall be. This is already completed. Board of directors are supposed to address their report to actually members, but members option is not given here. So the best alternative is SEBI. Next one. Then the provisions relating to investigation. Inspection, inquiry, investigation chapter. The chapter number is 14. Companies incorporated outside India. Chapter 22. Next one. If company want to punish an employee or officer of a company, it has to take permission of. Actually, this is required during investigation. So during investigation, one of the employee or officer supported investigator. and because of that support, now company want to punish that employee or officer. So in order to punish that employer or officer, that too in the time of investigation, what is required? NCLT's approval is required. So NCLT approval is required. During normal situation, no need to take any permission in order to punish the employee or officer. But during investigation, if you want to punish those people who supports investigation, so then you are required to take the permission of NCLT. Next one. The investigating officer has the power of inspection, taking evidence as per. Actually, that person will have all the powers of civil code. So for powers of civil code, we need to refer civil procedures code. Next one. In case of merger, what will happen to transferor company? Transferor company will be dissolved. Transferee company will be created. So answer is dissolved. The auditor has to confirm in the scheme that. So this is about amalgamation scheme or compromise scheme. So what he is required to do here? He need to say whether it is in accordance with accounting standards or not. So only option A. No need to check with the compliance of Companies Act. He is required to check with the conformity with accounting standards only. So option A is correct. Next one. On amalgamation, the following are transferred to transferee company. Rights will be transferred, liabilities will be transferred, everything will be transferred. That's why both. When transferor company is a listed company, transferee company is unlisted company, then the transferee company will become. Nothing will happen. If listed company acquires unlisted company, what about the shares of unlisted company? Still it is unlisted company only. But if that unlisted company made any listing agreement with any stock exchange, then it will become listed company. So just because if listed company bought that company, it doesn't mean that unlisted company will become listed company. So it is continues to be an unlisted company. So unless it is listed by complying with listing requirements. Option C. Next one. Power of majority is subject to. Actually, if majority people agree, then it will become the decision of the entire company. But what happens if Companies Act requires special resolution? Then majority is not sufficient. Simple majority is not sufficient. Common law. Common law means case laws. And what about memorandum of association? Yes, in all these situations, so you can ask members to pass any resolution which is superior than ordinary resolution. In those cases, ordinary resolution is not sufficient. That means simple majority is not sufficient. So the answer is all of the above. Next one. Any act done by directors beyond authority is considered as ultra virus. A case of oppression, application may be filed to. So actually application need to be filed to NCLT. But in answers it is given ROC. So we need to follow the answers that are given in CMA sources. Okay, this is reason. This is to whom the application can be made. So reason may be either it is fraud or minority, or it may be ultra virus, or it may be breach of duty. So any or all of the above. But the application need to be made to NCLT. But according to sources, we need to take ROC. In exam, go according to sources only. Next one. Powers of tribunal is listed in which section? 242. So he only saying the powers of tribunal. But in previous question, he is saying the answer is ROC but not NCLT. Next one. Statutory auditor can also function as internal auditor? No. Financial advisor? No. Accounting solution advisor? No. All are prohibited services. But tax auditor? Yes. It is not prohibited. A CFO of a company has to be a. So he may be a chartered accountant, may not be a chartered accountant. Same applicable to cost accountant, same applicable to MBA. So answer is none of the above. So CFO means he may be any person with any qualification. Next one. Sitting fee of board meetings and committee meetings need not be same. It may be different also. But in case of sitting fee of normal directors with women directors need to be same. Normal directors with independent directors need to be same. So for attending board meetings and for attending committee meetings need not be same. Next one. Disclosure of interest by director is. So it must be made at the time of appointment. So every year and at the time of change. That means answer is all or any of the above. Quorum of board meeting is dash of total strength of board, 1/3. So when nothing is given, don't assume that company has section 8 company and don't take 1/4. So take it as normal company and take 1/3. Next one. In case of merger of A Limited with B Limited, what will happen to A Limited? Because A Limited and B Limited will be merged with each other and AB Limited will be formed. So A Limited will be dissolved, B Limited will be dissolved and AB Limited will be created. So they are asking about A Limited, it will be dissolved. Dividend distribution policy will be decided by board of directors. But when to declare dividend, how much amount to declare as dividend will be decided by shareholders in general meeting. But policy will be determined by board of directors. So the correct answer is board of directors. Companies shall not make investment through more than dash layer of investment companies. 2 layers. Rate of interest in case of deposit is guided by RBI. We need to follow the guidelines issued by RBI for the purpose of NBFC. So answer is RBI. No eligible company shall accept or renew deposit from its members up to. If it is private company, from members 100%. If it is ineligible public company, from members 35%. If it is eligible public company, from members 10 only, but from public 25. They are asking about from members. So answer is 10. 10%, that is 0.1. Interim dividend is decided by board of directors. Final dividend, shareholders. Books of accounts can be inspected any director. Accounting standards will be prescribed by central government. But who will recommend? ICAI. And how central government will prescribe? After taking the consultation of NFRA. The board report need to be signed by. So chairperson concept is not given here. So go with any director. So if chairperson is given in the option, we need to take chairperson. Otherwise, any director. Next one. Zenith Limited is a company registered in USA and doing business in USA. As per Indian law, this is not a foreign company. But when it opens a branch in India, it will become a foreign company. So answer is both 2 and 3. None of the above. None of the above. Next one. A sectoral company is supposed to comply with. So it is required to follow Companies Act. It is required to follow the law which is specifically applicable to that company. Example, banks. They are required to follow Banking Regulation Act as well as Companies Act. So both Companies Act as well as sector laws. Articles of association can be altered by special resolution. If it is entrenched, if articles of association is entrenched, then a resolution which is superior than special resolution is required. It is not only unanimous, it may be even 80%, 85%, 90% also. Next one. Shifting of registered office from one state to another state. SR, CG's approval, both are required. Next one. The following members of a company shall have a right to apply under section 241 for operation, namely. So, first one, 100 members. Second one, 1/10 of total members. Third one, if company don't have share capital, 1/5 of total members. So answer is any of the above. IBC was passed by Parliament in which year? 2016. Then what about the applicability of IBC? It is applicable to all companies, LLPs, partnerships. So all of the above. And what about second situation? Banks, insurance companies, asset reconstruction companies. All the 3 companies are financial service providers. For financial service providers, IBC is not applicable. So the answer is none of the above. An entity in favor of whom security interest is created is called as secured creditor. Next one. In normal course, the corporate insolvency resolution process shall be completed within a period of dash days, 180 days from the admission of application. The RP has to manage the company as. So he is not liquidator. He is RP. The process is under resolution. That means he need to run the company as a going concern entity. Next one. As per section 22, subsection 1, the first meeting of COC will be held within how many days of constitution? And the agenda is to appoint RP. A resolution professional may be replaced with voting rights of dash of COC. 66%. Normally 51. Secure creditors 75. In all special cases 66. Next one. The adjudicating authority in case of personal insolvency is Debt Recovery Tribunal. In case of corporate insolvency, NCLT. Next one. During bankruptcy proceedings, a bankrupt shall, that person cannot be appointed as trustee for any person. Trustee means managing the assets of some other person. Next one. That person cannot be appointed as public servant. So that person cannot participate in election. Okay. Then what about taking part of director and formation of companies? What about disclosing all transactions about bankruptcy proceedings? These are not required as per IBC. As per IBC, only first point got covered. That's why the correct option is option 1. He shall not be appointed as trustee. He shall not be appointed as public servant. He shall not be appointed for the role of election. Next one. Under Insolvency and Bankruptcy Code 2016, where extension of time is requested, the corporate resolution process shall be completed within a period of 330 days. But that option is not given here. So when 330 is not given, don't go for whichever is nearer. Go for 180 days. Yes, they said the extension is requested. But whether extension is granted or not, that was not given here. So that's why the best option is 180 days. Let's assume the extension is not given. So that's why the time limit will be 180 days. Next one. Insolvency and Bankruptcy Code 2016 is not applicable on financial service providers. With the introduction of Insolvency and Bankruptcy Code, the following laws has been repealed. Actually, so how to liquidate company is covered in these chapters. In Companies Act 2013. How to liquidate company is covered in these parts in case of Companies Act 1956. So like that, there are so many laws which will govern about liquidation of entities. But once IBC came into force, all these chapters are removed. Because every liquidation will be dealt by IBC only. So the answer is all of the above. Next one. The Insolvency and Bankruptcy Board has a power of dash court in respect of issue of summonses, discovery and production of books, inspection of books or registers, and issue of commissions for examination of witness. All these powers are nothing but the powers of civil court. So answer is D. The following institutions are insolvency professional agencies. Institute of Cost Accountants of India. That is the answer given. But correct option is all of the above only. But in sources, the answer is Institute of Cost Accountants of India. So biased answer. Next one. The authority provided under IBBA to administer and regulate the law is IBBA only. So full form, Insolvency and Bankruptcy Board of India. Next one. Related party in relation to a corporate debtor means. So he may be a director or partner or relative of such director or partner. So next one. He may be a KMP or relative of KMP. Next one. It may be a LLP or partnership where it's a director, partner, manager or his relative is a partner. So answer is all of the above. All these people are called as related persons. So what happens when we identify related parties in case of corporate debtor? Those people, even though they are financial creditors, those people are not entitled to become the member of COC. Those people can't vote at the meeting of COC. Next one. A person under IBC is. A person under IBC is HUF, a company, trust, all of the above. All of the above. A person shall not be eligible to submit a resolution plan if such person or any other person acting jointly or in concert with such person, nothing but who cannot submit resolution plan. Insolvent, willful defaulter. Next one. Whose account become NPA. So answer is all of the above. So triple P means so planet, people, profit. Next one. So under which level corporate governance is more relevant? It is relevant in all levels, but it is more relevant in top level. Next one. Which among the following would amount to undesirable practice by a senior executive of company? So using unpublished and secret information of the competitor. So how he got the information? Obtained from undisclosed and unfair source for his company's benefit. That means he is getting competitors' information, that to insider information without their consent, and it is using for the benefit of own company. So this is called as undesirable practice. Next one. Which of the following would not amount to sustainable development activity? Paddy cultivation. Remaining are sustainable development activities only. Next one. Corporate governance practices are almost dashed by companies in India. Regulated. How they are regulated? Through SEBI regulations. Next one. The latest committee on corporate governance was Kotak. But the first one is Kumar Mangalam Birla. So starts with Kumar Mangalam Birla and ends with Kotak. Next one. The ideal implementation agency for CSR project should be, it may be a Section 8 company, or it may be a trust, or it may be a society. So the answer is one of the above. Economic approach to sustainability relates to, economic approach relates to profit. Environment approach, planet. Next one, last one. So social approach, people. Next one. Corporate governance is more about fair method of managing company. So achieving results is not important. Managing things is okay, but that management should be done in fair method. So the correct option is fair method of managing a company. The items of Schedule 7 of the Act should be liberally interpreted. That means if education is provided there, we can add sports also. So sports is also called as education only. That means we need to take liberalized meaning instead of strict meaning. Next one. Corporate governance practices should target to keep balance among all stakeholders. So in case of corporate governance, the focus should be on all stakeholders, not just shareholders, not just employees, not just customers. We need to focus on all stakeholders. Next one. When a company evaluates an implementing agency, first step is to examine the documents. Next one. Every CSR activity is ultimately for beneficiary. Next one. CSR fund earmarked for an ongoing project need to be spent within 3 years. So section clause 49A, which was the first major compliance of corporate governance by listed companies, was on this basis of recommendation of Kumar Mangalam Birla. So started with Kumar Mangalam Birla, ended with Kotak Committee. So both start with K. Next one. Corporate governance is close to ethical conduct of business, nothing but fair method of doing business. A foreign entity cannot be, in case of CSR, it can provide advices, it can provide training, it can provide consultation services, but it cannot become implementing agency. The implementing agency must be Indian agency. Next one. Some of the reasons for which company cannot practice good governance. It may be because of narrow mindset of promoters, because of financial issues faced by the company, because of unhealthy competition in the market, any of the above. So answer is any of the above. Next one. A company sponsors the expenditure of a primary school of physically disabled students having 200 students. 3 employee children being physically disabled have also been admitted in that school. Can I call this as CSR activity? If it is meant to benefit only employee or employee family members, it is not CSR activity. But here family members are only 3 persons. Remaining people are outsiders only. So that's why it will be classified as CSR activity. Which option? A. Next one. Which will not qualify as CSR expenditure? So, contribution to Schedule 7 funds, any activity under Schedule 7, direct implementation of CSR project by company. In all these cases, it will be qualified as CSR expenditure. But if you want to donate CSR money, you need to donate that money to recognized entity, not for unrecognized entity. So the correct option is A. Next one. Advantages of direct implementation of CSR activity by the company. So very flexible. Even small decisions can be taken by company. So better supervision, and it can be directly implemented by company. Quick decision making. So answer is all of the above. Then what about the advantages of third party implementation? Expertise. We may not expertise in that activity, but what about Section 8 company? It is already having expertise knowledge. It can do the things in a better manner. Better supervision is possible. Unbiased opinions are possible. So the answer is all of the above. Corporate governance ratings are done by credit rating agencies. Audit committee it will interact with both internal auditors as well as statutory auditors. Recommendation of audit committee may not be accepted by board of directors, but in that situation they are required to provide reasons. So the correct option is C. So board has to record the reasons. Where to record the reasons? At board report. So which of the following is the advantage of family business over non-family business? Deep industry insight. Next one. Maximum days for keeping an issue open. Minimum 3 days, maximum 10 days. Next one. At the time of IPO, the issuer has to have a compliance officer. It is not about CFO or MD or some other person. It is Companies Act requirements having CFO, MD, all these people. But what about SEBI regulations requirement? The company need to have compliance officer in order to comply with SEBI regulations. Next one. Which of the following do not require prospectus? Rights issue required, IPO required, FPO required, bonus issue not required. Minimum face value of the share. So 1 to 10 rupees. So the minimum value is 1 rupee. Takeover means getting control over the management. So when I will get the control over the management, if I got more than or equal to 25% of total shares. Next one. The purpose of SEBI Act is to provide for the establishment of a board called as SEBI. The preamble to the Act provides for the establishment of a board too. So protect the interest of all the investors, promote the development of stock markets, regulate stock markets, all of the above. And what about the functions of SEBI? It is a quasi-official. Next one. For the appointment, reappointment, remuneration, removal of director of a banking company, prior approval of dash should be obtained. RBI. But in case of normal company, it will be done by shareholders or board of directors. If board of directors did that activity, it need to be ratified by shareholders. But in case of banking companies, prior approval is also required. That prior approval is from RBI. The Competition Act has replaced MRTP Act. So previously the name of the act is MRTP. Now it got changed to Competition Act. Next one. The turnover threshold for individual company operating in India in combination is. So for this purpose, we need to refer the limits that are given under Competition Act. So the answer is 8,000 crores, which is not the objective of CCA. So CCA objective is to promote startup company. Next one, to promote and sustain competition, to prevent anti-competitive practices. But protecting the interest of consumers is not the objective of Competition Act. It is the objective of Consumer Protection Act, not Competition Act. So the correct option is C. Selling products or services below the cost is called as predatory pricing. So which is adopted by Jio at the time of introduction stage. Next one. The asset basis up to US dollar dash in case of group having presence out of India shall not be required to take CCA approval in case of merger. Again, we are required to refer the limits given in Competition Act. Answer is 4 billion. Next one. Which of the following is not the type of unfair competition? So collusive price fixing, that is multiple competitors agree with each other to raise the prices. Creation of barriers to entry. So now all competitors are creating entry barriers so that new persons will not come into the business. Next one, tie-in purchase. What is meant by tie-in purchase? So one product will be tied with another product. So for example, I will sell mobile along with mobile pouch. I will sell mobile along with charger. So these are called as nothing but tie-in products. So tie-in products are generally not unfair trade practices. Next one, predatory pricing, selling the goods or services less than the cost of production. So it is also unfair competition. So which one is not unfair competition? Tie-in purchase. Which of the following is not the objective of Competition Act? To prevent competition. Actually, it is to encourage competition, but they are given it as prevent competition. It is not objective. Next one. Unfair competition under Competition Act means adoption of practices such as collusive price fixing, yes. Allocation of markets, yes. Discriminatory pricing, yes. Answer is all of the above. An association of producers, sellers, distributors, traders, or service providers who by agreement amongst themselves limit, control, or attempt to control the production, distribution, sale, or price of or trade in goods or provision of services. It is known as cartel. So cartel means it's a group of people who are associated with same kind of business. Next one. So which of the following is not the benefit of CSR program? So when you did CSR program, you will get all these benefits, but not mutual trust. Next one. Any person aggrieved by the order of Competition Appellate Tribunal may file an appeal to Honorable Supreme Court within how many days? 60 days. Next one. The chairperson and every other member shall hold office for a term of dash number of years from the date on which he enters into office. Generally, any person term will be for 5 years. Next one. The commission has to power to impose fine, which may extend up to dash of the total turnover or assets of the combination, whichever is higher, for failure to give notice to the commission of combination. 1 person. So if any combination is happened without taking the permission of CCA, then 1% of the total turnover value or 1% of the total assets value, whichever is higher, that will be the punishment. So answer is 1%. That is 0.01. Next one. The commission may, notwithstanding anything contained in any other law for the time being in force, by order in writing, direct division of enterprise enjoying dominant position to ensure that such enterprise does not abuse its dominant position. The order may provide for following matters. What are those matters? It can transfer some assets, liabilities, rights, obligation to some other entity. It can adjust contracts. Next one, it can create or allot or surrender or cancel securities. So the answer is all of the above. Next one. If the commission does not, on the expiry of period of dash number of days from the date of notice given to commission, pass an order or issue direction in accordance with the provisions of subsection 1, 2 or 7, the combination shall be deemed to have been approved by the commission. In simple words, there is a combination. Both the companies made an application to CCI, and what is the time limit available to CCI to give the approval? 210 days. If approval is given in 210 days, then it is okay. If it is rejected within 210 days, then also it is okay. But what happens when nothing was given within 210 days? After the expiry of 210 days, the combination is deemed to be approved. So that is the question. Automatic route in FDI means no need to take CG approval, no need to take RBI approval. But in case of FEMA, for some transactions, you are required to take the permission of CG. For some transactions, you are required to take the permission of RBI. But if it is 100% automatic route, then you are not required to take any permission either from RBI or from CG. Next one. For investment in market securities, FII, that is foreign institutional investors, are to be registered with SEBI. DPIIT comes under Industry and Commerce. So it is about industrial development. So that's why it will come under Industry and Commerce. Sale of shares from resident to non-resident. Now, for resident, an asset will get created outside India. So when asset is created, when liability is created for PRII for outside Indian property, then it is called as capital account transaction. That means in case of PRII, asset or liability need to be created outside India. In case of PROI, asset or liability need to be created in India. Then it is called as capital account transaction. Now the given question is covered in first case. So this is called as capital account transaction. Next one. FDI, foreign direct investment, is prohibited in which areas? Lottery business prohibited, gambling prohibited, chit funds prohibited. So the answer is all of the above. Next one. So individuals can avail LRS facility for which transactions? So they can use LRS. LRS means up to 250,000 US dollars. They are not required to take the permission of RBI, and they can freely take 250,000 US dollars. It can be spent either for private visits to any country, to gift or making donation, for immigration purposes. Answer is all of the above. Next one. Eligible borrower can raise up to dash million US dollars through ECB in automatic route. ECB means external commercial borrowings. So how many crores? So how many millions? 750 million US dollars. Total maximum remittance under LRS 250,000 US dollars. The following remittances are prohibited. So first one, bad purpose. So second one, so in order to invest in foreign stock markets. Third one, Indian companies will issue foreign currency convertible bonds to outside people. For purchasing those foreign currency convertible bonds, Indian people can't convert dollars. So in this case, answer is all of the above. For all these purposes, PRII is not allowed to use INR in order to purchase dollars. Next one, Zenith Limited is a company registered in UK. Issues shares to citizen of UK. Under Indian law, the shares are nothing. It is not at all related to India or Indian people. That's why we can't give any name to that kind of shares. So the answer is none of the above. FEMA dash foreign currency transaction restricts. That means foreign currency transactions are allowed but subject to conditions. NPA stands for non-performance asset. Banking Regulation Act was created in 1949. Cash reserve ratio should be dash percentage of total time and demand liabilities, 4%. SLR stands for statutory liquidity reserve. Banking companies cannot pay dividend unless following are completely written off. So all of the above. Preliminary expenses, brokerage expenses, commission. All these are called as capitalized expenses. All capitalized expenses need to be written off before declaring any dividend by banking company. Asset reconstruction company ought to be registered with RBI. It will come under SARFAESI Act. SARFAESI Act regulator is RBI. The judicial authority under SARFAESI Act is DRT, Debt Recovery Tribunal. That means it is judicial authority in two situations. One is personal insolvency under IBC. Second one is under SARFAESI Act. Amalgamation of banking company requires dash percentage of voting of shareholders. So normal company is 3/4, but banking company is 2/3. Every banking company shall maintain liquid assets not less than dash percentage of total time and demand deposits, 25%. So previously we came across 4%. It is about cash reserve ratio. Now it is 25%. It is about liquid assets. Next one. Every banking company incorporated in India shall prepare balance sheet and profit and loss account as on last working day of accounting year, nothing but financial year. According to Banking Regulation Act 1949, no banking company shall pay dividend on its shares until all its capitalized expenses has been completely written off. So preliminary expenses, brokerage, commission. Minimum paid up capital for life insurance business. For all insurance business, minimum paid up capital is 100 crores. But if it is reinsurance, 200 crores. Banking Regulation Act was enacted in, it is already completed. Officer appointed by central government is called as, in case of insurance, the officer appointed by central government will be called as controller of insurance. In case of insurance company, dash percentage of assets have to be remained invested in government securities, 25%. Next one, actuarial valuation need to be done once in 1 year. Insurance policy can never be questioned after 3 years. Next one, insurance business is regulated by none of the above because IRDA is the correct answer. Next one, IRDA was established in the year 1999. So next one, life insurance, general insurance, minimum paid up capital 100 crores, repeated. Next one, the chairman of IRDA shall hold office for a term from the date on which he enters upon his office and should be eligible for reappointment. Any appointment, general term is 5 years. The amount credited to IRDA shall consist of, so government grants, fees, charges received by IRDA, any sum received from IRDA authority, so percentage of premium income received from insurance company. All this amount will become credit to IRDA. So the answer is all of the above. IRDA shall within dash months after the close of each financial year submit to central government a report giving true and full account of activities including the activities of promotion and development of insurance business within 9 months. So next one, the principle of dash ensures that an insured does not profit by insuring with multiple insurers. Indemnity. What is indemnity? If I suffered with 10 rupees loss, I need to get 10 rupees compensation. What happens if I took insurance policy with multiple insurance companies? Now for the same loss, I will collect multiple 10 rupees from multiple insurance company. Automatically it will become a profit for me. So that is not the concept behind insurance concept. So in case of insurance, the injured person need to be compensated with actual loss, not with any excess amount. So this clause is nothing but called as indemnity clause. So what is meant by indemnity clause? If a person suffers with loss, then another person will indemnify such loss only to the extent of actual loss. He will not pay any extra amount in order to give profit to that person. Next one. An actuary is expected to. So he is expected to make exact forecast of future liabilities of the policies. Next one. Insurance Laws Amendment Act was passed in the year 2015. Life insurance business means the business of effecting contracts of insurance upon human life, including any contract whereby payment of money is issued on death, or the happening of any contingency dependent on human life, and any contract which is subject to payment of premium for a term dependent on human life and shall be included and shall be deemed to be included. So it includes disability for double or triple indemnity accidental benefits. So what is meant by double indemnity accidental benefit? So you will get 2 times of loss. What about triple benefit indemnity accident benefit? You will get 3 times of the loss. Next one, the granting of annuity upon human life. If you are physically disabled, you will get pension amount. So this is nothing but called as annuity. Next one, superannuation allowances. So now all these points will be covered. So answer is all of the above. The amount of indemnity may be limited by certain conditions. What are those conditions? Depends upon loss. If actual loss is very less, that person will get very less amount from the insurance company. Next one, if actual loss is 10 lakhs, but insurance company agreed to take only 2 lakhs according to agreement, now they will pay only 2 lakhs, because if you take policy for 2 lakhs, insurance company will pay only 2 lakhs even though your loss is 10 lakhs. Next one, and proximity costs. What is meant by proximity costs? So there must be a direct loss. Say for example, I took fire insurance policy. So if there is any direct fire accident, and because of fire accident, so I got any property loss, then insurance company will pay money to me. But what happens if I got property loss because of any other reason, not for fire insurance reason? Then I will not get any compensation. So based on these factors, so insurance company will pay insurance amount. So answer is any or all of the above. In case of fire and motor accident insurance, the insurable interest has to be present at which point of time? In simple words, at the time of fire insurance, that is at the time of property insurance, and at the time of motor vehicle insurance. In both these cases, that person need to be owner at the time of taking policy and at the time of accident. At both situations, he must be a owner. That means at both situations, he need to have insurable interest. Next one, NSIC stands for National Small Industries Corporation, so which will come under MSME. Next one, if a unit has investment in plant and equipment of 55 crores, next one, a turnover of 300 crores, it will be classified as, so micro, small, medium, nothing will be covered here. So none of the above. So we need to refer the limits here. While calculating the value of assets for ascertaining the classification, the value of following is excluded. Actually, we need to take the value of investment in plant and machinery only. Don't take investment in land and building and furnitures and fixtures. In case of turnover, we need to take only domestic turnover only. So don't take export turnover. That means in case of assets, we need to take only plant and machinery. In case of sales, we need to take only domestic turnover. So land, furniture and fittings, both 1 and 2. Answer is both 1 and 2. While calculating the value of assets for ascertaining the classification, the value of the following is excluded. It is not value of assets, value of turnover. So value of turnover, we need to exclude exports. Certifying authority get license to operate from. Certifying authority means the authority which will issue digital signature certificates. So they will take license from CCA. CCA stands for Controller of Certifying Authority. Which of the following is not an offense under IT Act? So this is an offense, this is an offense, this is an offense, this is the name of CCA. How a name of CCA will become offense or not an offense? So this is correct option. Next one. Information technology, reasonable security practices and procedures and sensitive personal data or information rules was notified in the year 2011. OSBA stands for Open Source Business Intelligence Cyber Laws. The key benefits that business can get from BA application include the ability to. So first of all, what is meant by BA application, business intelligence application? It will convert raw data into useful data. That useful data will be used for the purpose of making decisions. And if they use useful data for the purpose of making decisions, what will happen? So we can make faster decision making. Next one, we can optimize internal business processes with effective decision making, and we can increase operational efficiency and productivity with efficient business decision making. So answer is all of the above. Next one, decision of cyber appellate tribunal can be appealed to High Court, but if it is DRAT or if it is NCLAT, the appeal can be made to Supreme Court. But in case of cyber appellate tribunal, the appeal can be made to High Court. So these two will come under IBC and this will come under cyber laws. Next one, information technology, reasonable security practices and procedures and sensitive personal data or information rules. These rules are applicable for body corporates, individuals who are located in India. Those people who are not located in India, for those people this is not applicable. So first of all, these rules are about how to protect the personal data of the customers. So this is applicable for those people who are doing business in India, who are located in India. What happens if any person is doing business outside India and they are not collecting any information of Indian people? For them this is not applicable. So that's why we need to take option A. B. Next one. Which among the following is not a cybercrime under IT Act? Actually, all are cybercrimes only. But Information Technology Act covers first one, second one, third one, but not fourth one. So actually, sending threatening messages through email is also cybercrime, but it is not cybercrime under Information Technology Act. It will be cybercrime under IPC, Indian Penal Code, but not under Information Technology Act. So correct option, last one. Which of the following is not an cyber offense to public? Offense to public, against public, terrorism against public, warfare against public, piracy against public. But what about data alteration? It is against person's property. Actually, cyber offenses are classified into three categories: against individual, against property, against public. So data alteration will be covered under against property. Remaining three will be covered under against public. Next one. When you access someone's computer without altering their data, then it is called as trespass. If you want to damage the data, if you want to alter the data, it will be called as hacking. Next one. Every reporting entity shall maintain record of. So this is about PMLA. In case of PMLA, banks and financial institutions will act like reporting entities. They are required to make report about some suspicious transactions to FIU of India, Financial Intelligence Unit of India. Now the question is, what kind of transaction need to be reported? So all transactions whose value is more than 10 lakhs. Series of transaction whose value is less than 10 lakhs but aggregate value is more than 10 lakhs. Next one. Series of transaction whose aggregate value is more than 10 lakhs but not done in Indian currency, it is done in foreign currency. So all these transactions need to be reported to FIU of India. Then what is the full form for FIU? Financial Intelligence Unit. In part B of the schedule, offences involved of a value of rupees dash is mentioned. 1 crore. STR stands for Suspicious Transaction Report. Next one. Reporting authority shall send the KYC data to central registry within how many days? 10 days. Now, introducing illegal funds into financial system is called as placement. Dividing into multiple transactions is called as layering. Taking back the money from financial system is called as integration. So this is called as placement. The cases under PMLA can be tried by special courts only. Who can initiate CARP? Financial creditor, operational creditor, corporate debtor, anyone. Which is the highest appellate authority in case of IBC? So first one, NCLT, NCLAT, Supreme Court. DRT, DRAT, Supreme Court. So the highest appellate authority is Supreme Court. Under cyber laws, it is High Court. In case of IBC, the public announcement need to be made within 3 days after appointing IRP. So after accepting the application, NCLT will do 3 things. One, they will appoint IRP. They will impose moratorium. Within 3 days of appointment, they will make public announcement. So answer is within 3 days of appointment of IRP. Who approves resolution plan? COC with how much voting? 66% voting. OPCs are allowed to file financial statements within 6 months. For normal companies, it is 30 days of AGM, but for OPC, AGM is not applicable. That's why instead of 30 days of AGM, we need to take 6 months from the end of financial year. So which of them will be considered as deposits? Last one. So if you take any secured deposit, secured debenture, it is not a deposit. Secured debenture is not a deposit. Listed debenture, it is not a deposit. Convertible debenture, it is not a deposit. So these 3 are not deposits. Then what about unlisted, non-convertible, unsecured deposit? So debenture, it will become deposit. Actually, with respect to debentures, only 3 amounts are classified as not as deposits. One is convertible, other one is listed, other one is secured. So when debentures are not covered in any of these 3 points, then that debenture amount will be treated as deposit. Now debenture provisions are not applicable, deposit provisions are applicable. Next one. When to execute deposit trust deed? So deposit trust deed will be executed by company with deposit trustee. So when to execute? At least 7 days before the issue of circular. So for members or for public, the company will prepare a circular. It will add company's auditor certificate, and both will be issued to members or public. But before doing all these things, that too before 7 days, they will appoint deposit trustee. For this purpose, they will execute deposit trust deed. Next one. Then what about return of deposits? It is DPT 3. Then what about advertisement of circular? It is DPT 1. So DPT 1. In DPT 1, the company is required to circulate the circular. Next one. The accounts of NFRA shall be audited by every government entity's books will be audited by C&AG. Next one. Which of the following is the advantage of family business over non-family business over completed? Deep industry insight. Corporate governance is a blend of internal and external corporate governance mechanisms. The director prepared the annual accounts in director responsibility statement on which basis? Going concern basis. A minor can be nominated as nominee in life insurance policy by its holder. So life insurance policy holder need to give the details of nominee. So if the nominee is minor, no problem at all. If so main holder give the minor name as nominee, then minor can become nominee. So holder means policy holder. Next one. Promoters may decide to prepare and sign a memorandum of understanding or memorandum of agreement. This is called as promoters agreement. It is not MOA or it is not AOA. It is promoters agreement. MOA and AOA is nothing but agreement between company and members. But in this case, who got involved? Promoters. That's why it is called as promoter agreement. The company which is created by special act is called as statutory companies. Next one. On the basis of liability, in which company the liability of each member extend to whole of the company's debts and liabilities, but he will be entitled to claim contribution from other members. Unlimited company. So in case of unlimited company, all members' liability is unlimited. In that situation, all members are required to contribute equally. If any person contributes more, he will recover the extra amount from the person who pays less. Under OPC, the company may have how many maximum number of directors? 15. 1 to 15, 2 to 15, 3 to 15. Answer is 15. Minimum members are required to form a public company. Already completed. 7. Company which is formed and registered under this act for future project or to hold asset or intellectual property and has no significant accounting transaction during last 2 financial years, or has not filed its financials or annual returns with ROC during last 2 financial years, then that company will be classified as dormant company. Then what about registration of register office? It will be done in INC 22. In case if you shift register office from one place to another place, the new address need to be provided to ROC in INC 22 only. Next one. So which section calls memorandum as public document? Section 399. According to section 399, both MOA and AOA are called as public documents. Persons desirous of getting a license under section 8 shall make an application in form INC 12. That license is called as not for profit license. Next one. Which section state that transferring company shall file a copy of the scheme so approved in a manner as may be prescribed with central government register official liquidator? So this is nothing but fast track case. In case of fast track merger or amalgamation, first both the transfer companies need to make application to official liquidator, ROC, affected persons, and later on they need to conduct members meeting, and later on they need to conduct creditors meeting. So they need to get the consent of members as well as consent of creditors. So 3/4 in value, majority in number need to agree. After that, the approved plan need to be submitted to official liquidator, ROC. Instead of affected person, we need to take central government. Now, official liquidator and ROC will give their observations to central government, and central government, if it agrees, it will allow the company to go through fast track merger. If it disagrees, then it will ask NCLT to reconsider the decision. If NCLT reconsiders the decision, then the company need to go through regular merger. Otherwise, it can go through fast track merger. So we discussed this concept in yesterday's class. So which section? Section 233, subsection 2. The words operation and mismanagement are defined in. They are not at all defined under Act. So answer is none of the above. So Dash may also file application to the tribunal if it is satisfied that the affairs of company are being conducted in manner prejudicial to public interest. So this is operation and mismanagement case. Who can file application with NCLT? Shareholders or CG? So answer is CG. What is the correct meaning of legal term mutatis mutandis? As it is, but subject to necessary changes. So last option, not without any changes. There are few changes. So as it is, but subject to necessary changes. Unlisted companies and private companies both are closely held companies. Next one. The rate of dividend declared shall not exceed the average rate of dividend declared by the company in dashed years preceding 3 years. Next one. And within what time the dividend amount need to be deposited? 5 days. So what happens if the dividend amount is not claimed for 7 years? Transferred to IEPF. At the time of transfer to IEPF, the company is required to file a form called as DIV5. Next one. So companies without sending financial statements, audit report, board report, they can send highlights of this report. So how to send highlights of this report? By using AOC number 1. Next one. So appointment of auditor need to be communicated to ROC in ADT 1. 2 is for removal. 3 is for resignation. 4 is for reporting of fraud. The ultimate, which of the following is not a type of dividend? Interim dividend, final dividend, special dividend. All are dividends only, but midterm dividend is not a dividend. The ultimate order of finding up of a banking company in India emerges from respect to High Court. Not from Supreme Court, not from RBI. It is respect to High Court. So what happens when your entity is classified from micro to small? You can still get micro benefits for 3 years. What happens if your entity is reclassified from small to medium? You are entitled to get small entity benefits for 3 years. That means when you increase your level, you can still get the benefits of previous level for a period of 3 years. Answer is 3 years. The auditor appointed in casual vacancy shall hold office until the conclusion of next AGM. If it is director case, balance term of original director. If it is auditor case, till next AGM. Next one. In case of company whose accounts are subject to audit by an Comptroller and Auditor General of India, the casual vacancy need to be filled by C&AG within 30 days. If C&AG fails, within next 30 days, Board of Directors need to fill the casual vacancy. Next one. Resignation case. Which form? ADT 3 within 30 days. Next one. A person can act like small shareholder director not exceeding 2 companies. Next one. So, when to execute pre-cleared trades within 7 trading days. Next one. A hostile takeover is defined as takeover without the consent of promoters. With the consent of promoters will be called as friendly takeover. In case of connected persons, the burden of proving absence of possession of whoopsie lies on connected persons only. They need to prove that we don't have any unpublished price sensitive information. Next one. What is the minimum public float that must be maintained after acquisition? In order to maintain listing company status, minimum public shareholding shall be 25%. Which of the following does not fall under the definition of encumbrance? Dividend declaration. So all are nothing but providing securities. But dividend declaration is not security provision. That's why it is not covered under encumbrance. All sums realized by way of penalties under Competition Act 2002 are credited to Consolidated Fund of India. Cartel is defined as, so producers and consumers, this is correct only. Indian consumers and foreign consumers, no. So workers of same sector suited in different states, no. Even producers and consumers, no. Because in between producer with another producer, consumer with another consumer, it will be a cartel. But between producer and consumer, not a cartel. Because in order to form a cartel, all the person need to have same nature. So service providers among themselves. That means this side is service provider, that side is also service provider. So that's why they're having same nature. So the correct option is last one. Next one. False statements or material omission by a party to combination attacks a penalty of 50 lakhs. Minimum 50 lakhs. A person resident in India may acquire foreign property without prior approval of RBI when actually Indian peoples are not allowed to get the foreign assets. But when they become PROI, they can buy the property, and after becoming PRIA, they can continue with the property. So that means the answer is it was acquired while he was a non-resident. Schedule 2 of current account rules relates to, actually Schedule 2 relates to transactions where CG approval is required. But that option is not given here. We need to take RBI approval. Next one. A person has maintaining the account with an authorized dealer bank for only 6 months. Can they remit under LRS? No. They need to maintain for at least 1 year. Next one. Which non-resident entities are eligible to provide credit enhancement to domestic rupee debt instrument? It is multilateral financial institutions. Next one. As per section 19, banking companies required prior approval of RBI to create subsidiary companies. Under what conditions can RBI apply for winding up of bank? So minimum capital norms not followed, licensing requirements not followed, and the bank is unable to pay the debts. Then in all of the cases, banks may be ordered for winding up by RBI. Next one. Asset reconstruction company must not have incurred losses in any of the dash preceding financial years. 2 financial years. Which of the following is permissible measure under asset reconstruction? Now, if asset reconstruction company acquires borrower company, it can take over the management. Next one. The burden of proving proximate cause of loss lies on insurer. No, policy holder. So actually, I took fire insurance policy. Now my stock got damaged because of some other reason. But insurance company asking for the reason. So I am saying it is because of fire accident only. Who need to prove like this? Policy holder only. Next one. MSME, Emergency Credit Line Guarantee Scheme, was launched primarily to, it is launched during COVID-19 situation. The Prevention of Money Laundering Act 2002 consists of 10 chapters containing 75 sections. In which stage the money launderer typically engages in a series of continuous conversions or movements of funds within the financial or banking system by way of numerous accounts so as to hide their true origin and to distance them from criminal source. It is layering. Introducing is placement. So making series of transactions means layering, and taking back the money means integration. Next one. In PMLA, every schedule offense is predicate offense. First it need to be proved, then only action will be taken. FIU of India will be governed by Economic Intelligence Council, that is EIC. So which section of the Information Technology Act explicitly provides that whenever a corporate body possesses or deals with any sensitive personal data or information and is negligent in maintaining reasonable security to protect such data or information, which thereby causes wrongful loss or wrongful gain to any person, then such body corporate shall be liable to pay damages. So it is dealt in section 43A. Next one. As per Information Technology Act, CCA stands for Controller of Certifying Authority. Repeated. Rule 3 of 2011 rules provides a list of items that are to be treated as. Actually, all these 2011 rules are meant for sensitive personal data. So correct option is sensitive personal data. So fake ATM cards, fake debit cards, fake credit cards, that kind of technique is called as carding. Now, when two persons are having similar domain name, so for example, www.sbi.co.in, that is the SBI retail banking website address. What happens if I add some word there? www.sbim.co.in. So this is the domain which was created by me. This is the website which was created by me in order to attract SBI customers. Now in this case, this kind of attack is called as squatting. Next one. Central KYC register was created in which year? So I think 2015. According to definition of suspicious transaction. So what is meant by suspicious transaction? So it need to be appeared as suspicious when you acted in good faith. So answer is C. Next one. Under IRDA 1999, who has the right to remove difficulties or impediments by making notification in official gazette? Regulator only. Who is the regulator for insurance? IRDA. So when the Ministry of Small Scale Industries and Agro and Rural Industries originally created? Is also check in, I think 1997. PMEGP scheme stands for Pradhan Mantri Employment Generation Program. Which option is correct? 19? Okay. Next one. Dash business intelligence tools put BI and data visualization functionality directly into the business application. So for example, Tally. In Tally, you can enter data and you can view the reports also. So that kind of business intelligence will be called as embedded BI. Next one. When a joint venture is formed without registering as a company, then it is a non-corporate joint venture. Next one. Which of the following is not allowed for Section 8 company? Paying dividends. Next one. As per Rule 38 of Companies Incorporation Rules, SPICE Plus stands for Simplified Proforma for Incorporating a Company Electronically. Plus means advanced version. So which option is correct? If the financial statements of company do not comply with the accounting standards, what must the company disclose? So what is the deviation? And why there is deviation? There is reason for the deviation. And because of deviation, what is the financial impact? Is there any increase or decrease in profit or losses? Is there any increase or decrease in asset or liability value? That financial impact need to be stated here. So which option is correct? B. In which section director responsibility statement is referred? Actually, it is a part of board report and it is referred in 134.3c. Next one. As per section 134 subsection 6, the board report and any annexures thereto shall be signed by chairperson. If chairperson is option is available, chairperson. If that option is not available, any director. And in 2001 September, what happened to Ministry of Small Scale Industries and Agro and Rural Industries? It was split into two separate ministries. So దీంతో మనకి total 306 bits over. So what is the next chapter? Competition Act. In Competition Act, we are going to discuss about three aspects. One is anti-competitive agreements. Anti-competitive agreements. Second one is abuse of dominant position. And last one is combination. So what is the common thing between these three things? First one, in case of anti-competitive agreement, so one person will enter into agreement with another person in order to prevent competition. So avoiding competition is common thing. So how it will be avoided in first case? With the help of an agreement. What about second situation? Now one party will be in dominant position. Say for example, in telecom sector, Reliance Jio is in dominant position. In processors, computer processors, Intel is in dominant position. Now when these entities uses that position in order to stop new persons to enter into the market, then it is called as abuse of dominant position. So here also competition will be prevented. And what about third situation? Combination. Say for example, what happens if Reliance Jio as well as Airtel got combined as single entity? Then competition will be avoided. So in all the three aspects, the purpose is to prevent competition. But in first case, it is done through agreement between parties. In second case, it is because of abuse of dominant position. In third case, it is because of some mergers or amalgamations, which is nothing but called as combinations. Now, in order to deal with anti-competitive agreements, abuse of dominant position, combinations, a separate act got created, and that act is named as Competition Act. So what is the main objective of Competition Act? It is to prevent anti-competitive agreements, to prevent abuse of dominant position, to prevent combinations, and to promote competition. Next one. So first one, we need to discuss about anti-competitive agreements. Actually here agreements are classified into two categories. Horizontal agreements. (13.1) అంటే ఇక్కడ ఎలా వస్తుంది? ఇక్కడ ఓవరాల్ పేజ్ నెంబర్ కావాలి కానీ. So page number 104. Okay. So anti-competitive agreements are classified into two categories. First one, horizontal agreements. Second one, vertical agreements. Then what are the examples for horizontal agreements and vertical agreements? So let's see vertical agreements first. First one, tie-in arrangement. What is meant by tie-in arrangement? So if a bank, if they want to provide loan, they will ask borrowers to take insurance policy also. That means every borrower who want to get a loan from bank, he is compelled to get insurance policy also. On that insurance policy, bank will get some commission. Now managers are looting public. How they are looting public? So by offering loans along with insurance products. Now borrower has no option. He need to take insurance policy if you want to take the loan. So this is called as tie-in arrangement, and this will come under vertical agreement. Next one, exclusive supply agreement, exclusive distribution agreement. So what is the difference between exclusive supply and exclusive distribution agreement? Say for example, there is a manufacturer. He is selling 1000 tons of raw material. Now this manufacturer is allowed to sell all the units to single person. So this is called as exclusive supply agreement. That means this manufacturer cannot sell manufactured raw material to somebody else. He need to sell all his production to single person. So this kind of agreement is called as exclusive supply agreement. Then what about exclusive distribution agreement? Now this person, he's the distributor, and he need to sell the products to wholesaler. Now this person will sell all his products only to single wholesaler, not to multiple wholesalers. So this is called as exclusive distribution agreement. So exclusive supply agreement or exclusive distribution agreement. So in that situation, that party is prevented to deal with other parties. He is allowed to deal with only single person. So that's why there is anti-competitive practice. That's why that kind of agreement is void. Next one, refusal to deal. So what is meant by refusal to deal? Say for example, now there is a person, So he want to buy some products. Now he's buying only one single brand products. He's refusing to deal with other brand products. So this is called as refusal to deal. So he will buy only single brand products. He will not buy other brand products. So this is also called as anti-competitive agreement. And all these agreements will come under vertical agreements. So first one, tie-in arrangement. One product will be tied with another products even though they are not related with each other. Exclusive supply agreement. So supply should be made to single person but not to any other person. Exclusive distribution agreement. Distribution shall be made to single person but not to any other person. Refusal to deal. That means he will deal with only few people, not with other people. So all these things are examples for vertical agreements. Now in these vertical agreements, if there is any appreciable, that is material, adverse effect on competition in India, then these agreements will become void. What happens if there is no such effect in competition in India? Then these agreements are valid only. So when these agreements will become void, when they are having material impact, that too on competition, that too in India. That means if they are having material impact on competition outside India, it doesn't matter. So in India, it matters most. If it is immaterial, it doesn't matter. If it is material, it matters most. That means if they are having any material impact on competition in India, then only those agreements will be classified as void agreements. Next one. Then what about horizontal agreements? So horizontal agreement means so directly or indirectly controlling the prices of buying or selling. Say for example, Reliance Jio and Airtel. So they both discussed with each other in order to introduce recharge plans. They want to increase the recharge plan amount. So this is called as horizontal agreement. If it is having appreciable adverse effect on competition in India, then definitely that agreement will become void. Next one. Now certain suppliers want to limit or control production. What will happen if they limit or control production? Artificially they can raise the demand. And because of that artificial demand, artificial price increase will be there. So that is the reason why competition will get impacted. So if this is having any appreciable adverse effect on competition in India, then even this agreement will be classified as void. Divide the market or production areas geographically. So for example, Airtel is taking Andhra Pradesh and Jio is taking Telangana. So they are distributing the areas. In one area, Airtel is having dominance. In other area, Jio is having dominance. And they are dividing the entire market. And both are having dominant position. So this kind of agreements are also not allowed. So if they are having appreciable adverse impact on competition in India. Next one, bid rigging or collusive bidding. So what is meant by bid rigging? So for example, so you went for auction. Now you along with 10 other peoples, total 11 peoples went to auction. In those 11 people, only one person made bid. Remaining 10 persons, they are not making any bids. They are supporting that one person who made the initial bid. So what happens when remaining persons abstain themselves from bidding at the auction? Now the product will be available at very cheaper cost. So it will create loss to the auctioneer, but it will create benefit to that person who bought the product at that lower price. And that benefit will be shared between all the 11 members. So this kind of agreement will come under horizontal agreement. And this agreement, if it is having appreciable adverse effect on competition in India, then this agreement is also void. Now say, so when agreements are called as anti-competitive agreements, when they are horizontal or when they are vertical. When they are void, when they are having appreciable adverse effect on competition in India, so then only they are void. Then what are the examples for vertical agreements? Tie-in arrangements, exclusive supply, exclusive distribution, refusal to deal. In case of horizontal agreements, controlling prices, controlling production and sharing locations. And next one, bid rigging. Next one, abuse of dominant position. So what is meant by abuse of dominant position? First of all, what is meant by dominant position? Now you are in a position in that industry, and because of competitor, your position will not be affected. You are in such kind of position. Then that position will be called as dominant position. Now, in case of dominant position, so what happens if that entity prevents new companies from entering into that market? If it is creating entry barriers for the new entrants, then it is called as abuse of dominant position. What happens if that entity uses that position to enter into another market? It is also called as abuse of dominant position. So, if it stops new persons from entering into that market, or if it uses that position to enter into another market, in both these cases, that dominant position is said to be abused. So, can we punish that entity now? If it is having appreciable adverse effect on competition in India, then we can punish that entity. Otherwise, we can't punish that entity. Next one, here there is a concept called as predatory pricing. So what is meant by predatory pricing? Selling the products or services at lower than cost of production. It is called as predatory pricing. What will happen if they follow predatory pricing? Say for example, there is an entity which is having more cash. There is another entity which is having less cash. So this entity can sell the products or services at lower than cost of production. They can sustain because of availability of funds. But what about other entities? They will not sustain because of this practice. So immediately they will vanish from the market. So after that, only this entity will remain in the market. So this is also called as abuse of dominant position. And here how the position is abused means by following a concept called as predatory pricing. Next one and third one, combination. So what is meant by combination? Merger or amalgamation. So if merger or amalgamation is causing any appreciable adverse effect on competition in India, then that combination will not be allowed. The combination will not be allowed. Now in this situation, certain combinations are proposed. In these combinations, say for example, A Limited is going to merge with B Limited. Now we need to check certain limits here. If the combination is exceeding these limits, then first of all they need to take the permission of CCI. CCI stands for Competition Commission of India. They need to take the permission of CCI, then only they are allowed to make merger or amalgamation. What happens if the combination value doesn't exceed limits? So because of this combination, there is no impact on competition in India. So that's why this combination is freely allowed. No need to take even CCI approval also. So when CCI approval is required, when two entities are going to combine with each other, then we need to check the limits. If the limit got exceeded, then permission of CCI is required. Without that permission, they can't merge with each other. If they merge with each other without taking permission, that merger will become void. Now what are the limits here? So we need to check at enterprise level. We need to check at group level. So we need to check at enterprise level, at group level. So enterprise level means, say for example, A Limited is going to merge with B Limited. Now we need to take the combined values of A Limited and B Limited. This is called at enterprise level. Next one, A Limited belongs to a group, group 1. So here A Limited is there. Along with A Limited, some other companies are also available. Next one, B Limited belongs to some other group, group 2. Now A Limited and B Limited merge with each other. Now we need to combine the values of both the groups. So this is called at group level. So we need to check at enterprise level. We need to check at group level. Okay, then how to remember the limits here? So first we need to take Indian assets turnover. Second one we need to take, so if it is having business in India as well as outside India, then we need to take worldwide with India, like nothing but multi-level operations with Indian business. So one is outside India, one is in India. One is outside India, other one is in India. Now say at enterprise levels, what limits we need to check? Assets turnover. So assets turnover in case of first one, only Indian entities, we need to take only Indian assets, Indian turnover. If it is having multiple places in India as well as outside India, then we need to check in India separately, outside India separately. Then how to remember the limits? First remember 2000. So 2000, next one 1 billion, next one 1000 crores. So then how to take turnover? Asset limit into 3 times. So asset limit into 3 times means 2000 will become 6000. 1 billion will become 3 billion. 1000 INR crores will become 3000 INR crores. Then what about group level? So in case of group level, multiply with 4. So here it is 2000, here it will become 8000. Here it is 1 billion, here it will become 4 billion. Here it is 6000, here it will become 24,000. Here it is 3 billion, here it will become 12 billion. But in last case, the values will remain same. That is 1000 INR crores, 1000 INR crores, 3000 INR crores, 3000 INR crores. So last values will remain same. Now say how to remember all these thresholds. First we need to remember assets turnover. Assets turnover. Next one, the companies are having only Indian existence. Then we need to take Indian assets, Indian turnover. The company is having worldwide presence, including India presence. Then we need to check in India assets and turnover, outside India assets and turnover. While taking Indian assets and Indian turnover, we need to take in INR only, that too in crores. But while taking outside assets and outside turnover, we need to take in dollars, that too in millions or billions. Okay, first one, only India. Assets value 2000, turnover value 6000. Next one, it is having presence in India as well as outside India. Outside India 1 billion, so 3 billion turnover. Next one, in India asset value 1000 and turnover value 3000. And what to do with group? So we need to multiply with 4. Next one, and very important point. So which assets we are required to take? We are required to take the value of assets according to latest audited financial statements. In simple words, we are required to take book value, not market value, because in financial statements they will reflect only book value. So we need to take the book value of assets according to latest audited financial statements, that too after providing depreciation if any. Next one, then what about assets? Is it includes intangible assets also? Yes, it includes both tangible assets, intangible assets. It includes both mobile assets, immobile assets. Next one. Now, so whenever the combination limit got exceeded, you are required to take the permission of CCI in order to execute the combination. For this purpose, you are required to make an application to CCI. And what is the time limit available to CCI to give approval? 210 days. If CCI gave approval within 210 days, you can proceed with combination. If CCI rejects your application, you can't proceed with combination. If CCI remains silent for entire 210 days, so your combination is deemed to be approved. Next one, composition of CCA. Who will be there in CCA? One chairperson, 2 to 6 full-time members who are appointed by CG. Then what about the term of each person? Whether it is chairperson or members case, it will be 5 years. And what about reappointment? For another 5 years. After 5 years, another 5 years, and it will continue so on till those people attain 65 years of age. Next one. Now CG may appoint Director General. So what is the role of Director General? He will assist CCI in investigation matters and other functions. Next one, CCA may appoint secretary, experts, professionals and officers in order to support the activities and objectives of Competition Act. Now say, what is the composition of CCA? One chairperson, 2 to 6 full-time members who will appoint CG. What about the term of chairperson and members? 5 years. Reappointment possible for another 5 years till they attain 65 years of age. Now CG will appoint Director General in order to support CCI. CCI will appoint secretaries, experts, professionals and officers in order to fulfill the requirements of this act. Next one. Then what is the duty of Director General? So who will appoint Director General? CG. For what purpose CG will appoint Director General? In order to assist CCI under investigation. So now Director General will conduct investigation. He will gather evidences and he will prepare reports and he will provide expert opinion to CCI and he will assist CCI in several matters, and on behalf of CCI they will prosecute the offense, they will interrogate the offenses. Next one, finally they will give competition advocacy. Nothing but they can provide advices relating how to promote competition. So all these things will be done by whom? Director General. For whom? CCI. So for this purpose only central government has created Director General position. Next one. So if any entity is enjoying dominant position, so if it is not abusing that position, there is no problem at all. But if that company, if that entity is abusing the dominant position, what CCI will do? CCI will remove that entity from dominant position. How is it possible to remove that entity from dominant position? By doing any of these 5 things. So first one, to discontinue or prevent agreement. Say for example, so a person is in dominant position. By using the dominant position, he made some anti-competitive agreements. Now what CCI can do? CCI can cancel these agreements. What happens if these agreements are cancelled? Now that dominant person cannot make such agreements and that dominant person cannot abuse its position. Next one, it can even impose penalties also. So how much penalty? So the penalty will be 3 times of the profit or 10% of the turnover, whichever is higher. What happens when any entity is punished with penalty? In future, they may not repeat the same offense. Next one, they can modify the agreements. Say for example, dominant person is entering into agreement which is having appreciable adverse effect on the competition in India. Now this agreement will be modified in such a way to remove that appreciable adverse effect. Next one, it can pass even other orders also, including some additional orders if needed. Next one. So transfer or vesting of property, rights, liabilities, obligations. Say for example, dominant position is there for an entity. So in this entity, there are controlling shareholders as well as minority shareholders. So controlling shareholders are using this company in order to abuse the dominant position. Now how to change the management here? So we need to ask the company that is controlling shareholders to transfer few shares to the minority shareholders. So in that situation, if controlling shareholders shareholding become 49% and minority shareholders shareholding will become 51%, now the management will be shifted from controlling shareholder to minority shareholder. So till now they abused the dominant position. From now onwards, they can't participate in the management. Instead of controlling shareholder, who will run the company? Minority shareholders. Next one. So still, if it is not useful, what CCA can do? CCA can order for allotment of extra shares to outsiders. If transfer is not possible, they will ask the company to create new shares and to allot new shares to the outsiders. So even in that situation also, the shareholding of controlling shareholders will be reduced. Next one, even if this point is also not working, they can directly order for winding up of the entity. If that entity is winded up, then new entrants will enter into the market and they will take the market. Next one, penalties. What happens when any person provides false information to CCA? So at the time of combination, in order to get the approval of CCA, so those entities provides false particulars. Now what will happen? Those people will be fined up to 1 crore. But if any person supports with CCA, that means if any person becomes whistleblower, and if any person provides some extra evidence in order to gather some other people, then those persons' penalty will be either reduced completely or partially. But he need to provide vital information. So that information must not be a false evidence, and that information must be value addition information. Then only the penalty which is imposed on those people will be either reduced completely or partially. Next one, cyber laws. First of all, what is offense under IT Act? So in order to call it as offense under IT Act, the offense may happen at any country, but it must happen based on a computer or system or network that was located in India. That means the place where the offense is happened is not relevant. The place from where that offense was made is relevant. If it is made from computer or system or network which was located in India, then it will become an offense. Next one. Then what are the various offenses under IT Act? First one, tampering with computer source documents. So for example, Tally. In Tally, you changed the source code and you made to take all credit entries as debit entries, all debit entries as credit entries. So is it possible to do like that? Yes, if you alter the source document of the Tally software, then all credit entries can be shown as debit entries, all debit entries can be shown as credit entries, and this kind of activity will be called as offense under IT Act. Next one, hacking with computer systems and data alteration. So actually we have a term called as hacking, trespassing. So hacking, trespassing and cracking. So what is the difference between hacking, trespassing and cracking? So if you enter into other system without their authorization, it may be called as either hacking or trespassing or cracking. Now, if you enter into other system without their authorization and if you delete the entire data, it is called as hacking. So destruction of data. If you modify the data, it is called as cracking. There is no destruction of data. You are just modifying the data. You are just altering the data. Then what about trespassing? You will just enter into other system in order to see the information. That's it. You will not alter it. You will not destroy it. That procedure is called as trespassing. So hacking means unauthorized access to other system in order to damage. Trespassing means unauthorized access to other system, but you will not do anything. Next one, cracking means unauthorized access to other system in order to alter the data. Now hacking will come under offense under IT Act. Next one, publishing obscene information, that is adult content. Next one, unauthorized access to protected system. What is meant by protected system? It is a secured system. Say for example, government software, government systems, income tax department system. Those servers are protected systems. If any person want to access that protected system, it is called as an offense under IT Act. Next one, breach of confidentiality and privacy. Say for example, Airtel is having our personal information like Aadhaar number, mobile number. So personal information of customers are saved at the servers of Airtel. Now what Airtel is required to do? It need to maintain confidentiality. What happens if Airtel sold the data to some other person? There is a breach of confidentiality and it will become an offense under IT Act. And publishing false digital signature certificates. Actually, who will issue digital signature certificate? Certifying authorities. So certifying authorities will issue digital signature certificate. Examples for certifying authorities: eMudra, it is a certifying authority. It will issue DSCs. So Pantasign. Next one, Capricorn. So many DSC issuing companies are there. All these companies are called as certifying authorities. Then who is regulator for all these certifying authorities? It is CCA, stands for Controller of Certifying Authority. Now the point is, in order to get DSC, we are required to give our information like ID proofs, address proofs. We need to provide our mobile number. We need to provide our email ID, and we need to do some video verification also. So all these things must be complied in order to get the digital signature certificate. But what happens when I provide false particulars to get digital signature certificate? That means I got fake DSC. Now what will happen? It will become an offense under IT Act. So these are the examples for offenses under IT Act. Next one, settlement of disputes. Actually, for IT Act, if there is any offense, that offense will be dealt by special court called as adjudicating authority. And in case of digital signatures, there is a special authority called as CCA. Now adjudicating authority and CCA will have same kind of hierarchy, but adjudicating authority will deal about offenses under IT Act. CCA will deal about digital signature certificates. Now the point is, what happens if you are aggrieved because of adjudicating order? Let's say because of CCA's order, you are aggrieved. Now what will happen? You can go for appeal. Then where to go for appeal? CRAT. What is the time limit to go for appeal? 45 days. If you are still aggrieved because of CRAT order, you can go for further appeal to High Court. And what is the time limit? 60 days. So this MCQ is also covered. Next one. What about normal civil courts? So normal civil courts can't try information technology related offenses. It need to be done by adjudicating authority, that is special court only. And what is the full form for CRAT? Cyber Regulations Appellate Tribunal. Next one, data protection. So what is meant by data protection? So many business entities are collecting our personal data. They are storing our personal data. They are analyzing our personal data like Google. So Google is analyzing our personal data in order to show relevant products and services, relevant advertisement. Now, so many entities are collecting personal data, they are storing personal data, and they are disseminating personal data. They are analyzing personal data. Now, this is personal data. So is it possible to use that personal data for any unauthorized purpose? Yes. So that is the reason why. So we need some laws which are related to data protection, and those laws are called as data protection laws. So these data protection laws ensure third party involvement in collection and storage and dissemination of personal information. That means if any person is collecting information, if any person is storing information, if any person is disseminating information, he shall not allow any third person to view that information. So who is ensuring like this? Data protection laws. Actually, our Information Technology Act got created on 2000 year. But initially this act doesn't address data protection law. But later, because of several amendments, now data is being protected. So several amendment means, so Supreme Court made right to privacy as fundamental right. Actually, in Constitution of India, we have so many fundamental rights. Now, in 2017, Supreme Court made right to privacy as fundamental right. Next one. Now, one more thing. If any entity is collecting our data, that entity need to maintain proper security. If there is any information leakage, and because of that information leakage, if any customer is suffering with any loss, that loss need to be compensated by the person who collected such information from the customer. Next one. Not only paying compensation, that person is liable for imprisonment up to 3 years, fine up to 5 lakhs, or both. So for example, so Airtel company is collecting customer data, personal data. Now Airtel company is required to maintain confidentiality. It need to protect data of the customers. What happens if there is any data breach from Airtel side? Then because of this data breach, if any customer suffers with loss, Airtel company is required to pay compensation. But not only this thing, they are required to take punishment also. What is the punishment? Up to 3 years imprisonment, up to 5 lakhs fine, or both. Next one. And for data protection, some rules are also introduced in 2011. And what is the name of that rule? Information Technology, Reasonable Security Practices and Procedures, and Sensitive Personal Data or Information Rules 2011. So what about the applicability of these rules? This is covered in MCQ. What about the applicability of these rules? These rules are applicable to body corporates or persons who are located in India. Then what is meant by sensitive personal data? Say for example, so ATM card number, it is not sensitive personal data. But ATM card PIN, it is a sensitive personal data. That means the information which is visible to others is not sensitive personal data. The information which is not visible to others, which is confidential, will be called as sensitive personal data. Next one. Privacy policy. Any entity, while collecting personal information of the customer, they need to disclose privacy policy. So what is privacy policy? In privacy policy, they need to disclose what kind of information will be collected, and what is the purpose of collecting that information, and how this company is going to protect this personal information. So what will be collected, for what purpose it will be collected, and after collection of data, how it will be protected. All these things need to be shown by the person who is collecting data from customer. Next one. Obligations of corporate body which is collecting data from individuals. First one, they need to take the consent. So before collecting any personal information from the customer, so those companies are required to take consent of that customer. And that collected information must be used only for lawful and necessary purpose. It shall not be used for unlawful purpose and unnecessary purposes. Next one, it shall be used only for intended purpose. Sir, if for intended purpose, if that information is no longer useful, then what to do? Delete that information. Next one, and you need to inform the customers. What to inform? What type of data is being collected, for what purpose, and who will receive that information. Everything need to be fairly disclosed to the customer. Next one. Now, if customer want to update his personal details, the company is required to provide an option. Yes, say for example, my Aadhaar address got changed. Now I want to update Aadhaar address. So now the body corporate, that is the company, need to allow me to change my address. Next one, and the company is required to maintain proper security, and it must maintain a proper grievance officer. What is the purpose of having grievance officer? If any individual, any customer is having data related issues, he can solve those issues with grievance officer. Next one. So, is it possible to disclose that information to third party? Yes, possible, but prior consent is required. So ask the customer, so whether to provide this data to third party or not. If customer allows you to provide this data to third party, then you can provide. Next one, business intelligence. Second part of this chapter is business intelligence. So what is meant by business intelligence? So here raw data will be collected. So raw data will be converted into useful data, and this useful data will be shown as pictures or diagrams or charts. Now these pictures or diagrams or charts are used for the purpose of making decisions, business decisions, and these business decisions are effective because you are taking accurate data. Now by using these business decisions, what you can do? You can increase your revenue, you can decrease your cost, you can increase the efficiency of your business operations. So you can do anything which benefits the company. But for this purpose, what is required? Proper data is required, and that data need to be converted into proper useful data. Now the process of converting the raw data into useful data is known as business intelligence. So for example, vouchers. So payment vouchers, purchase vouchers, sale vouchers, all these vouchers, this is nothing but raw data. Now what Tally will do? If you enter all this raw data into Tally, it will convert into useful data. Useful data means trial balance, profit and loss account, balance sheet. Now based on this trial balance, balance sheet, profit and loss account, the company can take some informed decisions. And because of those informed decisions, what will be achieved? So cost will be reduced, profit will be increased, turnover will be increased, and the operation effectiveness will be increased. And this entire process will be called as business intelligence. Next one. So we need to discuss more about types of business intelligence tools and applications. First one, ad hoc analysis, and second one, OLAP. So what is the difference between ad hoc analysis and OLAP? So first one, in case of ad hoc analysis, you will run simple queries. Simple queries means raw data is given to system. The system convert that raw data into useful data. Now you will ask simple queries. So what is the total sales in the entire financial year? Simple query. What about the purchase in entire financial year? Simple query. Then what about complex query? So what is the total sale in the entire financial year? Among this total sale, so I need location wise classification. I need so age wise classification. I need so gender wise classification. So this kind of queries are called as complex queries. So if you run complex queries, that business intelligence will be called as OLAP, that is online analytical processing. So ad hoc analysis will run simple queries, whereas online analytical processing will carry complex queries. Next one, mobile BA. What is meant by mobile BA? So the information, the raw data which is converted into useful data will be shown in our mobile applications. So based on mobile applications, we can take informed decisions. So no need to go to system, no need to see the result set system. You can view the result set mobile phone also by using mobile application. So this is called as mobile BA. Next one, real-time BA. What is meant by real-time BA? So it will provide real-time data. So for example, so I'm going from Vijayawada to Guntur. So I have two options. One is, it is not about mode of transportation. It is about route of transportation. So one is through Mangalagiri. One is through Tenala. So one is through National Highway. So one is through National Highway, other one is through Mangalagiri. Now the point is, now on national highway there is an accident, and because of that accident the road got blocked. So huge traffic is there on national highway. Now what Google Maps will do? It will update the data on real-time basis. So if it shows the data, what you will do? So you will change your route. Instead of going through national highway, you will go through Mangalagiri. So now real-time base. So real-time based data is available with you, and based on that data, you took informed decision. So this is nothing but called as real-time BI. So Google Maps is nothing but an example for real-time BI. Next one, operational intelligence. What is meant by operational intelligence? Say for example, my company is a manufacturing company. I will purchase raw materials. I will send that raw material into processing so that I will get finished goods. Now in this case, so based on demand level, I need to produce finished goods. So based on finished goods level, I need to purchase raw material. Then how much raw material is required as of now? How I will get information? So it will be provided by software. So software will tell us how much material need to buy, at what time we need to buy. So all these things will be taken care by software only. So this is called as operational intelligence. Next one, open source BI. Example, Tally. In Tally there are two editions. One is education version, other one is business version. So this is free version, this is paid version. So this kind of BI is called as open source BI, which will contain both free editions as well as paid editions. Next one, embedded BI. What is meant by embedded BI? Example, Tally. We discussed in MCQs also. So in case of embedded BI, so Tally will convert the raw data into useful data, and it will show the data in pictures, diagrams, graphs, so that we can take informed decisions based on such diagrams. Now in this case, the Tally will be called as embedded BI. Next one, collaborative BI. Now Tally can be used by multiple users simultaneously. So not single person. If Tally is installed on cloud, then that Tally can be used by multiple persons simultaneously. Entries can be made by multiple persons simultaneously. So this is called as collaborative BI. That means a group can work together in single BI. Next one and last one, location intelligence. What is meant by location intelligence? Say for example, when you are passing through Vijayawada, so they will show what are the favorite places available in Vijayawada. In case Guntur, so they will say the places which are so advisable to go. So all these things will be displayed in mobile application, that is Google Maps. So that means Google Maps is using location intelligence. So these are all the examples for various BI tools. And last one, cyber crimes. So what kind of cyber crimes are available? Cyber crimes against individuals, cyber crime against property, cyber crime against government. Next one, what is meant by cyber crime against a single person? Cyber stalking. What is meant by cyber stalking? So sending threatening messages through mails or social media platforms. So obscenity, sending obscene information. Defamation. So what is meant by defamation? Say for example, I will hack the email of some other person, and I will use that email and I will send threatening message to somebody else. Now whose image will get damaged? Other persons. This is called as defamation. Next one, hacking, cracking. Both are completed. Hacking, cracking, in both cases you will get unauthorized access to other computer system. But in case of hacking, you will destroy the data. In case of cracking, you will tamper the data. And what is meant by spoofing? Say for example, you will get a message from bank, but actually it is not bank message. It will appear like bank message. It will ask you to enter internet banking login credentials. If you mistakenly enter those credentials, what will happen? They will loot your money. So this is called as spoofing. And next one, carding. This is covered in MCQs. So fake ATM card will be created by those people. By using those fake ATM cards, they will withdraw the money. Next one, fraud. What is meant by fraud? Stealing others' passwords. So if you steal other password, you can directly enter into other system. And finally, threat. So threat is already covered in cyber stalking. Next one, cyber crimes against property. So against property means using others' intellectual property rights. So for example, Aditya Music, they released a song. Now you want to use that song in order to do Instagram reel. Now what will happen? So copyright issue will be happen. That means this is nothing but damaging the property of Aditya Music. So it is nothing but intellectual property right of Aditya Music, on which Aditya Music is having copyrights. Now without taking Aditya Music permission, you are using those songs. So that's why it will damage the property of Aditya Music. It will come under cybercrime against property. Next one, squatting. What is meant by squatting? So for example, so Reliance Industries company website is www.ril.com. Now I created www.relianceindustrieslimited.com. So instead of simple word, I give abbreviation. Now, if any person want to visit Reliance website, by mistakenly, he will visit my website and he will lose all his data. So this is called as squatting. Next one, vandalism. What is meant by vandalism? It is just like similar to hacking. So hacking will be applied on individual, whereas vandalism will be applied on person's property. So here again hacking is given. Next one, virus. What is meant by virus? So for example, in order to enter into others' system, you need to have their password. If that password is not available, what is the other way? You can send a virus file to the other person, so that other person will install that file, and along with installation, he will get virus also. And because of that virus, you can get access to the other computer. So this is also come under cybercrime under against property. Next one, trespass. So entering into other system without their authorization, but here the intention is not to damage the data, not to modify the data. So here the intention is just to see the data. So that's why it is called as trespassing. The trespassing will come under cybercrime against property. Next one, cybercrimes against government. So one is terrorism, cyber terrorism. So they will attack income tax portal or GST portal. So what happens if they attack income tax portal or GST portal? That one due date. So now no person can pay money to the government. So government will get lack of funds, and because of that entire government will be affected, and because of that entire country will also be affected. So this kind of attacks is called as terrorism. Next one, warfare. So what is meant by warfare? So in warfare, they will not attack us. They will monitor us, how we are doing, what we are doing. So all these things will be monitored by some other country people. So this is called as warfare. Next one, piracy. What is meant by piracy? So it is nothing but using pirated software in order to destroy government data. So for example, we have a software called as Winman CA. This software is used in order to file income tax returns with income tax department. What happens when any person pirated this Winman CA software? Then this will damage income tax portal also. So this cyber attack will come under cybercrime against government. Next one, getting unauthorized information. So unauthorized information means, say for example, statistics like how much population is available. So out of this population, how many people are male people, how many people are female people, how many belongs to Hinduism, how many belongs to some other religion. So all these statistics are sensitive data. So this sensitive data need to be maintained confidentially by Indian government. What happens if it is leaked to some other person, that especially Pakistan? Then they will take this information in order to take some advantage over India. So that's why this is also called as cybercrime against government. Next one. So different types of cybercrimes under Information Technology Act, under Indian Penal Code and some special laws, and special acts like Online Sale of Drugs and Narcotic Drugs and Psychotherapeutic Substance Act or Online Sale of Arms Act. Now we need to discuss about each offense. Tampering with computer source document, IT Act. Hacking with computer system data alteration, IT Act. Publishing obscene information, IT Act. Unauthorized access to protected system, IT Act. Breach of confidentiality and privacy, IT Act. Publishing fake DSCs, IT Act. This is already covered in previous question. Next one. Then what are the cybercrimes that are covered under IPC and special laws? Sending threatening messages by email. This is covered in MCQ. So if you sent any threatening message through email, it is not covered under IT Act. It is covered under IPC. Sending defamatory messages by email, forgery of electronic records, bogus websites, cyber frauds, email spoofing, web jacking, email abuse, all will be covered under IPC but not under Information Technology Act. There are some more offences which got covered under Narcotics, Drugs Related Acts and Online Sale of Arms Act. And last one, PMLA. So first one, in case of PMLA, who is the offender? Money launderer. So money launderer will do money laundering. So what is meant by money laundering? He will show illegal funds. He will show illegal funds as legal funds. So the process of converting illegal funds into legal funds is called as money laundering, and the person who is doing like that will be called as money launderer. Next one, how he will convert illegal funds into legal funds? First one, he will enter this money into financial system, which is nothing but called as placement. Now he will make so many number of repetitive transactions in order to hide the origin of that money, which is nothing but called as layering. After that, he will take that money, nothing but called as integration. So first he will introduce illegal funds into financial system, placement. He will make so many number of transactions in order to hide the origin of the funds, which is nothing but called as layering. After doing layering, he will take back his money, which is nothing but called as integration. So by doing placement, layering, integration, a person can convert illegal funds into legal funds. And the person who commits this offense is called as money launderer. And the person who supports this will also be punishable under PMLA. Now, how government will know about these transactions? Because so many people are available in India. So many people will make so many number of transactions. It is highly not possible to the government to trace each and every transaction. So that's why government came up with an idea. What that idea means? They created reporting entities. So who are reporting entities? Banks, financial institutions, even professionals also like CS, CMA, CS. If any client approaches professional, if they provide any data, if that data is suspicious in nature, that professional need to inform this matter to FIU of India. Stands for Financial Intelligence Unit of India. So banks, financial institutions, professionals. So whenever they see any suspicious transaction, they are required to report that matter to FIU of India. Now FIU of India will check so whether there is any possibility of money laundering or not. If they feel that there is a chance of having money laundering, they will handle this matter to ED, Enforcement Directorate. Nothing but he is called as investigating authority. Now this person will conduct investigation. If he feel that money laundering is taken place, then he will attach the property. But this attachment is not permanent attachment. This is temporary attachment. Now this temporary attachment need to be confirmed by adjudicating authority, nothing but special courts. So normal courts can't deal with PMLA matters. So for this purpose, special courts are available. In those special courts, this provisional attachment, this temporary attachment need to be confirmed. Now, if you are not happy with adjudicating authority decision, you can go to appellate authority. So this is the process. If appellate authority confirms that you committed money laundering offense, now the property which is attached by ED, that property will now be confiscated. So what I mean by confiscated? So in case of seizure, it is a temporary detention of property. Ownership still lies with the main person only. But in case of confiscation, the ownership of the property will get transferred to government. So now what is the process? If any person did any money laundering activity, now banks, financial institutions and professionals, these people are called as reporting entities. They will identify such transactions and they will report those transactions to FIU of India. FIU of India will make dissemination of information. They will analyze the information and they will check whether there is any chance to commit money laundering or not. If there is any chance, it will forward the matter to Enforcement Directorate, which is nothing but investigating authority. He will investigate the matter. If he found that is there any money laundering, then he will provisionally attach the property. Now, adjudicating authority will hear the case and he will give final attachment of property. Now, if you want to go for appeal, you can go to appellate authority. If appellate authority also agrees with adjudicating authority, then your property will be confiscated. Otherwise, your property will be released. So this is about PMLA. So by this we completed entire law, except one chapter. The chapter is meant for self-study. That is MSME, not choice. So you need to prepare MSME as well as corporate governance on your own. They're not choice chapters. Choice chapters are only 3 chapters. FEMA, banking regulation, insurance. That's it. Don't take corporate governance and MSME as choice. And in case of MSME, limits got updated. So you will be provided with amended material copies. So you are required to update the limits. MSME limits are updated. So among amendments, that is the only important amendment. Remaining amendments are not so important. So just look at the new updated rates. That is for turnover, limit got increased. So next for investment in plant and machinery, the limits got updated. The limits got increased. So you are required to look at those limits which are applicable to classification of micro, small, medium enterprises. Any doubts on you? So in exam you will get 4 practical questions. Yes, out of 14 questions you will get 4 questions and you are allowed to take 4 questions as choice also. But one question will come from Board of Directors chapter. You can easily answer that question. Remaining question may come from any position, any place. So if it is possible to answer it, answer. Otherwise leave that question as choice. And you are not required to write it for 100 marks. If you write it for 80 marks, if you got 70 marks, then also it is a good number of marks only. You will get exemption. You will get even aggregate also.